the doctrine of proportionality, and all that can also be examined threadbare. And to the second part of your question, perhaps it's too premature at this stage. I think the first thing is to see in what shape the bill finally comes out as an act. So I think at the moment, the focus should be on the consultation, the debate, the discussion which will come once the bill is presented in Parliament.
Mr. Jain, morning, sir. Obviously, there's a lot of investment and money also at stake, and some of the investors are, big-ticket investors, private equity firms, foreign firms as well, which have all invested in this sector. Would you expect anything? I mean, I don't know if they can do anything in an anticipatory way at all, because this is a new law that's being formulated in India. So do they have any other legal remedy at this juncture as the bill moves through Parliament to present their point of view or their concerns?
I think there is no legal remedy because it's still a bill. And as you know, bill has to go through both houses of Parliament. So I think the first port of call is obviously to try and put out data points which would suggest the impact on some of the parameters and criteria that you outlined. And two, to ask for greater consultation, examination and scrutiny through standing committees of Parliament, etc., where these things are debated at greater length, including, sustainability of some of the provisions in the light of judicial principles and constitutional principles. And three, as you said, is there any overlap with the states? And four, like I always say, the law must have a clear goal, as this seems to have. Question is this the only path of achieving it, or is there any other less intrusive way of achieving it? So I think at this moment, the spotlight should be on building discussion and consultation around it. And you remember it happened both with the Telecom Bill as well with the Data Protection Act and the rules. There was a lot of widespread consultation and discussion. So I think that's really where the focus should be at the moment.
Right. No, Mr. Jain, you think this is going to undergo, I mean, it's going to be tabled in Parliament, right? And then this will, from the time that it is tabled, you think this will undergo changes?
No, the whole purpose of when you introduce a bill is to have a debate and discussion on its journey towards becoming an act. And you've seen whether it's the Finance Act or so many other things, there are always some tweaks or changes which come in the course of parliamentary debate, consultation, or if it's referred to a standing committee. These are all the forums, both in Parliament and the committees of Parliament, where serious discussions take place on new laws.
My only ask that because, I mean, we've had actually very little discussion on you're right. I mean, sometimes on the finance bill, etc. But I mean, many debate, discussion, etc. has not really been something we've seen, right? Many of these bills, etc., have been passed through and have been approved with very little discussion and debate. So we'll see what happens here, and I think it'll be important to see, as you said, later on if there are going to be any challenges. Mr. Jain, this also comes at a time when the Supreme Court was about to clarify its stance, right? I mean, so this kind of preempts that. Any thoughts there?
That was on a GST-related issue. This is on regulating the entire sector. Obviously, both relate to the industry, but in terms of subject matter, they're quite different.
Absolutely. On that, Mr. Jain, and before I ask you the question, because there was serious money at stake there as well. I mean, claims in excess of 20,000 crores made by the centre. I just want to read out the preamble of the bill, and I mean, it's being premised on in national security. There is also talk about public morality and harm, and the preamble says proliferation of online money gaming and offering monetary returns against user deposits has led to serious social, financial, psychological and public health harm, particularly among young individuals. So that's how the bill reads. On that issue of the Supreme Court matter, sir, which pertains to the taxman's demands on GST, or there was a whole thing on GST. Now, would that litigation continue? What happens? Because this will perhaps be prospective in nature. It should not be retrospective in nature. So, do those demands stand on GST?
Yes, obviously that is the subject matter of a decision pending in the Supreme Court, and the Supreme Court will decide on the issues which have been raised before it. This is a bill on yet to become a law, and as you said, it will take shape from the day it is gazetted and notified. So at at the moment, they're two different spheres. Of course, they relate to the same online gaming industry.
All right, Mr. Jain, we'll leave it there, and we'll love to have you back once we have details of the bill when it is tabled at the Parliament today. We'll watch out for that and, of course, report and get details when that happens. Dharmesh Kant is with us. Dharmesh, you've been listening into the entire discussion. You know, just before I come to you, Nazara has clarified, I guess, to exchanges, basically saying that their exposure to real money gaming in the first quarter is basically zero, nothing, no contribution. They have this investment in Poker Bazi, which is about 800 crores, which I think is the exposure that they have. But they don't own majority. They don't own over 50% in that business. So any thoughts here, Dharmesh, in terms of listed companies? Any implications you see?
Yeah, good morning, Prashant. First thing, I'm very, very happy of the day to you. Happy birthday.
Thank you.
This is definitely a big negative. I think, Prashant, if you look at the way the things are unfolding, the intention of the government is very clear. Be it online gaming or derivative markets in our parlance. So everywhere they are very clear that young people are losing money because of speculative kind of an activities, and they want to curb it whichever way it is happening. So here, this if it pulls through, as you rightly put out at the start of the show, that it's maybe a death knell, and that is what it looks like. So gaming will take a backseat, and this is not only that. Even if the GST 2.0, the talk has been around 40% kind of a tax as a sin tax on gaming as well, online gaming, which may not be involving money transactions. So that's another area of concern which is there, and should be pointed out a way back about the GST concern. So if you put all things into place, it's not a positive thing. Najara, I mean, the promoter has been clarifying about it, and I think he's scheduled to be there on your show. But they do have a significant stake in Poker Baji, which was a growing business, and advertisement and through celebrities and all, they have been doing fairly well. And it was a progressing business out there. So that will take at least around 25 to 30% from the valuation of Najara Technologies if this is to be stopped completely. Market is already forward looking. I think this entire space has come into a bit of our trouble. Now what you can earn is only through a subscription model, through gaming, various games which you are offering on your platform. And that is not very lucrative if you are just for a time pass kind of an activity, you're doing that. So I think definitely the stocks will be under pressure today.
All right. Hi, Dharmesh. Good morning. Good to see you. And, the stock market enthusiasts will say we are not the only ones that are coming under regulations, with regard to these expiry days and various other regulations. Now, the other one as well, they're getting hit harder. That said, the other stock that's going to be in focus is going to be HAL, because the central government has cleared procurement of additional 97 LCA Tejas aircrafts. And the cost could be around, 62,000 crores. Most of the street were anticipating this. It's now come about. The stock actually has come off the recent peak. What's your view on the name?
Yeah, good morning, Nigel. See, we have been consistently maintaining for last 2-3 years as a regular investment buy on all the defense companies, and top pick has been HAL out there. So this is a big positive for HAL. It was about to come. It has come through. And the only problem was the supply of engines by GE F404. So which has now been into place, and likely in a span of 1.5 to 2 years, they would be delivering around 12 aircrafts to the government of India. Just sitting on a very big order book in excess of 1,89,000 odd crores. And that at the current revenue run rate, it's around more than 6 times bill to book ratio. And look at the journey of HAL. I mean, 2015, they used to report operating margin of 14-15%. From there, they have gone to 31-32% as of now. As OEM takes center stage rather than servicing and operations, maintenance, or overall kind of a system. So it's a structural growth story playing out in HAL and other defense companies as well. One has to be a clear investor in that. Our FY27 based valuation multiple is we have a valuation target of around 6,000 rupees on HAL. So any declines out there for whatever reason it happens is a good buying opportunity into Hindustan Aeronautics.
Okay, so that's a thumbs up on HAL. And Dharmesh, just quickly, the telecom companies, they are all raising tariffs in different ways, doing away with their smaller value packs. Call on Bharti Airtel, and whether you'd play this through Reliance and Jio, or whether you'd go for Bharti?
Yeah, good morning, Survi. I mean, look at the way this entire tariff saga has panned out. When the Reliance Jio came into the market, it went as low as around 120, 130 rupees ARPUs. And from there, it has been a steady state of climb up, basically led by the data kind of a flow which has been happening. And this is what would be the prime driver for the value creation for the telecom companies. I think this is a step in the right direction through the Geo platform. And we are playing it majorly through Reliance Industries rather than Bharti Airtel, because Bharti Airtel, to my mind, is now priced to perfection on the valuation metrics, and there's little upside there. It will be a structural 10-15% kind of a growth story going forward. But Reliance has multiple vectors where value unfolding can happen. One is the retail business, the Geo platform, and the renewable energy, the new energy segment will also play out. So I think there's a lot of value left in Reliance Industries. Our initial calculation on SOTP based valuation of Reliance as of now, based on a 2-year looking forward, is around 1600-1700.
Okay. Dharmesh, we have to take a quick commercial break here. We're going to come back with technical analysts. Sudarshan and Srikanth are going to be helping us with that today. Specific trades, actionable ideas. So stay tuned. Coming back.
Welcome back. We're about 10 minutes away from getting the first pre-open rates, and Asian markets are fairly mixed. A lot of the big markets like Japan are down quite a bit. Implied open is telling us it will probably start on the lower side. So let's see how it goes. Well, we've discussed a lot of the stocks in the news, the brokerage reports. Let's also look at some interesting movers in terms of the price, volume and delivery action. And Hormaz has picked out some interesting names for us this morning. Hormaz, take it away.
Morning, Surabhi. And there were some lot of interesting movers in yesterday's trading session, seeing double-digit moves, be it the likes of HLE Glasscoat or stocks like IFGL Refractories, GE Power, Jamna Auto, Delta Corp, all of them seeing gains of anywhere between 10 to 20% in yesterday's trading session. And these were the biggest single-day gains that they saw in many years, almost all of these names. And the significant part of this was that that all of these gains came on very significant volumes. Take a look at HLE Glasscoat as well. 80 lakh shares traded, a 20-day average of just 6 lakh. And IFGL also a 20% upper circuit on a 20.5 lakh shares. There's a 20-day average of just a lakh. GE Power also 57 lakh shares, a 9 lakh, a 20-day average of 9 lakh. And Delta Corp as well, almost 2 crore shares traded, and Jamna Auto almost 9 crore shares were traded yesterday compared to a 20-day average of just 50 lakh shares. So significant moves on very high volumes seen in these names yesterday. But the other striking feature is that despite these high volumes, the delivery aspect of it was very low. Now, in comparison to the total trading volumes of yesterday's session, most of these stocks have only had delivery volumes between 10 and 20%. The highest anywhere between being for Delta Corp, which is around 23%, and for IFGL, which is around 22%. The rest of them have between low teens to the high teens. So delivery volumes not significant, but all of these stocks have moved in yesterday's session on very, very high volumes.
Very high volumes, but low delivery, right, Hormuz? That's the basic sort of headline point which Hormuz is making. It's important, right? Because when you look at these stocks, etc., and you get very excited because huge volumes and very large price gains, like many of these stocks are up on your screen. The idea is not to get carried away. Low delivery volumes is an important data point. Dharmesh, out of all the names that you heard Hormuz mention, any coverage on anything? Thoughts broadly on the data he put out?
Yeah, Prashant, I mean, the only scare is the volume was low, but given the fact that Jamna Auto, I think we like it. And basically because of the two-pronged foray, one is the auto ancillary space and the other is the electric buses where the orders has been fairly good. Though valuation-wise, it looks a bit, on a other side of the curve, highly valued as of now. But to our mind, if this GST 2.1 clarification comes through and if, rates come down, so that would be an added advantage for both the verticals. So that is one company which we have been fundamentally liking for a long time, and it's again a long horizon kind of a buy of 2 or 3 years. So Jamna Auto there, I think looks pretty good. But only caution I would like to point is many people are jumping on Delta Corp as a relatively a better buy. So I think it's not to jump the guns right now. One should wait and watch how the things unfold. And their GST thing is still pending on their head. So unless that is cleared, the company is into trouble. So don't get excited by the volume on single day or 2-day kind of a price moves out there.
Okay, all right. Thanks a lot, Dharmesh, for joining in. There's going to be a party in the studio today, as you know, Prashant's birthday. So if you can come join in, there'll be a nice slice of hot pizza, I believe, and maybe, I don't know, as the day progresses, we'll enjoy even more.
Sure.
Thanks a lot for joining in. Well, we'll slip into a short...
I'm glad you stopped it. Usually it's sometimes at 8:30 in the morning, it's some of the harder stuff.
I'll tell you what, we're going to slip into a short break. I'm going to get the remainder of the menu for the entire day. But you take that break, come back. We'll have our technical experts as well. They'll be joining. And also we'll have Kapil Singh of Nomura India, who will be joining to discuss the auto sector post the recent reforms. Stay with us. Well, in 90 seconds, we'll be getting the pre-opened rates. But till that, let's get in our technical experts. Sudarshan Sukhani and Shrikant Chauhan join in for a technical check. Good morning, gentlemen. Thanks a lot for joining in. Well, Sudarshan, you go first. The last couple of trading sessions actually haven't been too bad. In fact, yesterday, the intraday dips did get bought into. But today, the GIFT Nifty is suggesting 70-80 point pullback to kickstart trade. Would you buy into that dip? Or do you think the market wants to go ahead and seek lower levels?
Good morning. No, the market wants to consolidate. We have seen a very big gap up and then some more gains. The chances are that we will now enter a process of consolidation. That's why yesterday I said there's no need to trade. Today my suggestion is the same. It's very difficult to trade the indices. We are likely to see choppy market movement, which kills short-term traders. Now, at some point, this consolidation will give us some contours, some boundaries, support and resistance. And at some point, hopefully, it will break also. But that's probably next week. So for today, the view is very simple. Do not trade the indices. Focus on stocks.
Okay, got that. And we'll get your stocks in just a bit. Shrikant, coming across to you. What about your view on the index first?
Good morning, Nigel. As far as Nifty is concerned, I think it should remain in the range. But at the same time, we believe that the market may try to fill the bullish gap which it has left 2 days back. We may see the levels of 24,750 or 700 on the downside where the market is having a good amount of support, and there we should look for taking some contra bets or going long. But at these levels, we need to be careful, and till the market is not crossing 25,050, we are expecting market to remain in a range. So buy on dips, but at important support levels like 24,750 or 700. For Bank Nifty, there also it has formed range bound sort of activity, and 55,350, 55,100. There the Bank Nifty is having support, and there certainly we should look for taking some contra bets of going long, because Bank Nifty is also going to spend time between 56,000 and 55,000.
Okay. Gentlemen, morning. Thanks very much for joining us. Sudarshan, trades, specific stocks is what you said, so let's hear it.
Yeah, well, first, Prashant, happy birthday.
Thank you. Thanks, Sudarshan.
Motherson is a buy with a stop under 98. Laurus Labs is a buying opportunity with a stop under 868. One of the new entrants in the FNO segment, Titagarh, is a buy with a stop under 812. And Colgate is a buying opportunity with a stop under 2230. So there are scattered mid gaps which we can consider buying.
Okay. All right. Motherson was up 6% yesterday, and that's one of the names. Colgate, Titagarh, Motherson, etc. on Sudarshan's list today. Well, I think we've got a bit of a move on the rupee coming through as well, right? I mean, just the first rates which are coming through, 87.15, 86.95 is the 20-odd paisa move. On the other side, on the other direction this morning, I mean, the move yesterday was a stronger rupee. Today it's stronger dollar. Shrikant, what about your trades, specific stocks?
Prashant, good morning and many best wishes, many happy returns of the day.
Thank you.
Let's say there are like number of large cap companies which have turned really strong on yesterday's trading session. We saw buying interest in Reliance Industries and number of private banks along with Adani Ports. So those stocks which have very good weightage in the market turned very well from their lows, and we are expecting further more activity. But in that, Reliance looks really strong candidate to buy for. It is around 1420, corrected to the levels of 1375, 1350 in a 1 month time. Broadly, I am of the view that the Reliance is heading higher towards the levels of 1475, 1480. So it looks quite attractive bid at current levels with a stop loss close to 1390. The other stock on which we are bullish is RBL Bank, and it is forming rectangle bullish consolidation. It is available at its lower boundary of the consolidation zone. And in case if there is any further more activity, then the stock may even cross its upper boundary, which is around 270. So there also we are bullish. We are expecting stock to move towards 280. We can keep a stop loss around 255 for the same.
Okay. Thanks very much, Shrikant, for that. And Sudarshan, thank you for joining us. More in a bit in terms of individual short-term trading ideas. But one of the names, I'm not sure it's going to show up technically in terms of a buying idea, I mean, technicals at the end of the day is momentum and volume, price action and volume. And this, of course, has been going one way, which is south. But yesterday was different. Ola, the stock, witnessed highest trading volumes in a month yesterday. Sudarshan is here with, of course, the price action, but also what are the 2 or 3 key points to note? Sudarshan, over to you.
So we have been seeing an interesting price action Ola Electric not only yesterday, over the last few days. Yesterday the stock was up 9%, and from 52-week low that stock had seen last month, it's up almost 13%. But if you take a look at 2025 returns, it's still down almost 50%. Now look at the volume and delivery that we have seen Ola yesterday. So volumes that it saw 58 crore shares, that was highest in the month. But if you compare against 20-day average, basically of this month, it's almost 5 times. So yesterday's volume was 58 crores and 20-day average just 11 crore shares. Similar pattern was seen in deliverable quantity. There it was 14.35 crore. That was highest in 2 months. But if you compare deliverable quantity against volumes, it was just 24% of total volume that we have seen as that was marked for delivery. Now, interesting pattern you will see in shareholding data. Now, in August 2024, the stock was listed. So I've taken December 2024 data. In December 2024, FI's holding was 38.73%. And from there, it has fallen almost 400 basis points. Now, as of June 2025, holding of FIs remains around 34.7%. So FIs consist of FPIs and foreign companies. Now, domestic, it has increased. So it's a completely reversal move, that a contrary move against, if you compare against FIs. So in December 2024, domestic holding was 19.2%. Now in June 2025, it has increased by almost 400 basis points, and now it stands at 23.4%. What did companies say after Q1 earnings? Q1 earnings had seen an improvement on a sequential basis, but it was weak YOY. So gross margin in Q1 was at 26%, and companies targeting in the range of 35 to 40%. Similar thing is companies seeing for revenue. It's seeing in the range of -7% to +4%, and expecting auto to turn EBITDA positive in Q2. So we'll have to see how does it move over the next few sessions.
So do you mention valuations here as well? Do you have the numbers?
No, I'm yet to check.
Okay, all right. We'll maybe we can, Nigel, check with the auto analyst who's now, I think, joining us to take that conversation. Of course, not just about Ola, but the auto space in general.
Well, that's right. Let's get straight to the analyst that we have who's joining in. Kapil Singh, auto equity research analyst at Nomura India, who joins in. Hi, Kapil. Good morning. It's a rainy morning here in Mumbai. Hope you're safe. Well, let's address Ola first. Any view on the stock? I know I don't think you'll have official coverage on it, but suddenly the street has been getting excited. You need to keep in mind, though, this was a stock that hit 140, and at around 40, it's seeing some kind of interest, delivery-based buying as well. Any view on the name?
Yeah, Nigel, thank you. No, we don't have coverage on Ola, so would not be able to comment on that specifically. But generally, if you want, we can discuss, the news flow that is coming on GST and the implications of that for electric vehicles as well.
Right. So let's get to that then. Let's focus on electric vehicles. The GST rationalization could come about. So what is your view on that? Particularly, let's get the EV part out of the way. And if you want to play the EV story, then which is your topic?
Sure. So, look, I think the reason people were buying EVs was also because the price gap was closing between EVs and ICE. And if there is a tax reduction that happens only for ICE vehicles, it will increase that gap between electric vehicles and ICE. So that will have a negative impact on demand. And we are still reading news flow, so I do not know if there will be any additional incentives that will be given to electric vehicles. But in my opinion, those will be required to ensure that the CAFE targets are met by the OEMs. Otherwise, it will be difficult to meet those targets.
Okay, that's on the EV side. Kapil, hi, morning. The other big story, obviously, this expected GST bonanza, if it indeed comes through. So what is your model saying? I mean, the likely beneficiaries, I think the overall assessment is that passenger vehicle makers will benefit more. But in terms of individual stocks, where could it really show up?
Yeah, I agree. Yes, you are right. Our assessment is also that passenger vehicles should benefit more. There are a couple of reasons. Firstly, the penetration is much lower and it has been impacted because of the cost increases that have happened over the last, I would say, 5 to 7 years with regulation and other commodity costs. If you see, the CAGR for the sector has been in mid-single digits. This could improve substantially, and ownership, which is somewhere slightly more than 30 cars per thousand people, should start improving more rapidly. So this is not just a short-term measure. I think medium-term growth could also improve with affordability improving. And there will be a wider impact on the economy as well of this, because if this goes through, it's not just the OEMs who benefit, but the suppliers, the dealers. So it's auto sector is the engine of the economy really, and if the growth picks up, it's positive for consumer sentiments as well, in my view.
No, absolutely. So within the PV space, Kapil, which are your, what's your order of preference, so to speak? M&M obviously has been a great wealth creator, but, Hyundai, Maruti, has the time come to look at these stocks as well?
I think yes. We've done a scenario analysis on this, and we think that all the four-wheeler names, whether it's M&M, Maruti, Hyundai, all of these have decent upside. Even the two-wheeler names, even from current levels, have upsides. But in my personal assessment, it may be a little bit lower because you will still have some cost increases coming for things like ABS, for example, for some of the players. That would negate probably 50% of the benefit that comes from GST. So it's still positive, but maybe not as positive in case of four-wheelers. The other thing to keep in mind is that the discounting right now is very high, especially in four-wheelers. While average discounts could be like 3 to 5%, but model-specific discounts are as high as even 5 to 10%. So if the demand improves, I think even if the OEMs pass on the full GST cut, there will be scope to reduce discounts as well.
Got that. A couple more questions, but out of time, so we'll have you back again. Thanks very much for joining us this morning with that helpful perspective on the auto space. We'll take a, just look at the pre-open session and how that is left off, right? I mean, I think we're at the end of it. It's nothing very much. 15 points lower on the Nifty. 24,965 is where the pre-open is showing up on the Nifty. But, what we want to, of course, do is stocks, right? That's essentially where the action is. Let's just have those up. These are stocks which we reported on with regards to news flow or otherwise, and how they are behaving in the pre-open. So HAL is up 3.33% in the pre-open session. Cochin Shipyard, Garden Reach Shipbuilders are up, but mildly so, 0.5%, 0.7%. Look at Bharti Airtel, GMR Power, and Urban. Those two names, and both those are higher as well. Some green, but nothing large at all. Lloyd's Metal is another one. Endurance Tech, NTPC, we should look at, on your screen now. So some green again here. And of course, the gaming businesses, right? 3.5 lower on Nazara. I think that clarification from Nazara is helpful. And as we've been saying, that we will be speaking with the company a little later. And Delta Corp is down about 3% as well. But Delta was up 7-8% yesterday. So maybe, just some reversal there coming through at this point in time. So just some names in the pre-open with regards to stocks having news flow. 9:10 call. Sudarshan is with us. Sudarshan, what do you have?
Titagarh, consider buying Titagarh with a stop under 812.
Okay, Titagarh is Sudarshan's pick, and that is what we have at this point in time. Let's shift focus to food delivery majors, right? Swiggy and Eternal. Let's go across to Hormuz for details here. Hormuz, morning.
Morning, Prashant. More positive commentary coming in from both of them. DAM Capital initiating coverage both on Swiggy and on Eternal. Eternal with a price target of 400 rupees. Swiggy with a price target of 515. So implying an upside of almost 26 to 30% for both of these names. What it says is that both the food delivery businesses of both of these companies have now matured, and as a result, they can see margin expansion and free cash flow, which is healthy over the next 3 years. And this free cash flow will in turn help them fund their quick commerce operations going forward. Now, what they are also saying is that Zomato's quick commerce business will reach EBITDA profitability by the fourth quarter of this year, while Swiggy's would reach the same by the fourth quarter of FY28. And while Eternal is already profitable, the Swiggy will turn profitable on a PAT level by FY28 as well, as what DAM Capital is saying. Now, and as a result of which they are forecasting a 42% revenue growth for Eternal and a 28% revenue growth for Swiggy over this 3-year period. So positive commentary coming in from DAM Capital, expecting upside potential of up to 30%.
Yeah, no, absolutely. So that's DAM on Swiggy, Eternal, and businesses have matured, and I think they'll. I mean, the basic contention is that the industry is matured as well, perhaps. So the leaders here will make money. Swiggy is flattish, and I think Eternal is up a little bit. We got the first rates coming up in terms of market open in just a bit from now, and we'll address that and then move forward from there. On the Nifty, it's not very much, just 15 points lower. 27 up on the Sensex is what we have going. The start of the week was so large, right, with those GST announcements that the next 2 days have kind of sort of paled in comparison to those 8-10% moves which we reacted to. So I think broader markets, I think, are looking a little better. They were up, mid and small cap indices were up 1% apiece yesterday. And I saw a 0.25% gain in the small cap index, even as the large cap indices are flat. First rates on the benchmark indices, and then we'll look at the Nifty heat map and, of course, get into individual stocks. The bell goes off, and what do we have? Slightly sideways, 19, 20, 25 points lower, 24,950 on this Nifty. We got 55,730 on the Sensex. The Nifty Bank is down a 0.25%, 55,730. And I think you've got the small cap index, which is up a little bit, 0.12%. The mid cap index will come up on your screen. It's almost unchanged on the mid cap index as well. So markets have got a bit of a lift for 4 days in a row, and we'll see. But not very much to go on with regards to news flow triggers, etc. at this point, after what we've already seen. Bulk of the Nifty stocks on the heat map opening up in the red. There is Bharti, which we highlighted with Rima earlier, which is at one end of the spectrum, and they got a couple of technology names. By the way, tech did not participate yesterday and is down, at least on the Nifty, to begin the session. Surbhi.
Absolutely, that's the large cap screen. Before we look more closely at large caps, let's look at markets' reaction to Nazara. Stock is down 6% despite that clarification coming in, because remember that while their investments in Pokerbazi, they're not consolidated in the P&L. They are investments nonetheless. They've put in almost 1,000 crores to work in that business, which is real money gaming. And now its fate really hangs in the balance. So 6% down. Delta is down about 5% as well. So that's your first reaction coming in on the bill, which proposes to ban all kinds of real money gaming. Back to the large cap screen now. Bharti Airtel continues to gain. Market is giving it a thumbs up in terms of those tariff moves that we've been seeing. What else is higher? There's NTPC, there's Infosys. There's some buying on Eternal, that's quite clear. And then it gets really quiet out there. On the lower side, the drag, well, it's a mix. Kotak Mahindra Bank, there's ICICI Bank, some of the banking names on the lower side. L&T is down about 0.5%. And Reliance is not working in the bull's favor, at least not in the morning. Stocks lower by about 0.5% as well. So some financials, some large cap names, Lever. These are the key drags on the Nifty. 30 points lower. Nigel.
Well, some stocks are seeing follow-through buying, actually. Ola Electric, that one's up close to 5.5%. So good up move is what we're seeing on that one. Jamna Auto, that's another stock that was buzzing yesterday. That one's one of the top volume movers today, up 3.5% in trade today. HLE Glasscoat, another stock that did well yesterday, well, seeing big follow-through buying today as well. So massive volumes in the first few minutes itself. The stock that's under the weather actually is Oro Pharma. Just pull up that stock. Now, unconfirmed reports are indicating that they're looking to buy a rather large company, Zentiva. So that's the reason why, in fact, the stock is a little under pressure, because the street is a little bit skeptical whether or not they're trying to buy an asset that's too large, because reports indicate that the deal could be more than $5 billion. So for the time being, it's weighing on the stock. We'll have to wait for confirmation on that front as well. What else is doing well? Apollo Microsystems, that's one of the top movers in terms of volumes, I think. So I'm not sure whether or not there's some read-through with regard to that defense order that they're getting from HAL. But that's one of the big movers today on very, very high volumes. So it's up only around 3%. But, the volumes are extremely high for morning trade itself. I think Delta Water is something that Prashant spoke about yesterday. That's up another 4-5% in today's trading session. So big move is what we're seeing out there. So mildly lower, but that's on expected lines. Gift 50 was suggesting 70-point downtick. We're down 35-40 points. Par for the course.
Well, Ola is closer to 50 than it is to 40, in 2 or 3 days, right? It's the number 2 volume-led gainer on the NSE. Yesterday, it ended at the number 1 volume-led gainers list, top of the volume board. Yesterday, it's 60 million shares now on Ola Electric traded. So there is momentum, there is action, and of course, Sud has been running us through the reason why we need to pay attention to it going forward as well.
Just one more stock, Prashant. Yeah. One of the biggest underperformers in the last 1 year has been Astral. From 2,000 rupees, the stock fell to around 1,200 rupees, and the past quarter's numbers as well were weakish. The good news, though, the reason that the stock is up close to 2% is because they've reported on the exchange. Promoter entity, after seeing that good news with regard, for the sector itself, they've gone ahead and bought close to 2 lakh shares. So that one's continuing, its good form. It's up close to 2%. But keep in mind, it's down sharply in the last 1 year or so. Promoters coming in there and chipping in. I think the street likes that.
Absolutely. I think the rest we mentioned, Bharti, which is up strongly. HAL is up 2.5. Jamna Auto for the second day running. Dharmesh likes Jamna Auto. He was with us earlier. Denta. There is Godfrey Phillips, which is up 3.5%. It's a bit of a... Godfrey Phillips sold off on Monday. It's back 10,120 or so on Godfrey Phillips. There is HLE Glass, which is coming up again. Huge volumes yesterday, but as Hormuz was pointing out, delivery volumes are very, very low here. But it's moved up in 2 days from 430 odd bucks. It's moved up $100 in 2-3 trading sessions now. What else? Gale is up about 1.75%. There's DYCL, I think this is Dynamic Cables, I think is the name of the company. I'm only mentioning it because it's got large volumes. Never shows up on the list here, but it's got large volumes and some price gains as well, which are showing up. Nazara is, I think, pulled up a little bit. It's down only 4% now. So we'll see where it goes. Hyundai is down about 2.5%. And of course, there is Aurobindo, which is coming up with a bit of a cut. 3% lower on Aurobindo on pretty large volumes to begin the session. Lawrence Belanco of CLSA is now joining us on technicals, perhaps the most closely watched voice as far as market technicals are concerned. Lawrence, great to have you back on the program. Thanks for your time. Prashant this side. So run us through the setup, Lawrence. Where are we at? Because we've been in a bit of a no man's land. No momentum to push us higher in any meaningful way, but no collapse either.
Yeah, it's been a bit of a holding pattern and a bit frustrating, but the key point we'd make is 24,000 remains a key support area. It includes a 200-day moving average, but it also includes the upper boundary of the February-April basing pattern that we saw the Nifty create after the decline of the 24 highs. So as long as we remain above that 24,000 area, we do think there is still another leg higher for the Nifty, which still targets the 26,300 area. So that's the critical line in the sand, and as long as we're above that, we think we can work our way back towards that 26,300 area.
And any time frames on this? You're saying that as long as this does not go, eventually, but what is that eventually, Lawrence? Any time frames here?
Look, if we look at it into year end, we would expect to see a retest of the 2024 highs, if not new highs for the Nifty market into year end, right? So that would be the expectation. And then we've got sort of longer term targets, towards the end of the decade that still sees the market significantly higher from here. So that longer term profile hasn't changed. But if we just zoom into the shorter term side, 24,000 remains key. And as long as that's intact, we think by year end, we're back towards the 26,300 area.
Okay, so retesting the old highs before this year goes out. And perhaps higher levels on the longer term charts. Got that, Lawrence. Great to be speaking with you this morning. Thanks for joining in. So where is the momentum building, if there's any evidence of that at all? Is it financials? Is it industrial stocks? Is it consumer stocks? Where do you see the excitement?
It's a bit of a cross consumer and industrials, right? It's been the surge in autos this week. So that's really been the place within the Indian market that you've seen a real significant pickup in momentum. You've seen a number of stocks break out of trading ranges that have developed since their February highs. We have had momentum indicators confirming that. So, with the pullback in global markets you've seen today, we think pullbacks within those names at least provides you a tactical entry point, because with the high momentum and the breakout of those multi-month ranges, we think there's further gains to be had in the auto space. So that's the immediate momentum within the market. Outside of that, you've got the internet platform names. You can look at the India Internet ETF listed in the US. There has been a pickup in momentum there too. And we still up the banks, although the banks is more of a consolidation pattern right now. But those are three parts of the market that's essentially would use pullbacks to accumulate in.
Hi, Lawrence. Good to see you again. Lawrence, from an India market perspective, there are other two variables that we track very closely. One is Brent crude prices, which have been very well behaved. They've come down. In fact, even when we had the geopolitical issue, it couldn't get past the $75 per barrel mark. So what's the trajectory on that one? And the dollar index as well, after dancing away to 110, that's pulled back to around 98. Where is that headed?
Yeah, so I think two significant ones. I'm going to start with the dollar index because I think this is the most impactful, particularly for the emerging markets in general, and that's the dollar index. What we've seen from 2022 to 2025 is a series of lower highs that developed off the September 2022 highs. And what we saw earlier this year is a break below the lows that we had made between those two highs, which sit at the 99 to 100 area. And it's quite interesting, 2 weeks ago on that US non-farm payroll number, the rebound that you had in the dollar index in July failed below the 99 to 100 area. So that basically reinforces the breakdown from the 2022 to 2025 topping pattern. And we think that marks the end of the dollar rise that we've had from 2010. So we think a significant peak is developing in the dollar index, and that key level to remain below to reinforce that idea is this 99 to 100 area. The first downside target that we have for that breakdown is at 89 to 90. So that's the broader dollar trend that we think you sell the rallies in the dollar. If we look at oil, again, the peak in oil happened in 2022, and we have had a number of geopolitical events over the past 3 years, but every rebound has made a lower high in Brent oil, including the Israel-Iran tensions, which made another lower high, and basically 70 to 71 is now the top for Brent, and we've got support at $60. So we're looking for a lower trading range between $60 and $70, basically.
Got that. On the back of what you said with regards to the dollar index, that you said it should head to 89 levels. What does it mean for dollar-priced commodities and the metals index here in India, Lawrence?
Yeah, I mean, historically, we've seen a weaker dollar being positive for metals, but there is a chart if we step back and we look at the longer-term cycles that we look at, the dollar weakness that you had from the 1985 peak into the late 90s low did see a commodity bull market, but it was much milder than the bull markets of the 70s and 80s, and it was milder than the bull market that you had from 2000 to 2008. So we do think it's supportive for commodities, but we're not quite certain on what degree of bullishness we can take from that. If I look at individual commodities, the precious metals remain the most constructive. Gold's currently in this trading range since April, but we've got a setup to break out and give us an upside target of 4,100. Silver, we're still looking at $42. And then the PGMs, platinum, palladium, they're big bases in place. And, as I've highlighted on oil, that remains capped on the upside. So it does look like a bit more of a selective and subdued commodity bull market rather than what we saw between 2000 and 2008.
Lawrence, gold heads to 4,100, silver to what?
$42 is the initial target, but ultimately back to $50.
Okay, and by when? What is the time frame of these targets?
I think that the setup in gold to 4,100 is something we would look at into year end and the start of 2026, and that would be equivalent to $42 on silver.
So gold, silver heading higher, Indian market perhaps heading higher. Just to round up some of the sectors which are showing momentum, Lawrence, you said that autos, consumer, internet stocks, they're all looking good. Is there anything where you should perhaps not be, which is languishing or which is going to be sort of, absolutely stagnant? I mean, would IT, for instance, and even on Indian financials, you said you're expecting consolidation at best.
Yes, I think financials longer term we still think a key driver to the upside in the longer term trends for the India markets. Currently, we are in a bit of a holding pattern. but definitely would still want to be positioned there on the longer term trend. But the two sectors, and the one sector in particular that looks quite vulnerable, remains the IT space. We have seen a rebound late last year. We made a lower high relative to the early 2024 high. So it does look like we're getting a major top developing in the IT sector. And then if you look at relative to Nifty, we've already broken below the April 2024 relative lows. So we're essentially making 3.5-year new relative lows of the IT sector relative to the markets. So that's a space that we think continues to disappoint and not eager to sort of jump in front to try and bottom fish in that space and looking for a further deterioration. The other place that I think you can remain underweight is through the fast-moving consumer goods, or the FMCG space. Again, that's a relative argument. Absolute price action is very much range-bound, but it continues to leak away relative to Nifty itself.
Yeah. Lawrence, in terms of, these are sectoral kind of views, but there are always single stocks, right, which are looking constructive across the board. You'd like to share a few with us, Lawrence? Positionally, what is looking strong?
Yeah, I mean, I'd love to, but we can stick to the sectors just from a compliance perspective. So, definitely, if you look at the autos, there's a number of large cap autos breaking out there. So that would be my number one focus in the near term on as far as momentum goes. Then look at the consumer internet side. That's another space where we've seen sort of a good pickup in momentum. Again, two large cap stocks there really sort of stand out for us. And then selectively across the banks. And a space that I haven't mentioned, but it is worth looking at, that's the non-bank financials, which we've also seen good consolidation patterns develop and the potential for breakouts there. So those are four sectors that I'd really sort of focus in on. And you don't have to go too far down the market cap spectrum to see the breakouts in some of those charts.
So large cap auto, large cap consumer internet names. You said NBFCs, right?
Yep, correct.
Okay, got that. Right.
Okay, all right. Lawrence, the other one, the other big component of the Nifty is Reliance Industries. Where is that one headed? Because, it found its form when dancing away, I think, to around 1,600 odd, and then it pulled back a little bit. Is it closer to the lower end of the range?
Well, look, there's strong support at 1,300 for Reliance. That's what we look at. 200-day, also the upper boundary of the fourth and first quarter trading range. Yeah, it's not one that stands out from a momentum or breakout perspective, but definitely holding above 1,300 and stable above that.
Okay. And then Lawrence, finally, we've discussed, gold, we've discussed other commodities, Indian markets. Just very quickly, the US market itself, do you see, the good times continuing to roll over there?
It's a bit of a grinding move higher. We've seen a loss of momentum, and the breadth readings aren't the best in the region. Just to give you an idea, the number of stocks in the S&P and the Nasdaq above their 200-day sits in the mid 60% range. If I look at Japan, for example, both the Nikkei and the Topix, I'm getting the percentage of stocks above their 200-day in the 80% region, and I'm seeing similar for the HSI and HSCI. So yes, the trend is intact, but breadth is narrow, and momentum has started to wane. So it's definitely not the lead market that it has been over the past 15 years. And that's probably one of the more interesting charts to pay attention to. The new all-time highs in the S&P, this is the first time since 2012 that the new all-time highs in the S&P hasn't coincided with the relative price action of the S&P versus the World X US ratio. So that's the dollar weakness that's coming through. So, that's one of the biggest changes that we've seen with US market trading at new highs relative to the rest of the world. You haven't seen it being confirmed. And that all comes back to the dollar weakness that we've seen.
Yeah, no, got that. Lawrence, there is some concern emerging, and this is at the margin, that maybe the large cap tech stocks are starting to see a fade in momentum, a pullback in momentum. Do you see that?
Yeah, maybe take the poster child. If you look at the NVIDIA price action last night, you did see a close below the 20-day moving average. That's obviously a short-term moving average, but that has been the moving average that has guided NVIDIA up since late April, and it's been the dips mentality. So last night's close, at least in that AR thematic, does look like we've got a correction and a consolidation pattern that needs to develop over the coming weeks.
Okay. But none of the others, right? None of the other large cap, mega cap tech names. Only Nvidia so far.
Well, that's the poster child of the AR theme. I sort of just highlight that one as, the proxy of the AR theme. If we go through individual names within the semi-side, there are a few others that close below their 20-day. The takeaway message here is that consistent uptrend of buying the dips in the AR theme in the US changed last night, and you would expect to see a bit of a deeper setback and consolidation.
Oh, that's essentially what I was getting to. Looks like maybe a little bit of pullback is setting in. We will have to wait and watch because that is the number one theme, the leader globally, which has been driving markets, driving, individual sectors, so in so many other countries as well. But the US mega cap tech is the one, the leader, the poster child, as Lawrence put it. Lawrence, it's a pleasure. Thank you very much for joining us. Great speaking with you, and look forward to our next one. Well, let's talk about a few stocks here. HAL is something we want to sort of revisit with Ria, who's got details. Ria, take it away.
Well, yes, as per sources, the purchase of the 97 LCA Mark 1A aircrafts has been cleared today, and the order value for this is about rupees 62,000 crores, so a big order for HAL. In terms of the deliveries are expected to take place from the second year of the contract, and around 20 jets are to be delivered each year. Remember, this order is in addition to the current order of the 83 LCA aircrafts that the company is currently executing, and a big order for the company. The stock is higher by around 2% today.
Okay, all right. Thanks a lot for that, Ria. Well, let's hop across to Reema. She's here to tell us about Bharti Airtel that's put on some more weight today. Reema.
Thanks so much for that. So Bharti Airtel follows Reliance Jio and withdraws the 1 GB data per day plan, which is priced at 249 rupees. So basically, what telecom companies are doing is, without making big bang headline grabbing announcements on tariff increase, they're slowly trying to nudge the customers towards higher ARPU plans, higher data usage. Data has now become a necessity. It's a non-discretionary spend. So there is very little chance of consumers downtrading. A couple of years back, every time there was an increase in the base level price and entry level price, there was always that fear that some of the customers would opt to go to a lower priced band. They would say, we're okay with less data. But now, the environment we're in, that is no longer such an option. So telcos know that there is a lower risk of churn or move or to downtrade, the word that we use in the telecom parlance. So therefore, telecom companies, it was first Jio, which, withdrew the 1 GB plan per day, priced at 249 from online channels. Now you've got Bharti Airtel, and the expectation is that Vodafone Idea will also follow suit. Yesterday, Bharti rallied 1%. It's added on some more weight today. And this, while it may not move the needle too much on the revenue front, it does boost the company's ARPU, so the street likes the development and the commitment to tariff repair shown by the industry. Back to you.
Oh, absolutely. And Bharti Airtel is getting a market's thumbs up because of exactly that. Thanks, Reema, very much. Actually, so far this week, Bharti is up about 3.5%, including, of course, today's gain. So it's been good going. Well, let's move on to a corporate conversation now. We are putting the spotlight on Chalet Hotels. The company reported a pretty good set of numbers for the first quarter, boosted by the consolidation of their real estate business as well. Shwetang Singh, Executive Director at Chalet Hotels, is joining in for some perspective. And there are three key areas that we want to really focus on. Number one, sustainability of the average room rates, the growth over there, the outlook on occupancies as well. And then, of course, we'll chat with him about margin stability as they're looking at scaling up to beyond 5,000 rooms. And finally, the annuity income growth and the project execution over there. So let's take all of this up one by one with our guest. Thank you so much for joining in, sir. So let me actually start right there. I mean, first quarter has been very, very decent. And even if I don't look at the real estate business, if I just look at, the base business, it's a fairly steady growth. Now, as you're looking at Q2 and then we get into the full-blown festive season, what are your projections in terms of how ARRs are moving? They're northwards of 12,000 for you, I think, as of Q1. How much higher can ARRs go, and what are you projecting on occupancies?
Good morning. Good morning, Surbhi. Thank you for having me on the show. Let me first start by saying that, we are at a great time in hospitality. The quarter one, despite the geopolitical tensions, despite the Trump trade policies, whatever was happening in the Middle East, etc., we continue to put out a really good set of numbers. And a similar trend is continuing in Q2 as well. Typically in hospitality, the first half is weaker than the second half. So as the festive season comes on, exactly as you say, we expect the growth story not only to continue and sustain, but actually get better as we go along. The beauty of what is happening in the hospitality industry today is that the demand continues to outpace supply. So, there is no fundamental macro that is causing any issues to us as an industry. The corporate earnings continue to grow. So therefore, MICE and corporate travel is expected to continue to grow as well. Most people have now started to take more vacations instead of 1 or 2 large vacations during the year. So that particular trend has helped with the leisure business as well. So if you see overall, the macros of the industry stay very, very strong, and therefore we are confident.
Absolutely. That's why, Shwetank, some numbers will also help. Your ARR, like I said, it was above 12,000, I think 12,200 in Q1. What is the scope to take it higher? If you could give us some idea, and also occupancies. As we go into the full-blown festive and travel season, how high can occupancies go this year for you?
So, we have, as a portfolio, we have maintained really strong occupancies through the years, and we expect it to stay around that. Once a hotel stabilizes, the chances of the occupancy really taking off beyond a certain point becomes very difficult. So what we will continue to do is hold steady on the occupancy with margin, with occupancies going up in hotels that are not stable, particularly in the leisure portfolio. As far as the ADRs are concerned, as I said, the second half is expected to be very strong. So we do expect the growth story to continue. It will be difficult to give you exact numbers, but we expect a minimum of 10% plus like-for-like growth on the existing portfolio, with the inorganic growth helping us to go into the high teens for the rest of the year.
All right. Hi, Mr. Singh. Good morning. Good to see you, Ben. So you're saying the occupancy holds steady and ARRs, they perk up from year on because the second half of the year is likely to be far stronger, right? Are we getting that clear?
Yes, that's good.
All right. Now, margins have been a pleasant surprise. They've improved to close to around 40%. Yeah. That's encouraging. Now, as you scale towards 5,000 rooms, do you think that you could hold on to these margins?
So, the margins have to be seen in 2 lights. First thing is that we have a brilliant asset management team in place, which has institutionally been managing this space for a long time, and we are very careful about our costs. We optimize costs to the last penny. So that's very important, and that has helped us to keep our margins where they are. To expect that the margins will continue to grow would not be right, because there are parts of the portfolio that are currently being added which are in the leisure space, and leisure space typically tends to come with slightly lesser margins. But our challenge would be to continue to hold the margins and steadily grow, and that we are able to do by carefully managing each of our cost lines and optimizing them to the last penny, as I said.
All right, you're being quite candid on that front then. So as we move up, what would be the steady state margins you're looking at?
So right now we expect to be above the mid 40s for sure. And as you know, as a portfolio, we have been a leading portfolio in as far as margins are concerned when you compare it to the rest of the industry, and we continue to want to stay there.
All right, let's focus on debt then. You're expanding capacity. The industry itself has tailwinds. Personally, I've visited, I think, one of the units that you all manage at Powai, and it's chock-a-block. So given that you're going to be increasing capacity because you believe the industry has a tailwind, the debt number is still at around 2,000 crores. Are you comfortable with this number? Is there a repayment option, or do you see it moving up a little bit from here?
No, so we are very comfortable with this number. The business itself is throwing out cash, which is good enough to manage our expansion. But having said that, we expect the debt to peak around the 2,500 crore mark, which is well within the 3 to 3.5x of 1 year forward EBITDA that stays our North Star when it comes to debt levels. So we are very confident that that's there. What's also interesting in our portfolio is we have a commercial real estate piece, which actually throws cash out at nearly 100% EBITDA margins, and that itself today stands at about 300 crores in total. So we have a very comfortable position on our balance sheet, and we can continue to fund our growth with very little increase in the debt side.
Okay, all right. A quick word on the annuity income. What should it look like, in the time to come?
So as we speak, we are in our annuity space, we have about 76% occupancy overall for our portfolio, which is at about 2.4 million. We have another 0.9 million under construction at Powai, the case that you mentioned. But having said that, at 76%, our exit was about 25 crores per month, so about 300 crores per year. When it stabilizes by the end of this year at around 90 to 95%, we expect it to be close to 400 crores.
So that will be annual.
That will be the annual number, yes. And since it comes at 100% EBITDA, you can expect a 400 crore number.
400 crores in terms of the annuity side. Okay, Shwetang, just an update on a lot of your marquee properties that are coming up. There is Western in Hyderabad, and obviously there's a property that we all know very well, which was earlier known as Dukes in Khandala. So when do all of them start contributing?
It's interesting, Mumbaikars get very excited about Dukes. Obviously, it has a great history. So we are already operational with 117 rooms in Dukes, with most of the facilities online, including a great conference space. And I would urge you all and your viewers to come and sort of experience it for themselves. The balance 30-odd rooms, which will take the total inventory to 147, is expected to come by October, November by this year. So that's the expectation on the Dukes side.
And are there, what about Goa and Trivandrum? Apparently, there were some delays there for those properties. Can you just bring us up to speed on it?
Yeah, absolutely. Look, Goa, we have announced two acquisitions in Goa, one in the north and one in the south. The one in the south is slightly ahead on the curve, and this is Goa, so it's always a bit hard to sort of get the planning permission in Goa. But we are well on track now, and we expect to start by January of this year and open up the south of Goa by FY of 28. I would be a bit more circumspect in talking about the timelines for North Goa, because there are a few hoops that we still need to go through. And we expect a 36-month construction period for it. So we will come back to you with an exact date once we have it firmly under control.
All right, Mr. Singh, and you could gauge who's the more adventurous traveler among us. I was happy with Powai. Surbi took us all around Khandala, Goa, Trivandrum. So good times for you all, it seems. We'll track you to all these numbers. Thanks a lot for joining in.
Thank you so much for having me on the show. Thank you.
Well, on that note, though, we'll slip into a short break. On the other side, we have the management of Nazara Tech, who's waiting by as the online gaming bill 2025 gets the cabinet approval. Stay tuned for that conversation.
Okay, welcome back. The big blow to online real money gaming is what we're going to discuss next. And Nitish Mittersen is Joint Managing Director and CEO at Nazara Technologies. He's joining us all the way from Germany, where I guess it's 5:30 in the morning. But thanks for staying up, Nitish, and good to have you with us here. For our viewers, I just want to sort of, to sharpen the focus, put out 3 points what we're going to talk to you about, right? The government likely to ban online gaming involving real money. What will be the impact in the business at Nazara? Is pokerbazi investment under the risk of being written off? Number 3, will the company shift focus to other segments? How will you mitigate this impact and to what degree? Welcome to the program once again, Nitish. Let me just start by asking you, we got that clarification which you put out in the morning So in Q1, the contribution of real money online gaming was, you said, close to zero, actually next to nothing. But there is this 800 plus crore investment in Pokerbazi, which is impacted. So I just want you to address that straight up, Nitish. Is that, I mean, the way the bill is looking, it'll be tabled in the parliament, we'll get the details, but from what is being reported so far, from what we've reported, if that is the shape and form of things to be passed, is that underwater now? I mean, will you have to write that off? Go on.
Sure. So to start with, on our revenues and profitability, in Q1, which we reported recently, we had seen 100% revenue growth, close to 90% EBITDA growth, and over 100% PAT growth. It's important to understand that from a Nazara perspective, there was no contribution, absolutely no contribution of real money gaming revenues in this financial performance. What that really means is that even going forward, since we are not having any contribution by real money gaming in our financial numbers that we report, there is no disturbance or issues with what we will report going forward. And the company continues to grow strongly, profitably. Now, we do have an investment in Moonshine Technologies, which runs Pokerbazi. We own 46% in the company. And it's speculative now because we don't know what is the content of the bill. But if there is a move, as media has reported, to ban online real money gaming, then of course that particular investment could potentially be at risk.
That business was growing at a very fast clip, right, Nitish?
It's a very strong business. They are the market leaders in their space with over 70% market share. But of course, if there's a significant change in regulations, we'll have to see how that business can adapt to this new change.
So you will have to, what will be the quantum of the, you'll have to write off, what will be the quantum, Nitish?
I think it's very, I'll share the quantum, but I think it's very early days. Look, the core platform of that business is extremely strong, and therefore there could be opportunities to take it into other markets, etc. But like I said, it's early days, and over the next few days, depending on actually what's in the content of the bill, we will figure it out. In terms of our investment into Moonshine, we have about 805 crores invested for the equity stake that we've taken, but we also have another 250 crores of CCPS, which would convert at a future price. This was invested through a combination of cash and stock issuance.
Hi, Nitish. Good to have you in. So that 800 crores we've taken on board, and as you're saying, the company is an associate company. So as of now, it's not contributing to the revenues. Yeah. But will you go ahead and convert these shares, the 250 crores that you're talking about, because of this uncertainty? Will you have to rethink the plan?
Yeah, I think the conversion of the shares were long dated, so they are not due at this point of time.
When are they due?
I think it's 2 years or 3 years out. So we will take a call a bit later on it. It's too early right now. Like I said, we're responding to media reports at this point of time. We don't know what's the content of the bill. I think the important clarification I wanted to do for your audience is that the revenue and profitability of Nazara would not get impacted.
Right. It's an associate company, so it would not be getting grouped at that level. It'll be below the operating line. Got that. If you could also tell us, do you think, as per what you have heard, is there a risk to this entire investment? I'll tell you why. Because, various analysts, they are attributed as a percentage of your total SOTP, that this business's investment could be close to 30%. So what is your take on that? Is there a risk to this investment?
Like I said, it's very early, but obviously from what we're reading in the media reports, there could be a potential risk. I think in terms of SOTP, we don't look at, our metrics in that fashion. We're very focused on growing our business. Nazara has been designed in a manner to be very resilient to any such disruptions by being a very well-diversified business spread over the globe. We have over 80% of revenues that come from international markets today through core gaming IP, which has been our focus. And I believe that over the last 25 years, many times we've taken such disruptions and moved ahead and got stronger. So I'm very confident that we run a very stable ship, and we will not be affected by this.
Earlier we had talked about this, right? You had planned to grow the real money business as well. Now with the change of events, you'll have to realign yourself. So what do you think are the drivers that you can take on board such that you achieve those growth targets? Because otherwise, growth hits a bit of a hurdle.
If you see our recent acquisitions that we've done in the last year or so have all been focused on the core gaming IP business, which is a very profitable, very cash flow generative business. We generate through games that are popular all over the world. And that's already something we've been very focused on. In recent commentary, also, we've said we're doubling down our focus on core gaming IP. I'm actually here in Germany attending Gamescom, doing 20 meetings a day, meeting a lot of exciting developers who could be potential investment targets for us. So I think we already have, a very strong pathway for growth. We're already delivering it. As you saw this quarter, we delivered 100% year-on-year growth. And I don't think our strategy changes at all at this point of time.
And you've been very, very, very acquisitive, Nitesh. Nazara has been. So expect a few more deals in the coming days, weeks?
I think we're very happy with the core gaming studios that we have been buying. Our recent acquisitions, whether it's Fusebox Games that we did earlier in the year or last year, I think, and Curve Games recently have been performing extremely well. So we are kind of, emboldened to do more aggressively go down this path.
How, and what would the size? These would be smaller ones, like you've done in the past?
We'd like to do slightly larger opportunities, look at larger opportunities if we can. But, we're a very patient company. We are never acting out of FOMO.
What kind of size are we talking about, Nitish? Larger ones?
I mean, we may go up to, 500, 700 crore type of transactions. But our sweet spot right now is in that 200-300 crore zone.
And how's your balance sheet looking? I think you had 1,000 crores of cash, right?
Yeah, we have about collectively, as of June end, about 800 to 850 crores of cash. The company is nearly debt free. So our balance sheet remains extremely strong.
Okay, all right, Nitesh, we appreciate you joining in. So we'll have to see how things, move forward from here on. But as you're saying, as of now, this investment makes it an associate company. There's no contribution of revenues. You have a high amount of exposure to the international market, and you look at various inorganic growth that you're currently scouting for. We look forward to having a chat with you again once we get through with the finer print of this particular, regulation that will come into play. Well, as we were having that chat actually with Nazara, the markets have recovered. We were 50 points down. Now we have moved into the green. So good pullback is what you've seen. At least the initial dip has got bought into. The Nifty Bank is the underperformer yet again. It's down close to around 250 points. That 20 DMA is again becoming a bit of a resistance. Soni Patnaik, Assistant VP Derivative Research at GM Financial Services, joins us on the show. Hi, Soni. Good morning. Good to see you in. What's your take on the Nifty? We go higher from here on. We have had a good relief rally. Is it a relief or are we heading higher?
Hi, good morning, Nigel. Thank you for having me on your show. I think certainly, yes, it's a relief rally, but then again, it is also optimistic to look forward for higher levels. The next resistance for Nifty actually stands towards 25,250 to 25,300 levels. I think that's the crucial resistance to watch out for. We can see that aggressive put writers have positioned themselves towards 24,800 to 24,700 range. Any dip towards those support levels stands as a good buy. So one can accumulate a buy for a short-term trading perspective and look for the targets towards 25,250. So one can book profits maybe there and then wait to see how the markets react. Similarly, for Bank Nifty, also we feel that the next resistance for Bank Nifty is towards 56,500 odd levels. It's also holding strong support towards 55,000, on closing basis. So I think one can accumulate Bank Nifty as well for higher targets towards 56,500 plus levels.
Okay, got it. What about individual stocks?
Right. So, Nigel, we've got two official recommendations and both are on the buy side today. One is from the banking space and it's in Union Bank. So one can accumulate a buy in Union Bank in the range of 136 to 137, keeping a stop loss of 131 and a positional target towards 144 to 150 levels can be seen. The second buy recommendation is from the pharma space, which is showing strong momentum today. One can buy Apollo Hospital, but slightly on declines towards 78.50 to 78.30. So that range can be the accumulation zone, keeping a stop loss of 77.40 and targets of 8,000 to 8,100 can be seen.
All right, Sonia, I want to ask you about your view on PG Electro Plus, but just one quick update for our viewers. PG Electro Plus in today's trading session, it's buzzing around. Now, yesterday late trade, we had highlighted the fact that the stock could potentially come out of the F&O ban. And that's precisely what happened because, the stock at the end of the day, we got the file and said that the stock is out of the F&O ban because, the market-wide position limit, the open interest as a percentage of market-wide position limit had fallen below that 80% mark. The stock is up close to around 5.5% in today's trading session. Remember, FY26 in all probability will be a washout. Quarter 1 has been weak. Quarter 2 is likely to be a bit of a dampener. All eyes are on Quarter 4. How much can they pull back? In terms of valuations, well, the stock trades at around 38 times on FY27 EPS. So that's about fundamentals and a quick update in terms of the technical action with it coming out of the F&O ban. Sony, what's your view on PG Electro Plus? One of those howlers of Quarter 1. But now you have this technical factor at play. Still expensive, but not as expensive as what it was, say, a month or so ago.
So I think we've seen very strong correction from higher levels of 750 odd levels, and the lows that were recently marked towards the 470 odd levels. That certainly stands to be a medium term support. But however, we would still advise some caution until it has not crossed above its 620 mark, where technically a lot of resistance can be seen towards those levels. Maybe it bounces from current levels, but any close or decisive close above a 620 can see some short covering move towards a 660 to 680 level. So I think one may still continue to be a bit cautious, and wait and watch would be the strategy over here.
I don't know if you have a view, Sony, hi, morning, on Ola. I mean, price action, of course. I'm not sure how you'd read the charts. 2 days now, very large volumes and good price action as well. But of course, coming off very, very bombed out, depressed levels. Any thoughts here?
Hi, good morning, Prashant. Certainly, I think we've seen very strong volumes, and a short-term technical breakout can also be seen on chart. So I think from current levels of 48 as an intraday support, it can head higher towards a 50 to 50.5. So any close above that 50.5 resistance and a positional target towards 54 plus levels will also open up. I think one can continue to hold these stock for any upside towards 54 and up, but it'll be positional play. And on any declines towards 48 can also add up. So one can keep a stop loss towards 46 from current levels.
It's basically back today. It's basically back at the 15th of July highs, which is around 48.90 or so. So we are exactly there. And I think that's essentially what I guess Sony is looking at as well. And I mean, then after this, 54, 55 odd levels, which is again, by the way, the 8th of July kind of levels where the stock spent a fair bit of time earlier. So 2 days, I mean, I think this is up about 16, 17% or so. Sony, thanks very much for that. Market, by the way, is almost in the green. Nifty's got just 2-point cut. 24,976 is where we are now at. And basically, which means that from the low today was 24,929. We've come up about 50, 60 odd points or so. Manisha is here with what's happening as far as commodities are concerned. What's top of mind? Manisha, good morning.
Morning, Prashant. Thank you for that. Well, I'm looking at metals where we have seen a decline continuing today as well. Well, actually, when you look at the month of August, it has been a negative month so far for many of these metals. One, it has to do with the profit taking because the kind of gains that we saw in the month of July were not sustainable, and we have seen some decline because of that as well. The weak Chinese manufacturing data, retail sales, investment, industrial production, all of those numbers for the month of July were weaker than what we saw in the month of June and were weaker than what we saw in the previous year in the same month as well. And that has continued to weigh onto the markets there, really questioning the kind of demand that China could be looking at going forward from here. It also has been about supply chain disruptions with all these tariffs rolling around. The markets really are looking at a lot of disparity when you look at where the metals are lying, whether it's on COMEX or LME or Shanghai really, and that has led to some declines as well. And then, of course, there are global economic uncertainties due to those tariffs as well. The markets also are looking at US announcing 50% duties on additional 400 products that contain steel and aluminum. As of now, we have 50% duty on steel, aluminum and copper, but there are additional 400 products, and that list really is available since Monday there. And there are new product categories that are featuring on that list, including everyday items like car parts, plastics, furniture, specialty chemicals, etc. So there's a big product number now within that list that's also weighing onto the markets, looking at where the demand really could go if the US consumer had to pay so much higher there. This is what we've done in sense of overnight markets for many of these metals. A decline, as you can see, 0.5% down for gold, 1.5% down for silver and iron ore. And the aluminum prices also with that decline are trading at a 1-month lows right now. And as I was telling you, the month of August actually has been negative till time for many of these metals. We've seen gold and silver prices decline 2.5%, more than 4% of a cut coming in for silver. And that's exactly what we have seen for many of these metals, which made those multi-year all-time highs in the month of July have declined quite sharply as well. Platinum down 12% for the month of August, 21% decline in copper, where we did see all-time highs. But after that, refined copper was let out or excluded from that 50% tariff list. We've seen huge profit taking coming in for this one as well. And then it's 5% a piece decline coming in for steel, iron ore as well. And the markets have continued to see a decline for aluminum, zinc and nickel as well. 3 to 3.5% of a cut for this month for all these metals. And so as you can see, there is no metal trading in the positive in the previous month there. What the street is now watching out for is the statement coming in from the Jackson Hole Symposium. This is the last one for Jerome Powell, and those statements will be very, very closely watched.
All right, Manisha, thank you very much for that. Absolutely. I think that's going to be something closely watched. Thursday is when that Jackson Hole Summit starts. And we will keep track of it. HAL is up about 2% or so on the back of that order win. It's the bottom of the screen. I think volumes are picking up a little bit as well. Markets, as have been pointing out, have recovered from the lows of the day. We take a quick commercial break here. We're going to come back and focus on Swiggy, Eternal and Ola with our team. Stocks are higher. Look at the volumes in Ola. 240 million shares, 244 million shares nearly coming through there. Stay with us. Okay, welcome back. Let's just talk about a few names, right? Food delivery majors, Swiggy and Zomato, eternal in focus. DAM Capital's got a note. We put this out. They're saying the businesses have matured and they'll make more money now. Let's go across to Hormuz for the key takeaways. Hormuz, over to you.
Positive coverage coming in from DAM Capital for both Eternal as well as Swiggy. And they've initiated coverage with a buy recommendation on both of them. For Eternal, they have a price target of 400 rupees. For Swiggy, they have a price target of 515. Now, the upsides here for Eternal comes up to around 26%. For Swiggy comes up to around 30%. Now, what DAM Capital says is the fact that both their food delivery businesses have matured, and over the next 3 years, they are expecting healthy margin improvement and free cash flow generation for both of these companies, which will in turn help them fund their quick commerce operations, which they are focusing on and doubling down on currently. And as a result of which, they are expecting the quick commerce business of Zomato, which is Blinkit, to turn profitable on the EBITDA front by the fourth quarter of this year, and Instamart, which is the quick commerce business of Swiggy, to turn EBITDA profitable by the fourth quarter of FY28. And for them, they are expecting Zomato already being PAT profitable. For Swiggy, they are saying that PAT profitability will come in FY28 as well. Now, as a result, they are expecting a 42% revenue growth for Eternal and a 28% revenue growth for Swiggy over FY25 to 28. Mind you, Eternal is already at a record high. It's gained over 20% in the last 1 month. While Swiggy, though, their price target of 515 is well below the post-listing high of 617 that the stock had made after its stock market debut. And over the last 1 month too, the stock has remained quite sluggish. But positive coverage coming in from DAM Capital, expecting upsides of up to 30%.
Hormuz, thanks very much for that. Very, very interesting note there. So food delivery companies in focus. Ola is the next one we want to sort of revisit once again because volumes are exploding and the stock's at an important level, as I mentioned earlier. So 49, I think it's basically gone past that level. We had an opinion from Sony as well, the technical analyst who said that maybe the next stop is about 55-ish kind of levels. But, any triggers here? Sud is going to take us through that action. Sud, over to you.
So before I talk about today's and recent price action, Ola Electric, there is an interesting trivia. Same day, that is 20th August in 2024, stock had hit record high of 157. From that level, it's significantly lower, but in the last few days, stock has been moving higher. And this week, it's up almost 20%, and it's up almost 24% from 52-week low that stock had seen last month, that is in July. But in 2025, the stock is still down more than 40%. Now, take a look at the volumes and delivery that stock has seen yesterday. So, total volume was 58 crore shares. That was highest in last 1 month. And if you compare against the average volume of last 20 days, it's almost 5x. So, 58 crore yesterday versus 11 crores in last average of last 20 days. Deliverable quantity yesterday was 14.35 crore shares. That was highest in 2 months. And if you compare against volumes, it was 24.6%. There is an interesting update from shareholding data as well. FI's holding, because I've taken December of 2024. That time holding was 38% by FIs. Now it has reduced to 34.7%. So almost 400 bips lower. But kind of like fully offset by DIs. DIs have seen increasing their holding. So in December 2024, it was at 19.2%. Now it's increased to 23.4%. So what are the major tailwinds for Ola Electric going forward? First, after Q1 earnings, company has reported that in Q2, auto business will turn EBITDA positive, and in FY26, company is expecting that auto business EBITDA margin will be 5% or more than that. Also, yesterday we have heard from Chinese side that China has announced a lifting curb on rare earth magnet. That will also be positive for Ola Electric. And another festive season is coming, and company is bullish on its recent launches, especially on its bike, that is Roadster.
Yeah, no, absolutely. So thanks very much for that. Really appreciate it. And that's Ola on the move. Look at the market, right, and how it's come up off the day's low. Sensex, almost 200 points off the day's low. Mid-cap index is up 170. That's about 1/3% off the lows. So, yeah, things are looking much better from the opening. Actually, it's pretty similar to yesterday. Yesterday as well, the market bottomed out at about 940, 945 and then started to move higher. I think something similar has happened today as well. At about 940, 945, market has made that low. and it started moving up. So can we build on this is the question. 50 points, though, on the day for the Nifty for now. We'll take a break. On the other side, our special segment, it's the economy. US and Indian bonds are in focus, which with Neeraj Seth of 3R Investment Management. Lata's going to take that conversation forward. Stay tuned, coming back after a quick break.
Welcome to It's the Economy. India's bond market has been suffering a buyer's strike for the past 2 months, taking the 10-year bond yield to an early April high of 6.52% yesterday, 6.51 today. After the April policy, the Reserve Bank has cut repo rates by 50 basis in June, and S&P Global has upgraded India's sovereign rating to one notch above investment grade for the first time. Yet, after just a half-hour rally last Thursday following the rating upgrade, bond prices crashed once again this week. FPIs are still refusing to buy. Separately, let's look at other markets. Jerome Powell is slated to speak at Jackson Hole on Friday and is also expected to cut rates at the FOMC meeting on September 17th. To understand US and Indian bond markets, I have with me someone who specializes in global fixed income markets, founder and chief investment officer at 3R Investment Management, Neeraj Seth. Neeraj, thank you very much for dropping in here on such a wet day, coming all the way from Singapore. Thank you for dropping in.
Thank you.
Well, for starters, how do you explain this Indian markets, fall in bond prices after a rating upgrade, after a double cut in June and a CRR cut? Is the fiscal fear so high?
So I don't think it's a fiscal fear right now. It's a combination of obviously the technical backdrop driven by the domestic demand, which obviously is not as strong with all variety of reasons, and the slowdown in the FPI buying right now, I do think the FPI buying will resume. Now, obviously the question is what will drive that? It'll be a combination of the path of monetary policy, where I do expect the RBI to continue on the path of monetary easing, especially given the geopolitical backdrop and all the pressures we are seeing, and the stabilization of INR, which is also seeing a little bit of a noise around it, driven by the geopolitics and the additional tariff hike from the US. So I do think you are in, I can't call it a dry summer, it's not, it's pretty wet outside, but the reality is, I do think you will see the FPI resuming the buying once you have stable currency and the path of monetary policy seeming to be more towards easing.
Okay. The Indian understanding was that FPIs will be favorably tuned to India, especially after the rating upgrade. What's keeping the FPI away? The numbers will come up for you. I think we are having a fairly negative number for FY26. FY25, it was a huge FPI buying because of the bond inclusion. But now it's a negative 1.1 billion as of August 19, that is FY year, April 1st to yesterday. What's scaring them? Are they worried that because of the GST cuts and possible slowdown, tax revenue slowdown, there will be a fiscal bother? What's worrying them?
I think the main thing is the geopolitical uncertainty and to some extent how that impacts the currency markets. Obviously,
so it's a currency worry.
I think if you look at INR relative to what has happened to the dollar, which is weaker by almost 10% this year against the major currencies, INR is weaker against the dollar by about 1.5%. So it has underperformed not just the developed market peers, but also the emerging market peers, if you think in terms of the currency. And then when you take an FPI view of the world, rating matters, but is not the primary driver of FPI's view in terms of taking the position. It's going to be, as I said, monetary policy and some stabilization in currency, which I do think you will see in the coming months and quarters.
So you expect FPI bond buying to resume?
I do think it will resume. Again, the other challenge, as you can see, is more coming out of the US from a fiscal financing, the inflationary impulse, is the steepening of the curve. And that steepening of the curve obviously is influencing how investors look at the global bond markets, not just the US.
Oh, so you mean it's a global bond aversion possibly?
You're seeing a little bit of that aversion. You're seeing some pressure because of the correlations. You're seeing obviously some losses. If you were sitting on the long end of the US curve, you're sitting on losses right now.
Fair enough. In any case, let's turn to the US situation and then come back to the Indian currency as well. How do you see, do you expect a rate cut? What is the trajectory? And what about the 10-year bond yield itself in the US, even if there is a rate cut?
So I do expect a rate cut. I think as we go through the NFP on 5th of September and the CPI report on the 11th of September, I do think the discussion might move more towards 25 versus 50 rather than 0 or 25. I do think there's room for the Fed to cut rates. Can they go very far? I'm not sure about that, but right now there is room. But there's also an additional element, as you can imagine, as we go into the last quarter of the year, the discussion will start around the Fed transition, the next Fed chair. And the more we go towards that, the impulse from a Fed standpoint to make major changes in the policy come down. But the September meeting is live with a high potential of a cut. Now, the 10-year point, Lata, the reality is the Fed controls the front end. Rest of the world controls the 10-year. So I don't think the 10-year has a huge amount of room to rally. It might come down a bit, but the 10-30 curve might steepen even further.
Okay. No, actually, the 10-year bond yield has been between 4.3 and 4.5 forever now, even after some of the rate cuts of 2024. You think it stays at 4.3? Does it nudge if there is a 25 basis or even a 50 basis?
So I do think the 10-year does come down from there. That's almost like the fulcrum point for your overall curve. So front end to the belly benefits to some extent, obviously, from the Fed cut. It's more the 30-year part, which I'm not sure about. And that's why I said the 1030 might steepen further despite the rate cuts from the Fed.
Okay. Fair enough. What's the expectation on the currency itself? I mean, now on the Indian currency. Can you give us the global view or your client's view of how they see the Indian trade balance, the capital balance, because, you know, capital flows are also not coming and there is a bit of a jitter on the current account.
So there's obviously multiple elements. If I try to simplify, it's the geopolitics, and the more important part is combination of the changes in the alignment from a geopolitical perspective and the tariff itself, which was a big surprise for the markets in the last 1 month. So I do think that needs to settle down, although I'm a little less convinced that we're going back to the old 6 months ago US-India relationship. So I think there's certainly a shift has happened there. And from a...
So what, your base case would be 25% tariff or maybe even higher?
I think it probably will be 25 in the end, but it's not going to 15, which was the original expectation, which has both the implication in terms of growth, which takes away maybe 0.25% to 0.5% growth. And it also has the impact on the labor market because it's more in the labor-intensive sectors. Now, that brings back the push or the focus from the government to support growth, where a combination of the reforms, which are good, I would say, in fact, simplification of GST is a great thing to do. But the combination of reforms as well as some fiscal push that will be required is something that markets are trying to gauge where to take the current and the capital account and overall equation from here.
Oh, fair point. I know too many moving pieces. But give us an equity view as well. You know, the Indian market, the equity indexes also have been in a range. What's the expectation that India breaks out of this range, goes back to at least the 26,000 highs? Is all the bad news in the price?
I do believe in the medium to long term, the India story remains intact. It might shift a little bit in terms of which sectors benefit more. Now, one more aspect I would add, which we didn't touch on, in addition to the geopolitics, there's a huge shift happening in the labor productivity aspect from AI. Now, how does that play out for one of the big sectors in India, which is the IT services? I'm not sure that it's all positive for the IT services. So I think it's going to be more sector-specific. Broad index, I do think in the medium to long term, you will break out of that 26,000 that we saw in September last year. So the outlook remains positive. But as I said, investors are trying to get their head around how to realign between the new geopolitics, new fiscal equation, and to some extent how AI plays out.
Okay, and what sectors, clearly IT will not be your favorite from what you have said. Any other sectors that stand out?
So I continue to like the consumer staples, consumer discretionary, financials, infrastructure, defense. So there are a number of sectors which are more domestically orientated in terms of their future outlook and hence will benefit from the combination of the consumer and the government support that you can imagine in the coming years.
Okay, a final question. What's your take on how the Reserve Bank, is there elbow room for more rate cuts? This GST rate cuts, tax cuts, would mean that some prices, apparently about 10 to 11% of the CPI basket is taxed and it will come down. So there could be that impact in the second half. Plus, you know, just before we came in, our commodities editor, Manisha Gupta, was pointing out that practically all metals are now trading lower in the Asian markets as well. So is there a further disinflation and therefore further scope for rate cuts?
So I remain in the camp that RBI has more room over the next couple of years to cut rates than the market pricing or the market expectation. If I have to take a view, you probably can see another 75 to even 100 basis points of rate cuts in 2 years. But that obviously is predicated on the fact around the disinflation you touched on. And one aspect which is always has been very sensitive from an inflationary perspective is the oil price. Right? Oil price has been very well behaved in low to mid 60s. If that changes because of supply demand and some of the geopolitics, that reduces the room for RBI. But currently, can they cut rates another 75 basis point? I do think so.
Okay. Okay. Oh, the softest I've heard is 50 basis, taking the repo rate to 5, but 4.75 is a new hope. Well, out of time, Neeraj, thank you very much for dropping in and giving us your perspective on both global and Indian fixed income markets. We have to wrap up on Bazaar on that note. Chartbusters coming up after the break.
Shares of Nazara Technologies and Delta Corp trade under pressure as sources say the government is likely to propose sweeping restrictions on online gaming companies under the upcoming Gaming Bill of 2025.
Shares of HAL rise in trade as sources indicate that Cabinet Committee on Security has approved the purchase of 97 LCA Mark 1A fighter jets worth 62,000 crore rupees from the company, marking one of its largest defense orders.
Lloyds Metals rises in trade after winning an extension of the coking coal mine across Madhya Pradesh-Maharashtra border with a 10% premium.
And shares of Eternal and Swiggy rise after DAM Capital initiated a buy rating on the stocks. The brokerage expects margin expansion along with strong free cash flows growth over the next 3 years.
Hello and welcome to Chartbusters. We're coming to you live from CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Vinny Motiwala. And things are very quiet on the index front. We had 2 good days on the trot, and today markets seem to be consolidating and just moving sideways. So straight away, let's turn our attention then to the first corporate on the show, Galaxy Surfactants. The company is now joining in, and just to run you through the 3 main talking points. One is the supply chain impact due to geopolitical tensions, how they plan to navigate it, demand in Africa, West Asia, Turkey region, and the outlook on demand in India. To break this down, we have with us K. Natarajan, Managing Director and CEO of the company. Thank you very much, sir, for joining in. So let me start with the demand question, which covers the various geographies that you operate in right now. In Q1, you had a volume growth of close to about 5%. I think when we spoke last time, 6 to 8% was what you were hoping for in terms of a volume growth guidance for full year. Now, given the uncertainties in North America, the slow start to Q1, what is your guidance for the full year on volumes and EBITDA per ton?
Yeah, good morning. So thank you for having me on the show. Given that from the last time to now, the change has been in terms of the way the India market hasn't really fully recovered, although we see some green shoots in terms of certain policy decisions that the government has taken. The latest one being the GST rationalization. That augurs well for us, and that can be a real booster for the demand in India. So that's a good news. We do expect things to start looking up from H2. America, we had a challenge because of the tariff uncertainty. Many of our customers were going slow on the ordering because they weren't clear as to which way things would go. That continues even now, and we do expect things to be much clearer in the next quarter, and that should come back. Rest of the world, other countries are doing pretty well for us. Europe is doing well. Latin America is doing pretty well for us. Africa, Middle East has been flat, and that was more due to the supply challenges we had due to the geopolitical situation. That's improving now, and that augurs well for the coming quarters for us.
Right, Mr. Natarajan. Good morning. This is Vinny joining in the conversation. So that volume number, what could we be expecting in FY26? 8% around that mark is what we could watch out for?
No, we would further India market needs to really pick up. And that currently India growing at only about 3 to 4% for our customers as well. That would be a difficult one to achieve at the higher end. I'd be happy if we're able to touch the lower end of the band of 6% with India coming back. So I am hopeful about that happening.
Okay, hopeful about that 6% at least happening over there. Also, just in terms of freight rates, what is the outlook there as well? Given that there were some issues in terms of freight rates increasing there, container availability was also an issue. Has that started easing off? Has that started becoming better? And overall, how is that impacting your cost story right now?
The container availability, because of the tariff, the yo-yo situation in tariff, you have containers getting pulled in by China, some container unavailability in some sectors has been a challenge, but it is much better than what it was, say, in the previous quarter. Quarter 4 was pretty bad for us of the last year. It's much better, it's improving. Freight rates are started increasing in line with the demand surge that has happened to probably try to beat the tariff setting in. But that we see as temporary because things do, based on our discussions with the shipping companies, things should start getting better. But availability is certainly much better. We don't see much issues moving forward on the supply front.
India demand, I think you said was 3 to 4% in Q1. And you're hopeful for things picking up in the festive season. What is the volume growth for India that you anticipate?
India, I think we should probably should be in the zone of about 5 to 8%. But second half is what we need to wait for.
Got that. And US is, I think, 8 to 10% of your revenues. Is that correct, Mr. Natarajan? Can you hear me? Okay, we seem to have snapped that connection a bit. We'll try and reconnect, but that's Galaxy Surfactants saying that in Q1, the volume growth was about 5%, but because US is facing some challenges, India volume growth was only about 3 to 4% in Q1 for the full year. They're hopeful if the company can achieve a volume growth of 6%. Last quarter, they'd given a guidance of 6 to 8%. Then to some of the analysts, they said 4 to 6% is the kind of base range that we're working with. But if things pick up, as the management was telling us, Mr. Natarajan, they can push towards 6%. So we wanted to get into a little more detail about North America. US is 8 to 10% of your revenues. Is that correct?
About 10% of revenues, you're right.
US, okay, 10% of your revenue. And you spoke about ordering being very slow on account of tariff uncertainty. So what was the volume growth in US in Q1? and what are you expecting? I mean, is this year going to be a washout? And if that's the case, what happens to your margins? Okay, we'll, try and... Mr. Natarajan, can you hear me? Okay. We'll reconnect.
Yeah, I think we'll reconnect with them. It will be important to know also where, the company's margins are going to be going forward as well. But a lot of development on US front right now, like we mentioned as well. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be coming back with more updates after the break.
Welcome back. We managed to reconnect the line with Galaxy Surfactants. K. Natarajan, Managing Director and CEO of the company, is here with us on Chartbusters. Mr. Natarajan, we were trying to understand the US business. That's 10% of your revenues. Orders have gone slow. In Q1, was there any volume growth? And what is the plan? Is there a risk to your margins if this year turns out to be a washout?
Yeah, so Q1, we did have a volume growth. It was probably about 7 to 8%. We do expect it to go up in the coming months. We're already seeing that happening in this month. More importantly, I think what is required is the premium specialties that need to go up. That actually slowed down. We are seeing things picking up, and it should be on a good track in the coming quarters.
But you spoke about how customers are cautious and orders are getting pushed forward in the US.
Because they weren't too clear about what would be the tariff and what would be the demand for their products, given that it's going to be inflationary. Now, once they have come to terms with that, we are also giving solutions in terms of how we are able to get around in terms of reducing the tariff impact for them. So there's a good amount of negotiation discussions happening with customers, and that's proceeding well. We're also looking at how do we pivot towards our other regions in the rest of the world to be able to soften the impact.
But you're saying you're going to soften the impact for your US customers, which means that if the tariff is settled, say at 25%, not at 50%, you will be absorbing the burden?
No, not exactly, because we also have facilities in Egypt. We'll need to see how we are able to be managing with some supplies happening from there. So various options are being worked out to ensure that we are able to keep our customers, engaged, and we are also able to have no margin impact.
Okay. And just in terms of your supply chain side as well, how is that shaping up? Would that be a concern? What are we watching out there?
No, supply chain, not much of a concern now. We did have an issue in the first quarter where one of our key oleochemical vendor had a huge disruption because of natural gas supply getting impacted. All that has gotten better from July. We don't see any significant challenge in the supply front moving forward.
Okay, Mr. Natarajan, out of time. Thank you very much for joining in. That's the word coming in from Galaxy Surfactants. Let's move on and get in a check on the market technicals. Dharmesh Shah from ICICI Securities is now joining in for a quick technical check. Dharmesh, things are very quiet. The Nifty is above the 25,000 mark. Do you see more gains from here? What would the stock calls be?
So good morning, Lima. Yes, definitely. I think so the mood seems to be getting some bit of a change after the announcement of rationalizations and GST rates. I think so that seems to be pumping up the market on the higher side. Going forward, yes, some bit of a resistance seems to be visible at 25,000, but eventually we expect, I think so, Nifty to look for 25,300 in the coming weeks. So yes, it's something a buy on dips market by 24,700 to 24,600 remains to be the very strong support. And if you look overall, I think so the market breadth also seems to be on the better side compared to the last week. So yes, things looks positive going forward. It looks like we are made with the bottom, and most of the negative news seems to be getting factored in terms of US tariff developments. It looks like, I think so, 24,200, 300 looks to be the bottom for the market, and we should be looking for much higher targets. But in the initial terms, I think so we should be looking for a target of 25,300 as far as Nifty is concerned. Coming to stocks, yes, definitely auto as an index seems to be gaining the momentum after the news of GST rates coming down in the coming month where the meeting is expected. So yes, index seems to be witnessing a head and shoulder breakout. And after the 10 months of consolidation among the auto space, it looks like, I think so, auto ancillary also looks to be major beneficiaries of the all, where Apollo Tyres remains to be a top pick. Now again, the stock seems to be witnessing a breakout from the falling trend line of 11 months of corrective phase, supported by strong volumes and strong base near the 100-day EMA. Looks like Apollo Tyres should be looking for a target of around 519, giving a stop loss of 419. Apart from Apollo Tyres, again, second stock which we like is the PSU Banking Index. Again, index seems to be relatively outperforming in this current corrective phase. We expect PSU Bank Index should see witness a breakout above 7,300 and should be look for a target from 7,700 to 7,800. Inside the PSU Banking Index, Bank of Baroda remains to be a top pick. Again, Bank of Baroda seems to be witnessing a triangle breakout supported by strong support at 200-day EMA. It looks like Bank of Baroda can be looked for a target from 265, keeping a stop loss of 234.
Okay, Dharmesh, thank you so much for joining us on the show this morning and talking to us about individual stocks as well as the market. But let's shift focus to our special segment where we will get you a few ideas from profit from Money Control Pro. Khushbu Rai Gupta of moneycontrol.com joins us now to talk to us about the stock that she has been tracking closely. Khushbu?
In today's idea for profit, we have Nestle India. The company saw above average growth in the coffee business led by the market-leading brands such as Nescafe. Another product segment where Nestle remains a dominant player is the noodles category led by the brand Maggi. The flagship brand saw consistent growth despite higher competitive intensity in the June quarter. The stock corrected following the announcement of the quarterly result due to the consistently weak margins. However, we feel that easing cost pressure and urban demand revival should aid companies' growth in the coming quarters. Nestle is also focusing on strengthening and protecting its high-margin milk and nutrition business, which contribute more than 40% to the domestic sales. The company is also investing into new growth businesses which will drive the business scale. We believe that Nestle is a good play on the packaged food business, and it will be one of the key beneficiaries of the urban demand revival given the consumption boost.
Okay, that's Nestle for you. Get into a break. On the other side, we'll get you stock-specific action. Stay tuned for that. Welcome back. You're watching Chartbusters. We have the entire research team to talk about the big buzzers in today's trade, and the big one, of course, is Nazara and Delta Corp. Vinny.
Absolutely. We're keeping an eye on both these stocks today. Now, Nazara Tech obviously seeing a sharper fall. Delta Corp has recovered from the day's lowest point. Why are these stocks in focus? The government is likely to be banning that online gaming, especially involving real money. Now, obviously, there was a draft bill that was passed yesterday, and this is going to be picked up in the tabled in the parliament today. So we'll watch out for those updates. But as of now, let's talk about Nazara Technologies first. The real gaming money exposure that they have invested in PokerBaazi, which is where the investment comes in. Currently, they have around 46% investment here. Now, the net revenue of PokerBaazi was around 191 crores. This revenue, as of now, is not included in the total revenue of the business, right? It's an associate company, so that inclusion is not coming in. Now, the management, when they spoke to CNBC, they said that as of now in Q1, there was no exposure, no impact on the revenue. Also, in terms of the losses, that comes in as a loss from associates. So that is what is the impact that comes in, maybe on profitability. But otherwise, on the revenue front, there's no impact. But the risk comes in terms of the investment that they've made in Pokerbazi, right, of 800 crores. So that is where the risk comes in, where they may have to write off if this bill is passed or how it goes forward. So that concern comes in on the risk of investment that they've made. Now, other than that, there is obviously a 250 crore investment that they're looking to make through the CCPs as well, convertible commercial paper, convertible equities that will be there of 250 crores. So that also something that comes in, but that is not due for the next 2 to 3 years. And the company has a very diversified business, right? 80% of their business comes in from international market. They're looking at more acquisitions as well. So they're not too worried about this. But yes, the risk of this investment is something that they're watching out for. And just a word on Delta Corp, they also have very minimal exposure to this real money gaming right now because they had, exited most of their part of the business of this online gaming business in 2024 itself. So now they have an indirect exposure through around 5% stake that they continue to hold in that Delta Tech Gaming. So not much of a worry there. Okay, but on that note, let's move on and talk about the next stock that's in focus as well. We have HAL that we're keeping an eye out on, as well as sources are indicating that the Cabinet Committee on Security has approved the purchase of 97 LCA Mark 1A fighter jets, and this is worth around 62,000 crores. What more are the details? What will it mean for HAL? Ria is joining for that.
Well, yes, Vinny, as you said, the CCS has reportedly cleared the purchase of the 97 LCA Mark 1A aircrafts. The order value is expected at about rupees 62,000 crores. The deliveries are expected to start taking place from the second year of the contract, and around 20 jets are expected to be delivered each year. Now, this new order is in addition to the existing contract of the 83 LCA Mark 1A aircrafts that was signed in February of 2021, and the current order book of the total 180 LCA aircrafts now stands at about rupees 1.1 lakh crores, and the current delivery schedule for the existing 83 aircrafts, that in terms of that, the company is expecting to deliver 12 aircrafts in FY26. Now, with this new order, the total order book for HAL is estimated to be over rupees 2.5 lakh crores, and with this, they have already achieved the target that they had set for FY26. The order book target was about rupees 2.5 to 2.6 lakh crores, so they've already achieved it well before the end of the second quarter of this fiscal. At the end of FY25, the company had also said that they have an order pipeline of over rupees 1 lakh crores. This is including these 97 LCAs that we're talking about, and this is expected to materialize over the next 1 to 2 years. So a big order coming in for HAL, and the stock is resultantly higher in today's session.
Thank you very much for that. Let's now turn our attention to these big tech platform companies. Food delivery majors Swiggy and Eternal stocks are buzzing. There is a bullish note coming in from DAM Capital. Hormus joins in with the key takeaways.
A bullish note indeed, and DAM Capital has initiated coverage on both Eternal and Swiggy with a buy recommendation. For Eternal, they have a price target of 400 rupees. For Swiggy, they have a target of 515. So that comes up to around a 26% upside for Eternal and a 30% upside for Swiggy. Now, what DAM Capital says is that both of their food delivery businesses, both for Eternal and for Swiggy, have matured, and as a result of which, over the next 3 years, they are expecting improved margins and free cash flows being generated from this business, which will then in turn be able to fund their quick commerce operations, which they are doubling down on currently. Now, Eternal has already turned PAT profitable, but for Swiggy, they are expecting PAT profitability to come in FY28. But for the quick commerce verticals, Blinkit, which is Eternal's quick commerce business, could turn EBITDA profitable by the fourth quarter of this year, while for Swiggy, which is Instamart, that will turn EBITDA positive by the fourth quarter of FY28 is what DAM Capital is projecting. And based on this, they are expecting around about a 42% revenue growth for Eternal and around about a 28% for Swiggy over FY25 to 28. So Eternal is already at a record high, but Swiggy, though, is far away from its post-listing high, which was 617 rupees. Even DAM Capital's price target is well below those levels, but still projecting a 30% upside for both of these names.
Okay, Hormas, thank you so much for that. Keeping an eye out on Eternal and Swiggy as well. But let's talk about the market, right? Again, back to the 25,000 mark Nifty. Now, the problem is that in the last 3 days, we've seen that it doesn't sustain. Every time it reaches 25,000, again, it sees a fallback. And that is what we're seeing right now, also seems like. But flip-flopping at 25,000 and around that level, but very flat in today's trading session, though recovered from the day's lowest point because we opened up much lower at around 24,920, 930 levels. So considerably a 70-80 point recovery from the day's lowest point is what we're seeing for the markets as of now. Other than that, Bank Nifty today continues to be a bit under pressure, down 0.4%. IT, that's the one that's buzzing in trade. Top sectoral gainer there, that's holding on to gains of almost 1.5%.
This comes after a long period of underperformance for, Nifty IT. Nifty IT is down 18% from the start of the year. So some money is just getting moved back into an underperforming sector today. No news per se.
No news per se, but I think it deserves the merit as well because, right, it's been underperforming like you're mentioning. So that is what we'll be keeping an eye out on. The broader end of the market also, muted day of trade, nothing exciting. But keep an eye out on Ola Electric. That's buzzing in trade today, 12% uptick as of now. Other than that, we have Godfrey Phillips. That's managing to hold on to strong gains of 11% as well. So those are some of the movers that we're watching out for. And specifically, in the last 30 minutes or an hour that we're seeing, we've seen Coromandel Universal, that is also seeing a bit of an uptick, as well as First Cry. That is also seeing an uptick in the last 1 hour. But with that, we're going to wind down this edition of Chartbusters and CNBC-TV18. Thank you so much for tuning in. Up next, you have Trading Hour.
Hello to another episode of Market Masters. I'm Prashant Nair, and with me, my colleague Nigel D'Souza. We're honored today to be joined by investment legend Ramdeo Agarwal, chairman and co-founder of Motilal Oswal Financial Services. He's here with us in the studios. He is, I think, without doubt, one of the sharpest minds in Indian equity markets and a voice that has shaped how millions invest. In this episode, we turn our spotlight to two very, very important topics. Nigel.
Well, that's right. First, the sweeping GST reforms announced by the Prime Minister, which promised to transform India's financial landscape by streamlining indirect taxation, boosting compliance and unlocking new avenues for economic growth. Second, we dive into Ramdev's view on markets' current outlook, including the keen interest in emerging sectors like the quick commerce sector.
Well, absolutely. And I think we're going to divide it neatly into two parts. And it's going to be, of course, markets in focus. Ramdevji, thank you very much for joining us.
Very good morning.
And you were joking that probably the first time that you were on time in the studios. Otherwise,
yes. Every time I used to be stuck somewhere, but first time because the traffic is so
all this
small.
rain and...
There is no traffic actually. So you don't face the Worli Naka blockade and all. Straight we drove through.
The market is facing lots of headwinds though, right? Lots of traffic.
No, you're almost close to 4-5% below all-time high. What more can you ask for? Okay, we may not be the best market for the current year globally, but on 3-4 years basis, I think we are the best markets.
Right.
And who knows about the next 6 months? We might be the best market.
It's absolutely possible.
Yeah.
Because we've not done anything compared to other markets over the last 6-7 months. So maybe near-term road ahead is better. But, you know, what is driving markets right in the very near term, let's just address that, is the Prime Minister's promise that he's going to tackle GST reform in a big way.
Yeah.
Also next generation reforms.
Yes.
There was that meeting which happened with economists, etc. I'm told it's the first meeting by the Cabinet Committee on Economic Affairs with the Niti Aayog, top economists, etc. The last meeting happened in July of 2020. This is after 5 years this meeting has happened. And I spoke to a bunch of people who attended that meeting and they said, well, the intent seems to be there. So let's just address both things. One, on the GST front, what you think, I mean, you know, will the simplification of, what are you looking for? What will really drive, you know, businesses in a sustainable way?
Yeah. So what will happen in October, November, December as a Diwali dhamaka and all as promised by our beloved Prime Minister. So that's one thing, you know, whatever comes through. But actual opportunity is massive. Okay, we are against the wall. Our local economy is slowing down. If you look at, I mean, various high frequency, including GST itself, collection 1-2% kind of a net collection growth, your corporate direct tax collection, housing loan growth, which is crazy thing. I mean, this country is without houses, and that has grown at about 2-3% only. So clearly, we are in a slowdown mode. And see, the world respects the growth. And today, trade has taken over even politics. I mean, what is the strength of US today? They're the largest consuming country. And that's why the whole world is trying to sign anything to access that market. Because it's a $25-30 trillion market. Okay, so how do I become very attractive market? Now, overnight, I cannot become from 4 to 10 trillion. It takes time. But the growth pace, you know, this is a story of the country. So that should not slow down. I must keep growing at about 6.5%, 7, 8% relentlessly without break. The power of compounding comes when you don't break the compounding.
Correct.
You cannot do for 5 years, say, 3% and then suddenly 2 years for 10%. That doesn't work because the compounding is much lower. So the real thing is, and the mechanics of doing that, of course, our policymakers, our fiscal, monetary regulators, they all understand this. They're brilliant guys. So I'm sure this opportunity in the slowdown, we are against the wall. We have to come out. Now we should not do incremental changes. This is an opportunity to do real clean sweep.
Yeah.
Brilliantly, we have executed GST with all the complications, and we have got this collection. We have brought entire real estate, RERA and all. So a lot of reforms have happened. IBD has happened. Now this is a time against the backdrop slowdown to really, in a very comprehensive fashion, do the reform in such a way.
You know, we'll break it into two parts. But on GST, when you say clean sweep, I mean, when GST was introduced in 2017, the idea behind it was to keep a low enough rate, keep it simple, and that will lead to tax buoyancy, right?
No, I think at that time, if I understand correctly, they tried to copy whatever was the collection happening at that point of time. Say, if I'm paying 28% in cement, let me charge 28%. And
no, I'm saying the idea of GST,
of course.
What was implemented, of course. And then it got further complicated over the last 5 years.
No, not complicated. See, see, first was the transition from the old system to the new system, which has happened. So that is a one generation reform itself. Now, second generation reform is how do you make as a tool of development? GST to be a tool of development. How do you actually...
So specifically with GST, what do you think should be done? When you say clean sweep?
As simple as possible. Like
should go back to the idea, which was to be...
Yes. So 515, why 518? You know, got to see, there will be one-time revenue loss of some 50,000, 0.5% here and there, 0.5% of GDP per se. But one-time revenue loss will give you buoyancy for the decades to come. So this will actually, see, look at any industry. You have to make the taxation in such a way, particularly indirect taxes, where the avoidance is far more expensive compared to the tax rate itself. If my avoidance cost is 5%, tax is 18, there will be wholesale avoidance. I met one revenue official, IS officer, he told me that the moment you made it to 12 lakhs, it is such a brilliant thing. All the small traders, those who file marginal return, they will now file for, instead for 6 lakhs, they will file for 9-10 lakhs. So much more will come into the system. So this is how it is going to happen. That if you keep bringing down this thing, you will encourage consumption, and consumption will give higher taxes. I am not for lower taxes. I am for actually collection of higher taxes at lower rates.
You're saying time for tinkering is done?
Yes.
Gone?
Yes.
It has to be...
Actually, it should be a shock. And in fact, I'm still skeptical of what will come, knowing the past track record of what comes. But this is an opportunity for our government to surprise people.
Hi, Mr. Agarwal. Good to have you in the studio. And initial comments, you said India is back against the wall, but we perform best when the back is against the wall. And now we have these measures that are coming in there. Yes. And I think you're hinting that you're batting for 5% and 15% rather than the 5 and the 18%. That would be better.
Yeah, that's my sense. It looks nice,
yes.
5 and 15.
Okay. All right. So you think the GST reforms will be enough to spur that consumption growth that we are looking forward to? First half of the year has been very soft, maybe softer than most estimates. But with this tinkering, do you think it's enough to get us on our way? Monsoon's going to be pretty okay. We have festive season that is early as well. And now you have this GST rationalization. Good enough?
Yeah. So, Nigel, we need Lollapalooza effect. What is Lollapalooza effect? When you work from every possible way. You work on the regulations. All the regulators. They should open up the gates because they don't have taxation power, but they have massive regulatory power, and that can do a lot of wonders. All kinds of deregulation. Why should government come on the way of doing businesses? You must worship the businesses, particularly the ones which are clean. So how do I make ease of doing business absolutely the first this thing? But coming to the taxation, this will go big way. See, because I'm a poor country. Let's not forget we are not a rich country. My masses who can consume doesn't have much purchasing power in the hand. Now, the guys who are limited purchasing power, you tax them at 18-20% for the consumption goods. Or maybe a lot of things are not taxed only, which is also wrong. A lot of zero tax is also wrong. You got to bring them to 5%.
Right.
Okay. But the guys who actually have money like you and me, we are being taxed like at 28, 40, 50%. Boss, do you want to punish me? That's the objective. Or do you want to collect more taxes? You bring it down to 15 or 18%, you see the level of consumption will come from the people who can consume.
Yeah.
Let's see the guys who can consume. See, it's only top 20-25% people can consume. But if you tax them, if you make their $1 earnings,
consumption will...
Prashant, $1 earning of my guy buys nothing here. Compared to you go to Dubai, you go to US, it buys tons of things. So we have to make sure that a dollar spent in India buys maximum. In services, it buys maximum. That's why we are king of service exports. Like that, in manufacturing, you go to China, you look at Chinese toys. For $400-500, the kind of toys they deliver you at home is crazy. It's not that they're making losses. The issue is that how do you, see, by giving some tax concessions and all, you are doing nothing. You are actually getting the scale economics. As you get a scale, you are able to afford very low rates. I'm coming from an industry which has seen the most stupendous growth anywhere in the world. Forget about India. We started in 87. That time the total turnover in Bombay Stock Exchange was 200 crores per day. How many brokers? 500 brokers. Okay? And they were settling, and what is the brokerage rate? 1.5 to 2%. I used to charge 1.5, but the general rate was about 2%. So 1.5, 2%, 200 crores turnover, T plus 15 settlement. And everybody used to labor how to settle it. Today, it is 400 lakh crores turnover, 400 lakh crore daily turnover, and T plus 1 settlement. Market is completely safe. And look at the GST collection.
Yeah.
70, I think 60, 70,000 crores of, what is, not GST, what is it, they call it? Securities transaction, STT collection.
STT, yeah.
60, 70,000 crores.
So
that is possible because my brokerage rate is not 2%. Now it is 0.0,
yeah.
1 or 2 basis point or even 0.
Yeah. Let's break it down and we'll sort of come to market specifically. But GST, if what you're skeptical, as you said, and we should be given, I mean, how it has happened, but the time to do it is now.
Yeah.
If this were to happen, right?
Yeah.
What you're imagining, which is real simplification and not tinkering.
Yeah.
Where will this show up in a big way? Sectors?
See, in the manufacturing, where exactly it will show up is in manufacturing. Because if you keep it 18, then services are more or less at 18. So there, I don't see much of change. But in manufacturing, and of that 40-50% is automotive. Now, if you now you should not do tinkering. What I mean tinkering is that motorcycle will be at, 100cc will be below this, 150cc will be there. I think they should not do that. They must bring down the whole
Hotel
damn
rooms
thing.
days and the famous that...
Yeah, so 5,000 rupees to that.
Yeah.
Keep it simple. Just bring it down. Bring it down to the level that even the associations will not
So
demand.
you're saying autos perhaps?
Prashant,
Yeah.
I think the simplification is important. That if you have one rate for low rate for anything, you'll get much more compliance and much more collection. I'm telling you very clearly, I'm for higher taxes, higher amount of tax collection, but at lower rate.
Right.
So we got to play that gamble, and it will happen. And evasion will stop, compliance will increase, and in any case, consumption will spur because my income is not going down.
Yeah, no, absolutely.
So what are you saying?
No, I wanted to ask you where it will show up. You're saying auto as a manufacturing and within that autos.
Cement is 28%.
Yeah.
That will immediately come down to 18.
Yeah.
Okay, then auto, which is at 28 plus, will come down to 18. It will actually look at, this country, what level of penetration you have. You sell some 3 lakh, 4 lakh cars. You sell some 15, 17 million motorcycle. What is the penetration level? I think total penetration of even the motorcycle, 10 years included, will not be more than 20-25%. It should be at least 60-70%. There's so much to do in motorcycle itself. And why we are competitive in exporting to the world? If you want to become actually competitive exporters, it will happen if you have the most competitive domestic market. So you can't, where is my tourism? Yeah. Nowhere. Because my holidaying cost is so expensive, 50-60,000 bucks for a room night. You go to Phuket and all these places for 5-10,000 bucks.
Makes us across the board more competitive.
Yeah.
Absolutely. Ramdevji, stay with us. We're going to take a quick commercial break here.
Yeah.
We'll come back and we'll do 2 more things. One, we have to ask you about markets, and quick commerce is, I think, a favorite theme of yours.
धमाका होने वाला है.
But आपको GST के अलावा और क्या करना चाहिए वो बात करेंगे. Let's just take a quick commercial break here. So we continue the conversation here with Ramdev Agarwal.
Welcome back. We are in this special conversation, Mr. Ramdev Agarwal, Chairman and Co-founder at Motilal Oswal. Well, Mr. Agarwal, I wanted to ask you about the markets. Everyone's been talking about India underperforming, right, in the last 1 year, and various factors. Earnings have been great, economy has been a little bit soft. Do you think from here on, for the next 12 months or so, investors should brace for, say, mid-teen returns on the Nifty itself? Because a lot of investors out there, they're showing the money, but last 1 year, no returns on the headline index. Individual stocks far lower. Yes, sir.
But see, investing is not about 1 year. Why you are so much focused on 1 year?
Right.
I mean, if you look at last 5 years, stock post-COVID has gone from 9,000 index to 25,000. It is almost 23-24% kind of compounded return. And that's why you're seeing actually investors are not looking at 1 year. They're looking a little longer term.
So we took a bit of a break. We had a good sprint.
See, what is the kind of a DI buying? If you look at the yearly basis, they buy 5.5 lakh crores. And I'm telling you, we'll be heading for 6-7 lakh crores in the next 12 months. So the flow is much, much stronger.
Solid.
And now with the lower savings rate, I think the attraction of the markets will become even more. At say 5, I always call it 5 and 15. At 5% in savings rate, post-tax, okay, it gives you 15 years doubler. At 15% post-tax in equity, it gives you 5 years doubler. Whether you want to double your money in 5 years or 15 years, that's your call. So now this is definitely getting into the head, and with the digital distribution, payment, and all kinds of digital revolution in India, now we have 202 million people as of last month. So I'm sure we are headed for at least 500 million customers in the next 5 years. So this is the biggest reform or development or tailwind which is happening in the economy. So yes, markets will do well, but provided there is a earnings growth, and that's why this GST thing comes in picture. So without earnings growth, you can keep dumping money after money, and that will also slow down. If it doesn't, markets will do, because you are at 22p multiple. Kitna khich loge usko aap?
So earnings need to show up.
So earnings needs to come. Earnings will come only if you have right kind of impetus for the demand.
Yeah.
In a country like ours, where demand-driven capex happens. See, because capex is expensive here, money is expensive here. So a capex will happen only if there is a demand.
Correct.
So you can't get a private capex unless there is a demand. And if there is a demand, the world will pour money, I'm telling you. You don't have to ask about it. That's why GST is very important. You increase the demand, capitalists will take care of it.
Okay. All right. Sir, I wanted to ask you about one of your themes that you've been very, very bullish on, the quick commerce space. Out there, you've got investments in Eternal, Swiggy, as well as Zepto. And that now it's gradually playing out. Some believe that maybe Eternal at more than 3 lakh crore market capitalization is getting expensive. But others believe that maybe the story is just starting. Do you think these companies, Eternal, for example, can become like maybe the Max 7? Do you think there's tremendous potential even after the big rally that we have seen?
Yeah, it's because see, it is about, it looks simple, but it has changed the way we consume our goods and services. So there are two aspects. One is whatever is the consumption today, say grocery you're buying offline from your corner store and all, so that you buy online. So that shift is what is right now we're talking about. But second is foregone conclusion by people like you and me. There are a whole lot of consumptions don't happen because you have to put up your pant and go to buy the stuff. Who the hell is going to go? In the night, who buys Maggie at 12 o'clock in the night? In my building, most of the deliveries happen in the night at 12. All the kids, they call for Maggie and all kinds of exotic stuff, pizza and all. So clearly, if they have to pick up a car and go to buy that would not happen. So there are a whole lot of consumption in India. They were foregone, not lack of purchasing power, but lack of delivery or lack of say, reach, access. So now they have provided access. So the biggest thing is, one is the consumer habit change, and second is the massive provision of very swift and very affordable access.
Yeah, did you see that, Ramdev, you're an investor in Zepto, one of the larger investors. They've tied up with the house of Abhinandan Lodha. So you can add for land.
Their house?
For land.
What? Land they'll deliver?
I mean, not deliver, but I mean, I think you can add some, I mean, there's some way to not transact land, but apparently you can, land is available. You can check out land and maybe, I don't know.
Once the land records are digitized, I think 90% digitized. I mean, maybe not concerned with this quick commerce, but it is another revolution in itself.
Yeah. You think markets back to by the way, I know that you don't look at charts yourself, but you'll follow technical, analysts, etc. as well.
Yeah.
A few at least. We had Lawrence Belanco earlier with us. He was saying Nifty new highs by the end of the year. That's his call. What is your sense?
यार अभी तो जितना हाई हुआ वो that is of last 10, 20, 30 years.
Yeah.
We are going to see many highs. Forget about one high. मतलब आपको मान लो 26,200 ऐसा कुछ हुआ था ना all time high.
Correct.
If you cross that 26,200, अरे if not this year, next year it will cross. Not only it will cross, it will go to 28, 29,000. It will go to 30,000. Then it will go to 40,000. Then it will go to 50,000. In next 5 years, if it has to go from 25 to 50,000, how many highs they are going to do? Every day you'll keep calling it new high.
Of course,
that scares people off. See what happens. I find it very funny. If it goes to 26,300, you call it new high, and the whole lot of guys they say, "Oh, it is very expensive because it's new high." Boss,
but 1 minute, it will earn. But all of this is obviously contingent on earnings coming back. Earnings have to come back, right? It has to be a fix.
आएगा, कैसे भी आएगा.
But I just wanted to ask you one more thing, because there is a lot of geo-economic kind of thing also going on. You started by saying backs against the wall.
Yeah.
Was that only a reference to the domestic slowdown, or was that also a reference to US India?
Both. US India. See, the way the world is changing, for whatever reason, the world is changing to become much more mercantile. It is no more philosophy-based kind of I'm a capitalist country, I'm a socialist country, I'm this friend, that friend, boss. Only it's trade. Okay. And so I have to become in fact, the smaller countries, they have no option now.
Right.
Multilateral, if you're a poor country, you had an option to negotiate.
You're grouping.
You're grouping the entire small countries and poor countries, they're getting preferential access into the EU market. And today, everybody is negotiating my access. See, if I get zero duty access for my textile, they are getting zero access or liberal access for say whiskey or whatever. So now it is a trade between one market or other.
Right.
So I see the world becoming big groups of countries. So US and this thing satellite countries, that will become one group. China, their own satellites will become one group. India has an opportunity to become the third polar, this thing, Wall Street of East, okay, and consumption center of East.
Okay.
So when you go with that kind of thing, then you start doing the right things. So that I cannot be growing at 6.5% and my manufacturing grows at 3.5%.
Right.
I must get at least 6.5-7% manufacturing growth. Where is it?
Right.
Just one last question, Ramdevji. I know I'm getting you from 30,000 feet to here and now. Apologies for that. But 27th is the deadline. This 25 additional 25% tariff, right? It's a bit of a near-term question. Hopefully, obviously, it can't be permanent. Eventually, it'll get negotiated down. But who knows how long it'll take, right? This entire because of the Russian oil thing, the U.S. tariffs, which is at now 50%. What do you think? I mean, is the market kind of? Market's not really reacted in any big way.
इतना कुछ नहीं होगा.
It's in the price.
No.
Mota.
See, you have more additional knowledge than me because you get.
But what is your sense?
Delhi. नहीं कुछ नहीं होगा यार ऐसा थोड़ी है. See, we definitely need more US because they are the largest. My बाप है लोग. They are 25% of the world consumption. So clearly we need them as badly, but they also need it. So I think the friendship, the strategic positioning we all have, apart from trade, is going to continue. So now how they will negotiate between our country and their country time-wise, there's so much happening in Ukraine. If that gets sorted in this week or something, then in any case that becomes an irrelevant question. But I think we have kind of paired the buying right now of oil. So a lot is happening. I don't know. But I think that may not be required to be triggered.
It may not come to pass.
Yeah.
All right. All right, Ramdevji, just very quickly, everyone talks about Hero MotoCorp, Bharti Airtel, but I think one of the biggest multi-baggers for you has been your own stock, Motilal Oswal, 56,000 crores of market capitalization. And as you always say, many have become crorepati's because of those ESOPs. Do you think it's on its way for better times? And if you have that number, how many crorepati's?
Yeah, it's about 250 to 300.
250 to 300 crorepati's because of the ESOPs.
ESOPs only, okay. Yeah. So
and it's on its way to 1 lakh crore?
Are you going to send me to jail or something?
Nandaji, we wish you all the best of luck. We are wrapping up this conversation only because we know that you have a meeting, not because would love to continue the conversation. Thank you very much for dropping by and sharing your insights with us on another edition of Market Masters. From Nigel and me, it's a wrap on this very special conversation. Stay tuned, more coming up on the other side.
Hello and welcome to Trading Hour. I'm Sonal and with me is Hormis. For the markets, it's a green looking screen. However, the gains are not as high. So Nifty sitting with a gain of around 10 points the last time I saw, 40 points, my bad. But it is above the 25,000 mark. And you know, for last 2 days, we have seen that intraday level of 25,000, but we have not been able to maintain it towards the close. At the day's high currently, actually it surged even further. So 40-point gain is what we are seeing on the Nifty currently. A lot of moving parts in the Nifty pack as well, which we'll discuss in greater detail. Nifty IT, the defensive, which has been under pressure in last couple of trading sessions, is the one which is supporting Nifty today. So that one at the day's high, 1.6% higher. FMCG names are doing really well. Realty continues to be an outperformer, and that's something we can see in the gains that we've seen over the last couple of trading sessions. Financials, private banking index, all of them are batting for the bears today. So Bank Nifty is down 0.3%, but mid-cap index on the other hand doing really well. So that one is up around 0.4% as we speak, has been doing well of late and has recovered from the opening lows as well. So let's get going with some buzzers that we have. Hormuz is here and he's going to put the spotlight on top movers in the market. Hormuz, tell us more.
A very impressive recovery that the broader markets have seen in today's session. So we'll start off with some of those top movers, the gaining side. And Dynamic Cables is one of them. It's of course the news flow related announcement, and that's why the stock is up 20% today. It's the biggest single day gain since the month of May. But take a look at the volumes here. 50 lakh shares have already traded compared to a 20-day average of just 90,000 shares. And interestingly, every single year from 2021 onwards, the stock has doubled in value, and after this move the stock has almost reversed all of its losses of 2025 and nearly turned positive Y today. And now Ikeo Lighting is the other one. Now this stock listed in 2023, and this is the biggest single day gain that it has seen since its listing, a 20% move here as well. Then here we have seen 33 lakh shares changing hands in the first couple of hours of the trading session compared to a 20-day average of just 23,000 shares. Now despite this move, the stock is still down 4% for the year and remains below its IPO price, which is around 280 rupees. Now what is also remaining below its IPO price is Ola Electric, but the moves over the last 2 days have grabbed headlines, up over 20% now in the last 2 sessions, up another 13% today. We've already had 50 crore shares that have changed hands in the first 2 hours of the trading session, which is 90% of Tuesday's volume, which was already on the higher side. And incidentally, it was today's day, the 20th of August of 2024, that the stock had made a post-listing high of 157 and had declined since then. And last one on the list is Carborundum Universal. That has seen a very strong one-way up move in the last few minutes, 10% higher on the stock now. This is the biggest single day gain since June of 2022. We've had 7.5 lakh shares already change hands compared to a 20-day average of just 50,000 shares. And as a result of this move, the stock has broken above its 50-day moving average, but has remained an underperformer so far this year, still down 26% on a year-to-date basis.
All right, take that point. Some interesting names there. Thank you so much, Hormuz, for joining us as always. Let's go across to Aditya Agrawal now. He's joining from Invest for Edu for a quick technical check on the markets. Aditya, do you think today will be the day we'll, end above the 25,000 mark? What are the charts suggesting?
Morning, Sonal. Thanks for having me on the show. Looks like a very high likelihood we'll cross 25,000 mark. Look at the open interest build up on the 25,000 strike put. That tells me that 25,000 is slowly getting a base is forming around 25,000 mark. And my sense is towards the second half of the trading session, we might see a further up move in the market closer to about 25,200 on the Nifty. The only joker in the pack is the Bank Nifty, which has been clearly underperforming. And because we know financials are a bit heavyweight on the index, we need a bit of participation from the Bank Nifty as well. So 55,800 is something that I'm eyeing on the Bank Nifty. Once that is taken out, my sense is Bank Nifty too will see a good short covering rally, at least in levels of 56,200, 56,500 on the upside. Overall, my sense is Nifty should stay afloat that mark of 25,000. And you can see a move towards 25,200 in a day or two by tomorrow, which is the expiry day.
Aditya, morning. What about specific stocks?
Morning, Hormuz. A couple of stocks, one from the FMCG space, because clearly FMCG staples are doing extremely well for themselves. And my sense is they will likely to continue with their up move. So Marico is something which is looking very interesting. Stock has broken out into an all-time high territory at current levels. There's more room on the upside, so at current levels, I'll recommend a long position in Marico for a target of 765 on the upside with a stop loss at 730 on the downside. The second stock is Tata Steel. Again, metals are looking interesting and they're seeing higher highs, higher lows again. So Tata Steel is also on my buy recommendation list for a target of 170 on the upside. Place a stop loss around 156 on the downside.
All right, take that point. Thank you so much for joining us. So those are some technical trades coming in from our technical analyst. Moving on and talking about specific stocks, because there are a lot of buzzes on the back of news updates. HAL is one of them. It has gained in trade today, up 1.5%. Sources indicate the Cabinet Committee on Security has approved purchase of some fighter jets. The amount is big as well. Ria is bringing us more details on this one.
Well, yes, as you said, the CCS has reportedly cleared the purchase of the 97 LCA Mark 1A aircrafts. The estimated order value for this is about rupees 62,000 crores. Deliveries are expected to take place from the second year of the contract, with about 20 jets to be delivered annually. Now, this new order is in addition to the existing contract of the 83 LCA Mark 1A aircrafts that was signed in February of 2021 and that the company is currently executing. The current order book of the total 180 units of these LCA aircrafts is now at about rupees 1.1 lakh crores. Now, in terms of the delivery schedule for the existing 83 aircrafts, the company is expecting to deliver about 12 aircrafts in FY26, and with this new order coming in, HAL's current the total order book is estimated to be over rupees 2.5 lakh crores, and this is important because the company has now achieved its FY26 guidance of order book guidance of 2.5 to 2.6 lakh crores. Now, at the end of FY25, the company had also said that they have a very healthy order pipeline of over rupees 1 lakh crores. This is including the 97 LCAs that we're talking about, and this is expected to materialize over the next 1 to 2 years. So, big order coming in for HAL, and the stock is resultantly higher in today's session.
Indeed, Rhea, thank you for that update. A big order coming likely for HAL, and the stock now doing well off the highs of the day, still 1.5% higher on the stock at 45.15. Take a short break. Up next, we get you the latest from the F&O space, especially because the market has moved to the highest point of the day. Sudarshan will join in on the other side. Stay tuned. Welcome back. 40 points higher on the index, above the mark of 25,000. But the question is, will that sustain? What are the trends from the FNO space currently? Sudarshan is here with a lowdown of all of that. Sudarshan.
So it's the third day in a row that we are seeing a fight going on between put and call option writers to protect the level of 25,000. For now, Nifty is ahead of above 25,000. The support today is coming from two sectors. First one is IT, where you can see that big buying is seen in stocks like Infosys and Tech Mahindra. Even FMCG stocks like HUL, Nestle are seeing buying. Now, if you take a look at the PCI, it's at the same level that we saw yesterday. Even there is not much move in volatility index. But the interesting data is coming from the options front. On the put side, two options, if you take a look, 24,900 and 25,000. There is a big option build up ahead of weekly expiry tomorrow. And premium for both has come down. So what it indicates that sellers believe that Nifty is likely to expire in the range of 24,900 to 25,000. On the call side, if you take a look, 25,000 call and 25,100 call options have seen premium move higher. So comfortably, as of now, Nifty is looking to expire in the range of 24,900 to 25,000. So support will remain around 24,900. That is the immediate support. If we slip below that, next support comes around 24,760. Resistance is now has moved higher to 25,150, but it depends on that if Nifty manages to hold on to levels above 25,000. I have taken two stocks. PG Electroplast has come out of FNO ban, and today it's seeing fresh longs, and second one is SJVN, that is also seeing fresh longs.
Oh, yes, that big number, 25,000. Whether we continue to stay above that or not through the course of the trading day is the big question. Thank you so much, Sudarshan, for joining us and getting us all the trends from the FNO space. We'll slip into a short break now. When we come back, we'll talk about the big story, the online money gaming sector on the other side. Stay tuned. Welcome back. You're still tuned into Trading Hour, and this is our special segment, The Big Story. We focus on stocks which are moving markets today. Nazara Tech, Delta Corp, they are under pressure. So let's talk about that in greater detail. Winnie is here to tell us why. Winnie, let's start with the news first up.
Absolutely. So let's talk about what happened, right? Yesterday we heard that there's going to be a bill, a draft bill that's going to be coming in, and that's going to be on online gaming bill, which is for real money games. So where you're actually spending money on poker games, online games, that's where the ban will come in from the government. Now this proposition will be tabled in the parliament today. What is it proposing? One, the ban will come in for these online gaming apps. And other than that, there'll be a proposition to stop and prohibit advertisements for this as well, for real money games. Banks also will be barred from processing the funds for real money games. So that is the main news that is coming in and becomes a risk for all the companies that are in this business. So whether you look at Dream 11, MPL, and the listed place, obviously Nazara Tech as well as Delta Corp.
So in that case, Vinny, the company has mentioned that they do not have any contribution from this coming into their top line or their bottom line. So, but they have an investment indeed. So is that investment at the risk of a write-off? What are the implications there?
So there will be a risk, right? Even though right now there's no revenue, because they have a 46% investment that comes in Pokerbazi, that's Moonshine Technologies, where they made their investment. That was around an 800 crore investment that they made. That was an equity investment. Plus they have a 250 crores of CCP. So that is convertible equity in the next 2-3 years. So that becomes a risk now. When we look at it in terms of revenue, Pokerbazi has been growing very well. Strong growth, 54% growth in the last year, Q1, when you're looking at it on a year-on-year basis. Now, overall, for the company, like you mentioned as well, right, this will become a risk of write-off that could come in for 800 crores. Though right now the management is like, this is too early, but that is a big concern that will come in for them. Management is saying that, they are now going to be focusing more in terms of doubling down their investments coming in for their core gaming and IP-led investment. So that is what their focus will be on, making more acquisitions on that front, and larger acquisitions, maybe in the range of 700 crores, approximately in that 500-700 crore range. But this acquisition or this investment of 46% will become a concern if this is actually a ban that comes in the bill as well.
Explains the cut that we are seeing on the stock as well, 6.5% there. But that's about Nazara Technology. How does it impact Delta Corp overall?
So Delta Corp, they did have this investment in online gaming. Now, thank their stars maybe, because they actually got out of that online gaming business in 2024-2025. They sold most of their stake coming in. So in Q4 FY25, we had seen those exceptional gains that came in because they sold that business. And that business was sold to Head Digital Works for around 491 crores. Now that was in 2024-2025. Now they only hold 5.7% stake just to keep their feet in this online gaming business. Because, online gaming business has been facing a lot of issues in the past as well, right? Whether you talk about GST side, restrictions that come in from the government front. So Delta Corp played it safe. They got out of the business, now just a 5% stake. So that is why, after that fall in the morning, we saw that recovery coming in. Holding on to some bit of a gain right now is what Delta Corp is doing.
Recovery from the lows of the day for Delta Corp, 3.25% higher on that stock. Vinny, thank you for putting things into perspective and summarizing the big story of the day with this online money gaming ban. Two sides of the spectrum here. Nazara down 6.75%. Delta Corp recovering from the day's low, trading with gains of over 3%. Take a short break. On the other side, we put the focus on the crypto market with Manisha Gupta on the other side. Welcome back. As promised, let's shift focus to the crypto space. Manisha is here with more on this. Manisha.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
On Crypto Corner today, we are talking about stable coins, which is a roughly $270 billion of a global market. Stable coins track value of traditional financial assets like fiat currency, gold, and financial instruments. Stable coins are used for crypto trading, US dollar access outside of US, and payments of goods and services, which has started to pick up quite strongly. The regulatory landscape of stable coins also have been progressing quite strongly. The US president has signed the Genius Act to create a regulatory regime for the US dollar-pegged stable coins. Well, the state of Wyoming also has launched Frontier stablecoin on Avalanche. And it's not just about US. Hong Kong has introduced regime for licensing and oversight. In addition to this list also comes in with Japan joining in. The Japan Financial Services Agency will approve the first Japanese yen-denominated stablecoin. JPYC, as it is being called, is a stablecoin that will maintain 1:1 peg with the fiat currency. This is going to be backed by liquid assets and government bonds. I want to take you through the top 5 stablecoins in the global markets at this point in time. Tether USDT is the first on my list. It's the first successful stablecoin. This is backed by mostly low-risk US Treasury bills, Bitcoin, and even gold. The second is Circle's USDC. This is pegged to the US dollar, operates on multiple blockchains, including Ethereum. The third on my list is DAI. This is decentralized stablecoin operating on Ethereum. The users can deposit different cryptocurrencies as collateral into smart contracts, which then mint DAI coins, and collateral base expanded to include USDC and even real-world assets like the US Treasury bills for that matter. And then you have Athena USDE. This is decentralized synthetic stablecoin, which operates on Ethereum blockchain. It uses arbitrage that takes advantage of the price differences between Ethereum and its financial derivatives. And the final one on my list is World Liberty Financial. This is a DeFi platform launched in 2024 by the US President Donald Trump and family. The platform's stablecoin USD1 was launched in 2025. USD1 is backed by US Treasuries, cash, and other cash equivalents on a 1:1 basis. USD1 is managed by a company called BitGo. USD1 coin operates on Ethereum, Binance, and Tron blockchains.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
All right, that's all about the crypto world. But with that, we'll wrap on this edition of Trading Hour with the news that Nifty is above the 25,000 mark. We'll keep tracking that for you. But stay tuned. Halftime report is up next.
Stocks oscillate, swinging from losses to gains in a mostly range-bound trade. IT and FMCG notch gains, while financials and auto drag.
Cabinet clears a gaming bill that calls for a ban on all online money gaming. While the bill will need to pass through Parliament and may require states' assent, the move spooks of gaming players like Nazara Tech and Delta Corp.
Sources say the cabinet has approved acquisition of 97 LCA Mark 1A fighter jets from Hindustan Aeronautics worth 62,000 crore rupees. The win will help the defence aviation major achieve its FY26 order book target of rupees 2.5 lakh crores.
After Jio moves its 1 GB plan off its online platform, Bharti Airtel follows by scrapping its 1 GB entry plan. The initiative highlights increasing data usage and raises the potential for ARPU improvement going forward. Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session which is mixed at this point in time. So we have the Nifty, which is just about higher by around 52 odd points, but the Bank Nifty is underperforming this afternoon. So down around 0.4% currently for the Bank Nifty, along with the advanced decline ratio, which is on the positive side. So that's definitely a good sign. So the broader market's doing better at this point. So mid-cap index up around 0.4%, the advanced decline ratio in positive terrain. But just to watch out for that, because we do have a lot of news which is expected in the next couple of days, you'd say, for this entire week. We do have the Jackson Hole Summit, which kicks off today. And separately, we do have the RBI minutes, which are due today as well. So maybe a lot of focus on the macros in the next couple of trading sessions. But as of now, stock-specific news continues. We have defense, we have telecom, we have the online gaming issue. A lot to reckon with in the next 1 hour.
Absolutely, a lot to talk about in the next 1 hour, and a mixed day, like you're saying, is coming in. And look at IT, I think that's interesting because after that underperformance, finally IT is seeing a very good move in today's trading session. Nifty IT managing to hold on to gains of almost more than 2%. And obviously, this is going to be led by gains that are coming in for whether you look at Infosys, Emphasis, LTI, Mindtree, all of them managing to hold on to very, very strong gains. Apart from that, we're seeing FMCG players. That is also something that is buzzing away in today's trading session. A lot of moves in terms of volumes that are coming in for Ola Electric. Eternal, we have a brokerage note that's coming there as well. But let's shift focus, and like Ekta is talking about, a lot of move that is happening on the back of news flows coming in as well. And first, we'll put the spotlight on the defense sector. Now we're joined by Jyoti Gupta, research analyst at Nirmal Bang Institutional Equities, to talk to us about the defense space. And specifically, let's talk about and start by talking about HAL as well, right? Obviously, HAL, such a big order win coming in. Jyoti, what are we watching out for now? This is just 62,000 crores order is what has come in just yesterday in terms of an announcement. How are you looking at HAL now going forward?
Thank you so much for having me here. And honestly speaking, this was anticipated.
Okay,
So we
I
were
think,
expecting.
Jyoti, you're on mute.
No, we can hear her.
Oh,
we can
okay.
hear her.
All right. Go ahead.
Good morning, and thank you so much for having me here. So you see, this order which has come was anticipated, long awaited, actually by HAL as well. So if you ask me, it's not a surprise for us at all. It should be backed by engines. So. And it doesn't really impact. We see the margins for HAL to be intact. What we see in FY25 levels at around 30%. I think the next 2 to 3 years, the margins are not going to be impacted. Will be at the same level. So across, one need to understand that for defense, I don't see a material change except for maybe a 10 basis points in margins improvement. The only factor that needs to be seen is the revenue pickup, which means execution. There shouldn't be any delays in execution and step up in execution the next 2 to 3 years. So
question only, Jyoti, because that concern on execution is where it comes in, right? So is that a point of worry maybe that we could see coming in for HAL then?
For HAL, this year we expect something like 12 engines to come. I think we should have 10 engines by February of this financial year. We already have received 3 engines, and I think maybe by mid-September we should have another 2. So where the MD should actually, the numbers in HAL should give you a surprise by almost like double-digit growth. He's anticipating 8% for FY26, but I think it should be somewhere close to 13% based on deliveries of ALH and the LCA Mark ones, which is 5 in number. I think he should exceed it by at least. He should at least deliver 7 or could actually deliver 9 LCA Mark ones this financial year. So I don't think execution now from this year onwards should be a concern. Delays for defense sector, first half is always lumpy, but third and fourth quarter would give you a surprise with revenue recognition materially improving up as most of the platforms move to the execution phase. So overall, structurally, we are positive on the entire defense sector and so on HAL as well.
Okay. Well, exactly what I wanted to narrow down on, Jyoti, was, the Prime Minister's call on the Independence Day speech also for defense self-reliance. So based on that, what are the key stocks that one should probably put in their portfolio? And what is the incremental order inflow opportunities you see coming into the defense space and the timeline as well?
So if you ask me, we have a significant order book already lying, waiting to get executed. So last year in September, you see we had something like 1.45 lakh crores of order, which is yet for DSC approval. We recently had 1.05 lakh crores now, which where the beneficiaries have already been announced. 67,000 crores, additional 64,000 crores have come for HAL. And we will continue to have, and then you have additional 34,000 crores of emergency procurement order. And there is huge order inflows from exports anyways. You look at Cochin Shipyard and GRSE, which are already having collaborations with US Navy for sea lift, and looking at Germany for the tugs and Bullard tugs, as well as the propulsion gearboxes. So a lot of export orders are already there for most of the Indian defense companies. If you ask me, the top the PSUs will be the major beneficiaries, and eventually the orders would percolate to the primes as well as to the legacy players, and eventually to the ancillaries. So overall, the defense sector for the next 3 years, it is going to do very well. All we have to see is that some would give you a higher return compared to the others, relatively compared to the other players, and companies who have not performed in the last 5 years, could be for reasons like low order book or execution delays, would actually start giving numbers in the subsequent quarters.
I wanted to narrow down on Cochin Shipyard as well, Jyoti. In their conference call, they are indicating that 14-15% growth is what they would look at in terms of sales for FY26. But if you look at it, by 2030 to 2031, they're looking to even double their revenue. So in that context, how would you approach a Cochin Shipyard? What is your target price on that? Do you think that these targets are achievable by the company?
We actually don't, it's in my soft coverage, so I don't have a target price for Cochin Shipyard. But what I see the capability that Cochin Shipyard has is, one is the aircraft carriers. It is expecting the next generation aircraft, advanced aircraft carrier order. Apart from that, if you see, they have capability of building almost like 1.1 deadweight tonnage ship, as well as repairing almost like 1.25 lakh tons deadweight tonnage of ships. So from which actually, and also the benefit that the GRSE and Cochin Shipyard both are expected to get from the Marine Development Fund, which is roughly around 70,000 crores, which is basically on shipbuilding. And that is where these two companies benefit. And so does specifically for Cochin Shipyard. So if you look at Cochin Shipyard's order, I mean, they are, as I told you, they have orders for 70 tons Bollard pull tugs from Germany. They're working on next generation missiles for Indian Navy, which is roughly around 9.8 billion, order, which they should deliver by March 2027. So I think the 14-15% growth that they're looking at is achievable. In fact, they've even signed, which I just mentioned, they've even signed a collaboration with the Master Ship Repair Agreement with the US Navy for their military sea lift command vessel, which is a very good order, a decent order for Cochin Shipyard. Overall, these numbers are quite achievable if there are no execution delays.
No execution delays. That's something that we could watch out for. But Jyoti, what are you watching out for overall in the defense pack, right? Where we have Cochin Shipyard, Garden Reach Shipbuilders, the shipbuilders companies, Masgao Dockside. Is that something that is more attractive now, or would you be playing the story through HAL, BAL, BDL, which is also very expensive in terms of valuation, especially Bharat Dynamics? So where is the value now in this defense space?
I agree. But the entire rally, if you see for stocks earlier, was based on order book. Now the rally is because of execution. It's all priced in. But there we haven't priced in and whatever, you look at the valuations, they look steep because the kind of guidance the companies have given, which is actually conservative for both 25 and 26, in fact 27 as well. I think with the kind of orders we currently have in hand and what is going to come up in the next 2 quarters, and if you again, the whole point is on execution. If there are no delays, and the kind of growth that we are expected to see for any company, it will be easily around to a higher double-digit growth, and with margins, the valuations won't actually. Then you would see that possibly there's a huge upside to every stock going forward.
Okay, just quickly before we let you go, Jyoti, on Garden Reach Shipbuilders, specifically on the Navy P-70 Bravo project, how lucrative do you think that opportunity could be?
So the P-17 is expected, it's around a 70,000 crore order. It should be divided between MDL as well as GRSE. So it is a lucrative order, and which I believe will be executed over a period of 5 years. So yeah, it'll be a major driver for margins for GRSE, definitely, because if you look at GRSE, their capabilities, they have done warships, but their main capabilities is basically 5-ton boats and roughly around 25,000 fleet tankers. So P-17 would definitely be would be a decent demand revenue driver for them.
Okay, all right, Jyoti, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So defense continues to be in focus as a sector. We need to take a short break at this point in time. The mid-cap index up around 0.4%. On the other side, we have Alap Patel, who's the executive director of HLE Glasscoat, joining in to discuss an acquisition that they've made. Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, let's talk about one particular company, HLE Glasscoat, which is in focus. It's gaining in trade today. The arm, one of its arms, has completed the acquisition of certain assets of Omira's Glasscoat, which will give it presence in countries such as Germany. We have Alap Patel, who's the Executive Director of HLE Glasscoat, to discuss this. Alap, hi. Thank you very much for taking the time out. If you could just begin by telling us about, this particular acquisition you've made, Omira's Glasscoat. You've acquired it for around 230 odd crores. What is the plan when it comes to turning around the company on the bottom line, considering that it has been loss-making as per the financials for 2023 and 2024?
Sure. Good afternoon, and first of all, thank you for having me. So yes, we acquired the assets of this company called Omira's GmbH. This acquisition was completed for an asset value of 2.75 million euros. So that sums up to something like 27.5 crore rupees, at the current exchange values, not really 230 crores. So this company, Omira's, is engaged in manufacturing of some specialized glass-lined panels. These panels find application, in a variety of end uses. So starting from architectural facades, in infrastructure projects like cladding of the side walls of the tunnels, metro stations, etc., and also in the renewable energy sector, which is especially in the biogas digester space. So very like you said, the company was in a self-managed insolvency procedure when we acquired the assets. The company actually turned a loss only for 1 year, which was the calendar year 2024, and the turnaround was already kind of underway in the year 2025 when this deal, we started negotiating this deal. The turnaround actually hinges on two main aspects. One is the discontinuation of the EPC portion of the business, which was the primary driver for the losses. And second is obviously building up the volumes. And as we see right now, there is a very healthy inquiry pipeline. Also, the orders that we have taken over as a part of the asset deal are also all profitable orders. So as we build the required volumes over the next 2 or 3 quarters, we are very confident that we will be able to turn around this business fairly quick.
Okay, all right. Apologies for the size of the acquisition. Then it makes it much easier to integrate, I would say. But if I could just narrow down on the margins, the company itself, I think 2024, the EBITDA margin was 4%.
Yes, that's about the right range.
And the consolidated margins for your business is around 13% in the quarter gone by.
Close to 14%.
So what would the blended margins look like once the integration takes place?
We believe that the sustainable margins for the Omira's and Omira store businesses also could be in the double-digit range. And with the revenue, we are expecting about 20-25 million euros worth of revenue coming out of this vertical.
Okay, 20-25 billion euros, and you expect this margin to come up to double digit, right?
Yes, that's correct.
And by when would we start seeing that in FY26 itself?
Yes, it would take us about 2 or 3 quarters to get up to the double-digit EBITDA margin levels.
Okay, double-digit EBITDA margin levels by maybe the end of the year is when we could see it achieving those levels for the newer business as well. So maybe in the next 2 quarters, some bit of that impact could come in on the margin, right? Then
yes,
slight bit of an impact in the next 2 quarters at least. Absolutely. And then maybe Q4 onwards is where we could see that improvement coming in as well. And in terms of access to markets, which markets now for the company as a whole will you be able to access, or where you will be able to see more synergies coming in as well?
Sure. So this acquisition actually fits very nicely with our existing business in terms of the technology required for manufacturing. So glass lining is our forte, and all, or rather a large majority of the products of Omira's are also glass lined products. but they find application in a very wide range of end user segments. So like I said, they find use in architectural facades. So we will be able to tap into the architectural or rather the real estate kind of markets. We would also be able to tap into infrastructure projects. So whenever there is a a new tunnel being built, or railway stations or metro stations being renovated, we get access to that market. We get access to all kinds of storage markets. So be it treated water, wastewater, effluent, sewage treatment facilities, etc. And like I said, in the renewable energy segment, through the biogas digesters that this company makes. In terms of the geography, right now the markets are predominantly spread in the Western world, so largely in Europe. Also a little bit in the US and in the Middle East. So that's the geographical reach that this gets us. Eventually, also these products, we will launch them in the Indian market, where the biogas field is, fast and upcoming.
Okay, all right, Alap, we need to wrap up on that note, but thanks very much for joining in and speaking with us. So that's HLE Glasscoat, positive in terms of the acquisition that they've made, and looking at margins on a blended basis, eventually improving to double digits. We'll take a short break, but up next, Pritesh Mehta will join in. He's going to be tracking the technicals and getting his trading strategies in this afternoon. All that on the other side. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. As of now, the Nifty is trading almost near the day's highs. 0.25,040 around that mark is what the Nifty is at. But which are the stocks that are moving in today's trading session? With Vivek joining in with us for that.
Well, thank you so much for that. Another session we're actually seeing quite a bit of positive momentum, especially as far as the broader end of the markets are concerned. Well, one good news is that the entire IT pack, there was not a significant pressure, today has seen quite a bit of a bounce. In fact, the bounce continues. The entire IT pack, most of the constituents are trading with gains. In fact, Infosys, remember, they did hold a couple of analyst calls, a couple of conferences where they've attended, where they've been quite positive as far as demand recovery is concerned. That stock higher by 3%, and along with that, the rest of the pack moving higher in the session. Godfrey Phillips, last couple of trading sessions, especially post the worries as far as the sin tax implementation of GST is concerned, the stock was under pressure. But today, it is the highest gainer, the top gainer as far as the NSE 500 is concerned. Strong volumes today as far as Godfrey Phillips is concerned. Eternal, one particular stock continues to move higher. DAM Capital today has initiated coverage on the food delivery companies. Positive on that space, higher by 2%. And the entire FMCG pack, again, there are expectations that demand recovery is around the corner. And on the back of that, the entire pack today is seeing quite a bit of an up move. Names like Warren Beverages, Cottage Consumer, all of them high by over 2%. On the other hand, a few stocks that are under pressure as well. Aurobindo Pharma, well, news reports are indicating that a large buyout may be around the corner. Analysts are worried about the kind of leverage that the company may see on the balance sheet, despite the clarification coming in from the management. Stock low by almost 3.5%. Select NBFCs today, certain articles are indicating that there could be some restrictions or some worries in terms of lending practices. Sriram Fin, one of the top laggards in the session today. And pharma stocks, the entire pack today, quite a few of these names seeing a bit of profit booking, not too much selling pressure, but a bit of profit booking. Divi's Lab, Lupin, Gland, all of these stocks under a bit of pressure today.
Okay, Vivek, thank you so much for that. But, let's look at Nazara Tech quickly as well. That is the one that is under pressure today. And this is coming up. The government has approved that online gaming bill in 2025. And obviously, that is going to be tabled at the parliament today as well. Now, obviously, Nazara Tech has 46% investment in Pokerbazi, which is the real money gaming business. As of now, that's not included in the revenue or EBITDA, but yes, losses is something that are booked for the company as an associate company. The company is like, there's no impact of this in Q1 FY26. But, the risk of investment of this is something that we have to watch out for. Listen into what the management of the company had to say on this front. We had them in the show earlier as well.
There was no contribution, absolutely no contribution of real money gaming revenues in this financial performance. What that really means is that even going forward, since we are not having any contribution by real money gaming in our financial numbers that we report, there is no disturbance or issues with what we will report going forward. And the company continues to grow strongly, profitably. Now, we do have an investment in Moonshine Technologies, which runs Pokerbazi. We own 46% in the company. And it's speculative now because we don't know what is the content of the bill. But if there is a move, as media has reported, to ban online real money gaming, then of course that particular investment could potentially be at risk. If you see our recent acquisitions that we've done in the last year or so have all been focused on the core gaming IP business, which is a very profitable, very cash flow generative business. We generate through games that are popular all over the world. And that's already something we've been very focused on. In recent commentary also, we've said we're doubling down our focus on core gaming IP. So I think we already have, a very strong pathway for growth. We're already delivering it. As you saw this quarter, we delivered 100% year-on-year growth. And I don't think our strategy changes at all at this point of time. We are very happy with the core gaming studios that we have been buying. Our recent acquisitions, whether it's Fusebox Games that we did earlier in the year or last year, I think, and Curve Games recently have been performing extremely well. So we are kind of, emboldened to do more aggressively go down this path. We may go up to, 500, 700 crore type of transactions. But our sweet spot right now is in that 200-300 crore zone.
Okay, so that is Nazara Technologies, one of the big stocks in focus today on the back of the issues with regards to online gaming. That stock down around 6.7%. But let's now go across to Nigel, who joins in. He's going to apprise us of what's taking place in the F&O space. Nigel, over to you.
Well, the screen is looking good, right? As you all have been saying for the past half hour on. I think the next trigger for the market to move higher from here on is the Nifty band, taking out the 20 as well as the 50 DMA. Now, out there, if you look at that band itself is where we are seeing the rejection, around 56,000, 56,200. So once we get past that, then the Nifty will get legs. Otherwise, the biggest constituent on the Nifty is not able to move up. So that's the important trigger that we'll be looking at from here on. The PCR has moved back to around 1.2. Now it's gradually moving towards the higher end of the range. Normally we see it peak out at around 1.6. The reason is that the put writers, they feel they're back in the game, because this put writing is getting quite aggressive now. We started the week with the highest amount of open interest at around that 24,600 mark, gradually moved up, 24,900, 25,000 put as well, seeing a lot of open interest built up, and the premiums are moving down, telling you that the put writers, they are at play out here. However, on the upside as well, you're looking at the 25,050 call. Well, the premium's not running away. So there is mix of activity. Tomorrow is the weekly expiry. And those bears, they still believe that they can defend the 25,100 mark. Now, that's going to be the important mark on the upside. 25,100 on the Nifty. The bears as of now are positioned that that level will get protected. Stocks that I'm looking at, there's fresh buying being seen in a couple of counters. So a lot of positive commentary with regard to the telcos. Indus Stars, well, that's participating. Open interest built up, stock moving up as well. Indian hotels, the sentiment for the sector itself is very, very good. So you have Indian hotels actually that's moved up, and there's good amount of open interest built up on that counter. Astral, one of those rank underperformers in the last 1 year. You saw the promoter entity come in there, bought 200,000 shares, and now it appears there's a bit of a short covering bounce playing out there because the stock has moved up, open interest is moving a little bit low, and that's been one of those counters where the bears have been shorting easily. So now it seems they're getting a little bit stumped on the wrong side. And two stocks that I'm looking at, PG Electroplast, we've been telling you from yesterday that there's a possible stock that comes out of the F&O band. But take a look at the open interest built up. It's been massive out there. The stock has come off the top as well. As of what the data we have right now, that could be a potential re-entrant into the F&O band. And the other one is Kalyan Jewellers. That as well is looking like it could gradually make its way back into the F&O band. So both these two stocks should be on your radar from here on. At closing bell, I'll update you again. But these look like potential F&O re-entry. Back to you.
Okay, potential F&O re-entry coming in there. Keep an eye out on those names. And thanks so much for that, Nigel. But let's also bring on board Pritesh Mehta, Executive Vice President at Yes Securities, to get a check on the technical front as well. Pritesh, good afternoon. Before I come to you, let me just quickly mark the flashes at the bottom of the screen. Some important update coming in on Vedanta demerger that has faced an objection by the center, warning by SEBI. Now, the center objects the Vedanta's demerger in NCLT and claims that it has serious objections, says that the government will be unable to recover dues. The government submits that there has been concealment and non-disclosure of key details, and the government is also flagging of inflated revenues and concealed liabilities as well. That is so negative there that we're seeing coming in for Vedanta. The SEBI has confirmed that Vedanta modification post NOC terms, it is serious breach of master circular. It's important.
Well, yes, some serious comments coming in there, and as you can see that the stock is now trending lower. The government has flagged how Vedanta modified the scheme after the no objection certificate from SEBI and the exchanges, and SEBI confirms Vedanta's modification post the NOC and terms it as a quote-unquote serious breach of the master circular. So SEBI has submitted that it has issued an administrative warning to Vedanta, says the modification could not have been done post the NOC, and says Vedanta is required to place a warning before the board. NCLT has deferred the hearing to the 17th of September because of this particular issue. So the Vedanta demerger has faced an objection by the centre and a warning by SEBI, which has come through.
Further delay in terms of the demerger now you're seeing come again.
Absolutely. And as you can see, the stock is actually trending lower, is down around 1.3%. Maybe we can get Ashmit on board to give us more details, but that's the stock which we are focusing on in just a bit. Maybe we do have Pritesh with us still, and we can get him to talk about Vedanta. With Pritesh, let's start the conversation with Vedanta. The stock is in focus on the back of news. It's trending lower. It's just about at around 444 odd rupees. What's your call on the counter technically?
Now, see, this stock has been sideways. It is lacking momentum on the upside. We have seen metals providing some sort of respite, but this stock has been lacking that momentum. In fact, below 440, in fact 441, which is the three-digit GAN number, we can see some sort of selling pressure increasing. So I won't be surprised if the stock goes to levels of 400, 405.
Okay, so we could see a further fall also coming in for the stock as well. And Pritesh, just a quick word in terms of Nifty 25,000. Will it be managing to close at those levels today? Do you think that, and how important is it over there?
It is good to see follow through moves in the market, which was not the case in the last few weeks. So after the big gap up start we had on Monday, we have seen not only Nifty holding on to those gains, but it is gradually moving higher. So yes, bank Nifty is not participating, but private banks are not moving in sync with the market. But there is strength in broader markets. My customized breadth of Nifty 500, mid cap and small cap indices have rebounded from extreme zone. So there is movement in the breadth along with the price. So I think Nifty can move towards 25,300, but I think the broader markets is making much of the noise, and I think we should be focusing more on the broader markets.
Okay, all right, Pritesh, we're going to let you go on that note. We're going to get Ashmit back on the stock. As you can see, Vedanta is now trending lower at the low point of the day, down around 2%. Remember that the proposed demerger was the initial deadline was March 31st, 2025. It was extended to September 30th, 2025 because of the regulatory delays. And now there's a further spanner in the works. September 17th would be the next hearing by the NCLT. We'll do one thing. We'll get Ashmit on board. We'll take a short break and come back with our commodities segment as well. Stay tuned.
Welcome back, and joining us for an exclusive conversation now is Ragnar Udd. He's CEO at BHP. Ragnar, hi, thank you so much for joining in. First of all, how do you see the copper and iron ore production numbers? What is the guidance really for the year coming up? Even before you do that, also tell us on how the last 3 years have been in sense of production.
Copper production has actually performed very well across our business, and that's been a real emphasis for us, both in terms of the future-facing commodities, looking at growth in copper and also in potash moving forward. And so we have a number of major growth projects across BHP, looking at potential options in Chile, Argentina, Copper South Australia, in Australia obviously, and our Resolution Copper deposit that's a joint venture deposit between BHP and Rio Tinto. So overall, very bullish on that. What we are seeing is we continue to believe that copper demand will increase from 32 million tons a year this year up to 50 million tons going out to 2050. So very bullish on that based on the ubiquitous nature of copper and the demand needs that we're seeing, whether that's through urbanization, decarbonization, or digitization.
Rag, you spoke about copper, but how has iron ore production been? Because we're looking at some dent in case of prices, more production in Australia and various other countries as well. How has that been for BHP?
Look, iron ore, we're very proud of where our business sits in terms of the profitability that it generates. So at the moment, that Western Australian iron ore business is producing about 290 million tons of iron ore a year. And compared to our next nearest competitor, we're generating about a $7 free cash flow per ton benefit, which all up comes fairly close to $2 billion a year in additional free cash flow that we're generating a year out of that business. Now, in the longer term, we do expect that we will see demand for steel sitting at about 0.6 growth globally. We expect that we will continue to see China at that billion-ton mark for the next couple of years before a gradual decline out towards the 2040s.
Like all the upstream and the downstream companies really are tackling with their tariff concerns as well, especially with 50% on copper and steel and aluminum. How have you seen the impact on the businesses yet from these tariffs?
So in terms of copper tariffs, we actually haven't seen an impact to our operations associated with that. So obviously, the decision around, or the anticipation around the 232 announcement in the U.S. that potentially there would see some tariffs come into place, saw a huge dislocation between the COMEX and the LME in terms of the price of copper. Realistically for BHP, we only sell 3% of our revenue is actually generated from the U.S. And so what we saw was actually strong demand in other parts of the globe. In point of fact, China's copper demand increased by 8% over the last calendar year, which meant that we were able to sell freely anywhere in the globe.
What also is your outlook on copper and iron ore prices from here on? Because copper, almost everybody seems to be very bullish. We've had banks and brokerages talk about $10,000 and $12,000 a ton going forward. Not everybody is bullish, though, in case of iron ore, though.
So in terms of copper, we remain very bullish based on exactly what we were talking about earlier in terms of very strong demand globally and supply looking to be in balance or even potentially a bit of a shortfall. So we think that positions us well and also sets us up for a future given our natural endowment. In terms of iron ore, I think it's important to recognize that our iron ore expectations in terms of China, in China's steel production, was that we would hit that billion-ton plateau. And that would persist for a number of years, probably starting to curtail a bit in the 2030s. What we're seeing at this point is that billion-ton threshold we're seeing in steel persists, and there is still plenty of demand for iron ore in China and other parts of the globe as well. So at this point, the prices are sitting just over $100 a dry metric ton, which is a very competitive spot to be in, particularly with our cost of production sitting C1 cost at $17.29.
Rag, I have one more question, and this one is on India. How do you see India now continuing as a trading partner? What is the kind of demand growth that you're working with? And with this whole tariff uncertainty that India seems to be facing right now, do you see a demand impact from that as well?
I think India is probably one of the most exciting country in terms of growth that we're seeing, both in terms of the pathway and the projection moving forward. So when I look at the abundance of labor, the ambition that sits in that country, and the domestic consumption that's built there, there is a hugely exciting pathway there as we take a look at India moving into being the fourth largest economy we expect during this calendar year. Now, I do note some of the tariffs that you mentioned, but the reality is India's economy is so domestically based that when you take a look at how exports to the US actually import GDP, that's only about 2%, 2.2% actually, precisely in terms of the GDP generation, and only 1% of that, so 50% of the 2%, 1% all up would be impacted by those tariffs, which to me sends a strong signal that India is well positioned, and it is a country that we are doing a lot of work with, both in terms of copper and also to help grow that steel industry.
Rag, thank you so much for joining us. And with that sense there, of course, BHP telling CNBC-TV18 that they're anticipating stronger growth continuing in case of India, especially with the domestic demand there. And then, of course, it is the high metal prices that they're working with as well. All-time highs in copper and some support continuing for iron ore as well. But with that, let's go for a short break. We will get you more on the markets on the other side.
Welcome back. Well, let's discuss the stock of the moment. We have Ashmit joining in to discuss Vedanta and the fact that NCLT has deferred Vedanta's demerger case. Ashmit, give us more details.
Well, this is a proceeding which of course had been filed by Vedanta. Vedanta looking for the courts, not the NCLTs, not to go ahead with the demerger process. However, what it appears is that there are two major roadblocks that have come their way. Number one, the first major roadblock is the Ministry of Petroleum and Natural Gas, the MOPNG, the centre basically objecting, not just objecting, saying that there are serious objections to this entire demerger process. Their number one flag that there has been a case of concealment of information, not sufficient disclosures being made. The centre then goes on to say that they are finding themselves in a position where the government will be unable to recover its dues, saying that there are instances of inflating of revenues, of decreasing the liabilities that are currently on their books, and all of these have led to a situation where the centre says that this demerger should not be allowed, objection being placed on record by the centre. But that's only the first roadblock. Bear in mind, this is one of two. The second is a SEBI warning letter. One of the concerns that had been raised by the centre and now also having been seconded by the market regulator is that after the NOC had been issued by the exchanges as well as SEBI, after that, there were modifications made to the scheme. This is a serious breach, quote unquote, a serious breach of the master circular. This was submitted today by the SEBI Council saying that this was a breach of the master circular, that this is something for which on the 8th of August, the 8th of this month, a warning letter had been issued, an administrative warning had been issued by the market regulator to Vedanta, citing the very same modification. This was asked by the NCLT, is this a confirmation there was a modification made? SEBI responded by saying, indeed, there was a modification after the NOC. An administrative warning has been issued, and that administrative warning now needs to be placed on record on the board of directors, before the board of directors, for their view, for their action, for their consideration. So clearly, two major roadblocks. For now, the NCLT has deferred the hearing. This case will come up once again on September 17th.
Okay, Ashmit, now we'll keep an eye out on September 17th as an important date again coming in for Vedanta. Thank you so much for those updates there. But, with that, we're absolutely out of time on this edition of Halftime Report. Actually, before that, a quick check in terms of what the market is doing as well. 25,054 days highest point is what the Nifty is at. So quick check in terms of that, because 0.3% of gain is what the Nifty is managing to hold on to. And also in terms of Aurobindo Pharma, let's talk about that as well, because that's the one that's in focus as well, right, Ekta? So what's the news flow there as well?
Well, yes, Aurobindo is in focus because, they are, according to reports, according to an ET report, they are considering an acquisition of this particular European company, Zentiva, from Advent International, and the deal could be as much as $5 to $5.5 billion. And if successful, it would be the largest ever acquisition by an Indian company, both at home and abroad. Now, Aurobindo is competing with a couple of other firms, such as a US PE firm, GTCR. Now, this particular company, Zentiva, the revenue is around $1.98 billion, EBITDA of around $467 million. It's present in 30 countries, and it is expected to boost Aurobindo's European presence. Now, Aurobindo apparently has already secured a $4.75 billion credit line as a bridge loan, and the remaining $800 million would be funded via company's internal accruals. Now, the company has said that they are regularly exploring various strategic opportunities, including potential acquisitions and partnerships. So they haven't really outright denied this, but nonetheless, this is the clarification that they've given to the exchanges. Now, why is the stock lower on the back of this particular news? Because some of the analysts say that strategically the fit is not concerning, but the size of the acquisition is concerning, considering that currently the company has around net cash of $140 million, and this is likely to increase the leverage significantly. Hence, what could happen is that the profit could be impacted due to higher depreciation as well as interest costs. So that's on Aurobindo, but that's all the time that we have on the show. Thanks for watching Business Lunch. Up next.
The markets moved to the highest point of the day with the Sensex and the Nifty gaining 0.3% each. IT and FMCG have notched gains while financials and auto stocks are seeing a bit of a drag. The mid-caps are outperforming.
Cabinet clears a gaming bill that calls for a ban on all online money gaming. While the bill will need to pass through Parliament and may require states' assent, the move spooks gaming players like Nazara Tech.
Sources say that the cabinet has approved the acquisition of 97 LCA Mark 1A fighter jets from Hindustan Aeronautics worth 62,000 crore rupees. The win helps the defense aviation major achieve its FY26 order book target of 2.5 lakh crore rupees.
After Jio moves its 1 GB plan off its online platform, Bharti Airtel follows by scrapping its 1 GB entry plan. The initiative highlights increasing data usage and raises the potential for ARPU improvement going forward.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Patakia. With me as always is Vamakshi Thoria. Vamakshi, good afternoon. Well, that final 25,000 mark is finally conquered as of now. We have to mention that as of now is more important. You still have a couple of hours to go for the trading session. The Nifty Bank, though, is being a bit of a drag on the indices today. But the broader markets are doing well. The mid-cap index is up 100 points. The Nifty is above the 25,000 mark. What was anticipated to be a test of the 4-day rally, the bulls so far have passed that test.
Well, absolutely, Hormaz. Good afternoon to you. And, well, you know, third time's the charm. Yes, we did manage to cross the 25,000 mark on Monday as well as on Tuesday. But, you know, we could not sustain above that. And today we're seeing, you know, the Nifty sustaining about the 25,000 mark very comfortably. The mid-cap end of the market, though, is doing fairly well. The mid-cap index is up almost 0.5% at the highest point of the day as well. The advance decline ratio is largely in favor of the advances as is being shown by the mid-cap index as well. Now, you know, in terms of, you know, what's actually pushing the index higher, it's the IT stocks. Take a look at Infosys. That stock is up almost 3.3%. Coforge, Emphasis, all of these counters are surging higher in trade today. And that in turn is driving the Nifty higher. And keep in mind that over the last couple of sessions, we had not seen any contribution coming in from the IT pack. So therefore, this move is very important. The FMCG pack also continues to, you know, push the index higher with names like Colgate-Palmolive, Marico as well, Hindustan Unilever, all seeing gains upwards of almost 2%, Hormaz.
The consumption names continuing to do fairly well. Look at Marico at the highest point of the day, HUL at the highest point of the day, Colgate is at the highest point of the day. Good moves seen, and a proxy for the consumption bit is that the hotel stocks are doing very well for themselves as well, be it the likes of Chalet Hotels. Chalet Hotels is up almost 6%. Indian Hotels is doing well, 4.5% at the highest point of the day. And Lemon Tree too. Lemon Tree is also trading with gains of around 4%. So it is the hotel names that are doing well as well. So this consumption, broad consumption theme is the one that is dominating today's proceedings. Of course, can't not talk about Ola Electric. That stock is up 14%. And we spoke about, Sudarshan was highlighting since the morning as to how the delivery volumes have been on the higher side. The trading volumes too have been on the higher side today. But what's not doing well, though, is Nazara. Was not doing well since the morning, is not doing well today as well, and is continuing to hold on to those losses. And that is, of course, our top story for today, with the IT Minister Ashwini Vaishnav introducing the proposal which seeks to promote and regulate online gaming, including esports, educational games, and social gaming, while imposing strict curbs on online money games. Now, as a result of this, Nazara, as we just mentioned, is down over 6.5% after this bill was up. Of course, much before this bill was approved by the cabinet yesterday and has been now tabled in Parliament as well. But earlier today, we did speak to Nitish Mittersain, who is the joint managing director and CEO at Nazara Technologies. Listening to what he had to say.
There was no contribution, absolutely no contribution of real money gaming revenues in this financial performance. What that really means is that even going forward, since we are not having any contribution by real money gaming in our financial numbers that we report, there is no disturbance or issues with what we will report going forward. and the company continues to grow strongly, profitably. Now, we do have an investment in Moonshine Technologies, which runs PokerBaazi. We own 46% in the company, and it's speculative now because we don't know what is the content of the bill. But if there is a move, as media has reported, to ban online real money gaming, then of course that particular investment could potentially be at risk. If you see, our recent acquisitions that we've done in the last year or so have all been focused on the core gaming IP business, which is a very profitable, very cash flow generative business. We generate through games that are popular all over the world. And that's already something we've been very focused on. In recent commentary also, we've said we're doubling down our focus on core gaming IP. So I think we already have, a very strong pathway for growth. We're already delivering it. As you saw this quarter, we delivered 100% year-on-year growth. And I don't think our strategy changes at all at this point of time. We are very happy with the core gaming studios that we have been buying. Our recent acquisitions, whether it's Fusebox Games that we did earlier in the year or last year, I think, and Curve Games recently have been performing extremely well. So we are kind of, emboldened to do more aggressively go down this path. We may go up to 500, 700 crore type of transactions. But our sweet spot right now is in that 200-300 crore zone.
Well, absolutely. That was the management of Nazara Tech. But, let's also bring in Vinny, who's here to tell us, about this entire development and the impact that it has on the company. Vinny, over to you.
Absolutely. Like you just heard the management as well. The main thing and the impact, if this actually goes through in terms of a ban for online gaming, real money gaming, then the concern comes in on that investment that they've made of 800 crores and Moonshine Technologies. Now, obviously, as of now, they have 46% stake, right, in Moonshine Technology. So it's an associate company. It's not a subsidiary. So it's not a part of their revenue. And that's what the management highlighted, that it is not included in the revenue in Q1 FY26 or previous year as well. So revenue will not be impacted. But what comes in as a concern will be on the balance sheet front, that if they have to start writing off this business, if this business is, absolutely redundant going forward because of this bill, then that is the main concern, that 800 crores plus 200 around odd other crores that they have as CCPs, which they will be converting to equities in the next 2-3 years. So that is the concern that comes in. Now, Prabhudas Leeladhar has also said that if online real money games get banned, then the investment in PokerBaazi, Moonshine Technologies, that's the big risk that comes in for the company. And that forms around PokerBaazi, forms around 35% of their SOTP valuation. So clearly, we'll see a reduction then coming in target prices of all these analysts as well. And that's a big concern that they are watching out for. And that is why the stock is under pressure, despite the management clarifying that there is no impact in terms of on the revenue front or the margin front. Concerns come in on the investment and the risk of write-off over there.
Thank you so much for explaining that, Vinny, and putting all of these things into perspective. That explains why the stock is down in trade today. But, staying with, let's also focus in on HAL then. It's the other stock in focus. It gains, as sources indicate, the Cabinet Committee on Security has approved the purchase of 97 LCA Mark 1A fighter jets worth 62,000 crore rupees from the company. Ria brings us more. Ria?
Well, that's right, Vamakshi. As you said, government sources have indicated to us that the CCS has cleared the approval of the 97 LCA Mark 1A aircrafts. The order value for this is expected at rupees 62,000 crores. In terms of the deliveries are expected to take place from the second year of the contract, and around 20 jets are expected to be delivered annually. Now, this new order is in addition to the existing contract of 83 LCA Mark 1A aircrafts that was signed in February of 2021, and the company is currently executing this batch of orders. Now, the current order book of the total 180 units of these LCA aircrafts now stands at about rupees 1.1 lakh crores, and the current delivery schedule for the existing 83 aircrafts, in terms of that, the company is expecting to deliver 12 aircrafts in FY26. Now, when this new order comes in, HAL's total order book will hit about rupees 2.5 lakh crores, and with that, the company will have already met its FY26 order book targets of 2.5 to 2.6 lakh crores. So that is a big positive for HAL. Now, at the end of FY25, the company had also said that they have a very healthy order pipeline of rupees 1 lakh crores. This is including the 97 aircrafts that the LCA aircrafts that we're talking about, and this is expected to materialize over the next 1 to 2 years. So a big order likely for HAL, and the stock is reacting positively, up around 1 to 2% in trade today.
Of the highs of the day is Hindustan Aeronautics. But Rhea, thank you for that. And just rounding off the loop on this online gaming space, mind you, Nazara is now at the lowest point of the day, extending its losses, is now down 8% as we speak. And the government sources have now said that the law ensures no criminal liability of users of games. Liability rests only on the companies. Ashmit is joining in with more on this. Ashmit, tell us more. What exactly are your sources telling you?
Well, it's a clear indication by the government that it is not comfortable, it is not happy, and it will not allow online real money gaming applications. In fact, as a part of, we're given to understand, sources tell us that as a preamble of the bill, there are very detailed assessments made about what the psychological, social, financial impact is on the youth, on the disadvantaged section of the population, about how there are deleterious consequences. There are also links made in this bill with issues such as laundering of money, such as terror financing, and on the back of this, there are very, very clear provisions as a part of this bill, which clearly provides that, number one, there will be a bar on any provision of online gaming services, that there'll be a bar on any advertisement or endorsement of such platforms, that there'll also be a bar on any banks or financial institutions from allowing the transfer of funds. And what is important is that under the definitions provided as far as online money games are concerned, it very clearly says, irrespective of whether a game is a game of chance or skill, it will necessarily be included under this prohibition that has been included as a part of this. There are also teeth as a part of this bill. The bill provides in cases of violations of the provisions, it could lead to jail terms as high as 3 years, could lead to penalties as high as 1 crore rupees. And furthermore, the bill also says that companies that are found to be violating these provisions, this law, could also face key management positions. People who are at key decision-making positions are also liable to face action from the government. So clearly the government has its stance clear. It is not happy. It will not permit online money gaming in any shape or form.
Well, Ashmit, thank you so much for that development. Now, moving on, in an exclusive conversation, Ramdev Agarwal, chairman and co-founder of Motilal Oswal Financial Services, told CNBC-TV18 that GST changes will have a major impact on manufacturing, specifically sectors like autos and cements. Let's listen in.
Our local economy is slowing down. If you look at, various high frequency, including GST itself, collection 1-2% kind of a net collection growth, your corporate direct tax collection, housing loan growth, which is crazy thing. This country is without houses, and that has grown at about 2-3% only. So clearly, we are in a slowdown mode. This is an opportunity to do real clean sweep. Yeah. Brilliantly, we have executed GST with all the complications, and we have got this collection. We have brought entire real estate, RERA and all. So a lot of reforms have happened. First was the transition from the old system to the new system, which has happened. So that is a one generation reform itself. Now second generation reform is how do you make as a tool of development? See, in the manufacturing, where exactly it will show up is in manufacturing. Because if you keep it 18, then services are more or less at 18. So there I don't see much of change. But in manufacturing, and of that 40-50% is automotive. Now, if you now you should not do tinkering. What I mean tinkering is that motorcycle will be at, 100cc will be below this, for 150cc will be there. I think they should not do that. I think the simplification is important. That if you have one rate for low rate for anything, you'll get much more compliance and much more collection.
Ramdev Agarwal in an exclusive conversation with CNBC-TV18. Take a short break. More news and updates on the other side. Stay tuned.
Welcome back. You're watching Business Lunch on CNBC-TV18. Treasury Secretary Scott Bessent says Trump's talks with the EU leaders and Zelensky yielded a good outcome and spoke on why Russian leader Putin wants the war to end amid the economic impact. Let's listen in.
Both sides are ready for this terrible conflict to end, and one of the ways to make President Putin want it to end is on the economic side. The Russian economy has 20% plus inflation. Right now, it is a war economy. I think more than 25% of the GDP is coming from the military buildup. So, you know, it's a very imbalanced economy. There are the frozen Russian assets. The runoff from those is now being used to finance the war. So, you know, there are a lot of moving pieces here, Joe.
Now, Scott Bessent also added that India is profiteering by buying Russian oil and says that India and China's situation on oil purchases is not the same. Let's listen in.
If you go back and look now, I believe India had less than 1% of their oil, 1%, and now I believe it's up to 42. So wow. India is just profiteering, or they are just profiteering. They are reselling. They've made $16 billion in excess profits, some of the richest families in India. So this is a completely different thing. Like this Indian, what I would call the Indian arbitrage, buying cheap Russian oil, reselling it as product, has just sprung up during the war, which is unacceptable.
Well, US President Donald Trump rules out putting US troops on the ground in Ukraine, but says the United States may provide air support as a part of a deal to end the war. CNBC's Sylvia Amaro is here with the details.
President Trump has ruled out putting U.S. troops on the ground as part of security guarantees for post-war Ukraine, instead suggesting in an interview with Fox News that Washington could possibly assist by air. Now, Trump again put the onus on Europe, saying Kyiv's allies on the continent would front-load security guarantees. Also, during his interview with Fox and Friends, the U.S. president acknowledged that there is a possibility that Vladimir Putin doesn't want to make a deal to end the war in Ukraine, warning of a rough situation for the Russian president should that be the case. The U.S. president again ruled out Ukrainian membership of NATO, saying Kyiv shouldn't have asked for it. Trump also suggested Ukraine may need to cede territory, such as the Donbass region, in order to achieve peace, something that the Ukrainian president, Volodymyr Zelensky, has, of course, frequently rejected as a red line as well. Now, the White House press secretary, Caroline Leavitt, also outlined the role that the U.S. could potentially play in the provision of security guarantees to Ukraine. Listen in.
The president has definitively stated U.S. boots will not be on the ground in Ukraine, but we can certainly help in the coordination and perhaps provide other means of security guarantees to our European allies. The president understands security guarantees are crucially important to ensure a lasting peace, and he has directed his national security team to coordinate with our friends in Europe and also to continue to cooperate and discuss these matters with Ukraine and Russia as well.
Now, the White House also reaffirmed efforts to arrange a face-to-face meeting between Zelensky and Putin, with Leavitt saying that the Russian president had promised a direct meeting with his Ukrainian counterpart. Now, one sticking point, however, is where to host such a summit, with Trump reportedly considering Budapest. Switzerland was also suggested by the French president, Emmanuel Macron, with the country's foreign minister saying arranging a summit for peace purposes could be possible. And this is despite Switzerland being a signatory of the International Criminal Court. And of course, Putin, the president of Russia, currently faces an ICC arrest warrant over the alleged war crimes that of illegally deporting Ukrainian children. Now, Austria is another European nation volunteering to host the talks. So a lot of uncertainty there still in terms of where this meeting might potentially take place.
Sylvia Amaro, thank you for that update. On to India-China ties then. Both countries have agreed to resume direct flight connectivity between the Chinese mainland and India at the earliest. Both sides have also agreed on the finalization of visas to tourists, businesses, media and other visitors in both directions. And they've also agreed to reopening of border trade through the 3 designated trading points, namely the Lipulekh Pass, the Shipkila Pass and the Nathula Pass. Now, both the countries have agreed to facilitate trade and investment flows through concrete measures. Take a short break. We'll get you more news and updates on the other side. Stay tuned. Welcome back. Now, amidst the ongoing monsoon woes, the Chamba district in Himachal Pradesh was hit by twin earthquakes earlier this morning. The first earthquake of a 3.3 magnitude struck Chamba at 3:27 a.m. this morning, and the second quake of a magnitude of 4 rocked the same region at 4:39 a.m. No damages or injuries have been reported so far.
Well, moving on, the National Democratic Alliance's vice presidential candidate C.P. Radhakrishnan has filed his nomination in the presence of Prime Minister Narendra Modi and union ministers. The announcement was made by J.P. Nadda during a press conference following the party's parliamentary board meeting held in the national capital.
With that, we take your leave on this edition of Business Lunch. From Amakshi and me, thank you for watching. We'll leave you with the Nifty still above the mark of 25,000. Mid-cap radar on the other side.
Hello and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. On the show we talk about all the midcap movers and a lot more as well. But for the markets, let's start with that first up. Nifty continues to be above that 25,000 mark. Very important to track that particular move. It has come off slightly from the highs, but we'll track those moves, what happened, especially in the last 1 hour of trade. Midcaps doing well, 0.4% higher on that. There has been a swift recovery from the opening lows for the midcap index. It has again fallen from those levels, but nevertheless continues to see higher levels. We have a lot of moving parts in the broader markets as well, and that is something we'll talk through the course of the show.
That's right. Good afternoon, Sonal. So again, not much to complain, especially when you're looking at the markets, given the fact that the advance decline ratio in the broader end of the markets is skewed towards the gainers, more advances than decline, especially if you look at some of the broader end of the market. That theme is playing out very well in terms of names like the mid-cap IT pack. That particular sector is doing quite well. The defense pack, lot of news flow, HAL amongst that, one of the top gainers. Now, this is a special segment, Mid-Cap Movers. Hormaz is standing by the wall to take us through all of the mid-caps that are moving around in the session. Hormaz, over to you.
Indeed, a lot of movers in the broader markets and mostly towards the side of the gainers. And look at Ola Electric, 13% higher now on the stock. Godfrey Phillips is now up 16% after that slight bit of correction that it saw for a couple of days. Recovered all of those losses and a lot more. Carborundum is up 8%. Intellect Design at the highest point of the day, 6% higher in today's session. Hotel stocks is one pocket that has been buzzing in today's session. Be it the likes of Chalet Hotels, Indian Hotels, Lemon Tree. Most of them at the highs of the day, gains of anywhere between 4 to 5.5% in today's session. Some of the other movers in today's session include the likes of the IT names, the mid-cap IT stocks. Look at Coforge, look at Oracle, Emphasis, Persistent. All of them at the highest point of the day, 2.5 to 4% higher between these stocks. Take a look at the stocks that are doing well on the volumes front. Though Latent View is up 4. Raymond Lifestyle continues to move higher, 4.5% today as well. And Jyoti Laboratories too seeing gains on very strong volumes in today's session. And lastly, look at some of the stocks that are witnessing some profit booking. Most of these stocks were up in double digits yesterday. Lakshmi Organic is down 3, Thyrocare is down 4, GE Power is down 4, and Tilaknagar Industries at the lowest point of the day, 5% lower on that stock. Back to you guys.
Okay, all right. Thank you so much, Hormuz, for joining us with that list. So those are some mid-cap movers. We'll discuss a lot more in greater detail as well. Let's welcome Jay Thakkar from ICICI Securities for a technical check on the markets. Jay, good afternoon. Thank you so much for joining in. Tell us what are the next levels we'll be watching out for on the Nifty.
Good afternoon to you, Sonal, and very good afternoon to you, Vivek. Well, see, we have seen a good bounce back coming in Nifty post, the announcement made by Honorable Prime Minister, and we've seen some, bounce back coming from 24,000, 500 levels or so. But then now Nifty was struggling to close beyond 25,000, which it has today. So after opening up gap up, there was a consolidation for Monday and Tuesday, Sonal, and it was consolidating within this 24,800 to 25,000 range. This 200 points range has broken on the upside. We have seen there was the highest call OI at 25,000. So the call base seems to be shifting now on the upward direction. So till 25,000 levels are held for until tomorrow or for this week, I think 25,200 looks quite likely. And for this monthly expiry too, I think that, till 24,600 levels are broadly held. So now I think Nifty is heading towards 25,400 levels. It's just that the pressure from the Bank Nifty, if that eases and if we see some short covering happening in the Bank Nifty, especially the private sector banks, then probably the momentum can be even faster. As far as stock-specific ideas are concerned,
sure.
The consumption stocks are doing really good. So I have two buy recommendation. The first buy recommendation is on Tata Consumers. Tata Consumers is trading around the levels of 1098, 1100 range. So on the upside, I'm targeting around 1170 to 1200. In the near term, one can place the stop loss below 1070. And second buy recommendation would be on Bajaj Auto. I mean, the auto space has been seeing a good momentum as well, and Bajaj Auto is likely to catch up the rally in the near term. So it's trading around the levels of 88.30 approximately. On the lower side, I believe 8700 is now a very crucial support. Till those levels are held on a closing basis, I think Bajaj Auto is also heading towards the levels of 9,000 to 9,200. It's likely to catch up the rally in the overall auto space.
Okay, thank you so much, Jay, for joining in, giving us your view on the markets, your Nifty levels, as well as your individual trading picks. But it's a good time to slip into a short break. We'll get you on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned in to Mid-Cap Radar, and since it's Mid-Cap, we have to talk about some of the stocks and talk about some of them in focus as well. Let's go across to Nigel. Tell us, Nigel, which is our Mid-Cap Microscope stock today?
Well, Mid-Cap Microscope today checks in on Taj GVK Hotels and Resorts, whose current market capitalization is roughly around 2,600 crore rupees. The hotel sector tailwinds, well, they are very, very strong. But why is the street hesitant to book its stay into this name? Well, if you look at the chart over the last 6 months or so, it's been a mixed bag. The stock peaked at a 52-week high of around 530 or thereabouts in March, and then it's pulled back close to around 20%. Now, Taj GVK Hotels and Resorts, well, it's a joint venture between the GVK Group and Indian Hotels. Remember, both the entities, they hold equity in the company. The Taj Group manages and operates the entity for a fee. But first, let's give you a quick background check. They operate close to 1,240 rooms across 6 premium properties. Hyderabad, well, that dominates with around 48% of the capacity. Chennai is at around 18% and Chandigarh is at around 12%. Their exposure to Mumbai is at around 22%, and that is why they have 49% holding in the joint venture company, which is Greenwoods Palaces and Resorts. Now, moving to the financials, its average room rates and occupancy, well, they have been climbing up over the last few years. From around 4,700 ballpark, it's gone to around 7,900. The occupancy as well has moved up to around 77%, which in turn has resulted in revenues doubling from around 230 crores to around 450 crores. And, their margins have been steady in that vicinity of around 31 to around 32%. Moving to the valuations front, well, larger peers like Indian Hotels, Chalet, both of them trade at premium multiples, while Sami and Taj GVK will trade at a discount to their larger peers. Taj GVK's EV per room is just at around 1.7 crore per room. Now, that's much lower than its peer set. But you'll be asking, why the discount? Let's give you a few points. Point number 1, limited capacity additions. Well, a larger peer with similar model has been aggressively adding capacity. While Taj GVK capacity, well, it's degrown because Taj Banjara Hyderabad, well, that was discontinued in FY24 because, the lease period ended out there. So that's why I'm saying Chalet has added hotel rooms at a faster clip. Now, the other point that hurts them is that Taj GVK is not a pan-India player, right? And then there's a promoter overhang because the promoter entity holds close to around 75% in the company. Indian Hotels itself holds nearly around 25.5%. The street is now awaiting clarity on what's their stand with this particular holding that they have. But then what supports the stock? Well, a 250-key Bengaluru hotel, that's all set to open in the 4th quarter of this fiscal, which means capacity moves up around 20%. They also have a clean balance sheet, debt-free, and they get around 22 crore rupees from the share of the JV that was reported in FY25. So that's the stock we are educating you about. Taj GVK, a steady hotel company, clean books, but still waiting for the street to roll out the red carpet. Before we wrap up though, take a note of the disclosure that's up for you on the screen.
Well, thank you so much, Nigel, for joining us and taking us through the intricate details of this particular name. It's the spotlight that you've put in as far as Taj GVK Hotels is concerned. But a whole host of different stocks are in focus. They are, Abbas, this on the back of various news developments that have transpired overnight. Ria joins in with more details.
Well, yes, Vivek, a lot of defense stocks in focus today. The first one that we're focusing on is HAL. As per government sources have told CNBC-TV18 that they have the CCS has approved the purchase of the 97 LCA Mark 1A aircrafts. The estimated order value is about rupees 62,000 crores for this one. And once this order actually comes to HAL, the total order book will go up to rupees 2.5 lakh crores. And with that, they will have achieved their FY26 order book target of 2.5 to 2.6 lakh crores. So that is a big win coming in for HAL. The next stock in focus is Cochin Shipyard. Yesterday in their earnings call, they had highlighted that they're expecting a 14 to 15% top line growth in FY26, and they're also expecting to double their revenues by by 2030 or by 2031. They're also expecting net profit margins to be at around 15% for FY26. Coming to Garden Reach Shipbuilders, they are expecting their top line and bottom line growth in FY26 and 27 to be similar to what we saw in the last fiscal. stable. They are also expecting the RFPs for the rupees 25,000 crore next-gen Corvette orders to be concluded either by December of 2025 or by the end of FY26. They've also highlighted that the RFP for the P17 Bravo, the order value for which is expected to be about rupees 70,000 crores, is likely by the end of 2025. Remember, this order is likely to be split between two shipyards, with the L1 bidder getting the orders for 4 ships out of 3 ships. The last stock that we're focusing on today is Centum Electronics. This stock is up around 5 to 6% in trade today after signing an MOU with Bharat Electronics for a strategic collaboration across defense electronics domains, which include electronic warfare systems, radar systems, as well as secure military communication systems. So on the back of this, all of these defense stocks in focus today.
All right, that's about defense space. Thank you, Ria, for joining in. Before we slip into a short break, some of the mid-cap movers that we are watching out for. EQ Lighting, that stock is locked in upper circuit. That's up 20% as we speak. We have Zuari Industries as well, which is up by 20%. The other name is Godfrey Phillips. That stock is doing really well, 14% higher on that one. Protein eGov is up 13% as we speak. That stock too is doing well. We have Bluestone Jewelers, the new listing. That stock is up around 8.5%. Vascon Engineering is the other one, up 7.5%. Zuari Agro is also higher in trade today. That stock is up around 10%. So a lot of them are locked in upper circuit, and this is at a time when the mid-cap side of things are doing well as well. We'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back to Midcap Radar. Well, a few minutes ago, you saw some important flashes on your screen, which is still running. Sources suggest that Sula Vineyards is exploring major diversification by entering the premium spirits market. Yes, joins in with more details.
Well, that's correct. So, very interesting development for an interesting company, Sula Vineyards, which has been predominantly in the wine industry, producer as well as seller of wines, is looking at a major diversification as per our sources into new business categories. What we've been given to understand from our sources is that Sula Vineyards is looking to enter the premium spirits market. Now, what we've been given to understand, additional to that headline of entering the premium spirits market, is that the company is already in talks with about 2 to 3 companies to acquire a brand which will give Sula an inorganic entry when it comes to the premium spirits market. This could include, of course, whiskey, scotch, as well as vodka, as far as the business entry itself is concerned. In terms of timeline, our sources indicate that this particular acquisition could be announced and concluded soon, is what the timeline indication has been given to us. And most important thing is that Sula would look to leverage its distribution network for expanding the business once it enters into
All
the
right.
whiskey.
Okay, Yash. All right. Thank you. Yes, thank you so much, Yash, for those details. In fact, let's cut across to Shireen Bhan, who is in conversation with Ministry of Electronics and Information Tech Secretary S. Krishnan.
Well, let's go across now to the Secretary of the Ministry of IT and Technology. Joining us now is Mr. S. Krishnan. Mr. Krishnan, appreciate you joining us here on CNBC-TV18. This came as a bolt of the blue for industry as well as for state governments, this bill that has now been tabled in Parliament. In fact, both industry as well as states asking the question that there has been no consultation that's taken place. Why did the government feel the need to bring this bill in and provide a blanket ban on all money games as far as online games are concerned? Because this is contrary to what your own ministry was attempting to do, which was to drive regulation and not prohibition. Why the decision to go in for prohibition, sir? What changed?
I think you need to look at the whole context of the bill. I think it would not be fair to look at it only as a prohibition effort. There is a significant element there which is promotional. There's a very large segment of the industry. You see the point, one thing that the industry has been asking repeatedly is a clear delineation and a clear identification of those parts of the industry which are legitimate businesses, which are creative, which involve a lot of technical skill, and which involve development of software and all of those skills connected with it. So there's a clear recognition of those segments of the industry, which includes esports and online social games, which includes both recreational games and educational games, the entire gamification industry, the entire AVGC segment as it's called, which are distinct elements and which are being supported and promoted through this particular bill. So that regulatory distinction is being clearly made, which is what the industry wanted. Now, as far as the segment which relates to online money games, this has been a problematic segment for quite some time now. And there's been a lot of back and forth and also a lot of issues in various courts across the country on how exactly this issue requires to be tackled. There have been litigation, there have been various kinds of debate as to who's competent to handle this, and especially when it is online and it functions across states and in a way that and also comes from overseas, whether states would really be able to regulate this, would the states actually be able to legislate and administer the regulation relating to this, have all been concerns. Many states have attempted to do this in multiple ways. Many of those legislations have been mired in legal conflict in different courts, primarily because of issues such as this in terms of legislative competence and so on. We believe that the courts have now given some clarity. There are legal pronouncements which have given clarity, which say that even if it's a game of skill or a game of chance, ultimately it amounts to trade and commerce. And within a state government can regulate this as trade and commerce within the state. Now, the problem starts when it becomes an interstate issue or a cross-border issue from overseas. Then the competence for legislating on that really rests with the government of India and the list under list 1 of the 7th schedule of the Constitution, item 41 and 42, which cover interstate trade and cross-border trade. So that is the basis on which we derive the legislative competence to legislate in this area. And that is the basis on which this is being done. The industry has represented a number of times across various fora in the government of India on this issue. I think their concerns and all that they have had to say has been well reflected. They have indicated what they need. One part of it, of course, was the regulatory clarity. Another part, of course, as you point out, is an approach towards regulating as opposed to restricting. Now, under the Constitution, again, under Article 19, Clause 6, which talks about the reasonable restrictions which can be placed in the general public interest on trade and commerce, we understand that the Supreme Court has held in various other cases in the past that a complete prohibition or a complete ban also amounts to a reasonable restriction in certain cases. And I think it is important to recognize that this is what is reasonable varies from circumstance to circumstance. And it is in the government's judgment. It is in the way that internal and in the way that discussions have taken place at the government level and in various parliamentary standing committees. There was consensus across the board that online money gaming needed to be acted against, and that is what is reflected in the bill. One, an impetus to promoting those segments which will be deemed to be legitimate and supporting them where there is considerable potential for Indian software prowess to grow and development prowess to grow. And that is something that the government is committed to support. We've already done the National Institute of Creative Technology, which is to come up in Mumbai. There are other efforts to promote this, including the Waves Summit, which was held. All of that will be continued and will be redoubled, and more will be done to promote that segment of the industry. This segment is what causes distress. By the industry's own admission, about 450 million people across the country play various kinds of online money games. And various parliamentarians and others cutting across party lines have indicated at different points to us in different fora that it is an area of serious concern, and the government and the Ministry of Electronics and Information Technology need to act in this space. And that is what the government has done. And I do not expect that there would really be much objection, at least from across the political spectrum or even from state governments, that this is an exercise of power which has been done without consulting them. This is very much within the government of India's remit, and I think we've acted in a way that many state governments have wanted to and tried to act, but have been unable to due to various legal challenges.
There's a lot that you've said there, Mr. Krishnan. You believe that states are unlikely to object. You also say that this decision of the government to table this bill and prohibit online money games does enjoy wide political support, and you don't anticipate any opposition coming in from state governments. But on the point that you made, that you believe the central government is legally competent to bring in this legislation, overriding what states may or may not choose to do because of the interstate transactions. But let's talk about the overseas transactions, because one of the arguments being made by industry is that this will actually push people who indulge in online gaming to operate within fly-by-night with fly-by-night operators, with people who are operating outside of the jurisdiction of India. Now, what can the centre do about that?
To be honest, the jurisdiction of the bill actually, in a sense, has an extraterritorial jurisdiction. It applies to entities outside the country who are offering it in India. That is there right in Section 1 of the bill itself. So in that sense, it has limited extraterritorial jurisdiction. That is point one. Point two is that we have in the past, and in fact, MeitY itself has blocked almost 1,524 cases where illegal betting, gambling, and online money gaming sites have been operating. And against those, we have taken action and blocked them in the past. That provision has also been made in this Act, that Section 69A of the Information Technology Act 2000 can be used to block online money gaming, which comes whether it is within the country or from overseas. So technologically, it is possible to block this. Of course, it will be a constant exercise in vigilance. We will have to keep monitoring when these games come up, and we have the capability to do that. And as and when it comes up, we'll have to keep consistently blocking new sites which come up, new portals which come up, new ways in which it gets offered. Now, that is an implementation challenge, and that is what the civil service and the entire machinery of government is there for. We have to implement the law which the parliament would enact.
Yes, it is going to be an implementation challenge, as you acknowledge there, Mr. Krishnan. But, you know, I go back again to the arguments that are coming in from industry, that this once again raises the issue of policy unpredictability, because this, again, was a sector that the government itself has been championing for. There's about $3 billion that is coming in terms of FDI. Industry claims that direct and indirect jobs amount to about 2 lakh at this point in time. I would imagine that these were considerations that were factored in as part of the consultation process that took place. Now, what do you say in response to that, that this is going to lead to job losses, that this is going to lead to uncertainty as far as foreign investors, domestic investors are concerned, who have already put in money into this sector and were hoping to be able to do a lot more? This is another retrospective action on the part of the government. How do you respond to those questions that are being raised by industry and other investors?
So let me address the issue of job losses first. I think what you have to weigh here is the number of jobs created are in their thousands, and the number of livelihoods affected are in their hundreds of millions. The industry itself claims that 450 million people play these games, many of whom are distressed. And I think parliamentarians, ministers, and others who understand the distress of their constituents are very forthright in saying that this is a serious issue. So we have to balance. We have to balance between what is in the overall social good, and many of these people have talent and will find jobs in the legitimate gaming sector, which is being encouraged. So I think that is an issue which we should be able to tackle in terms of the job loss prospect itself. So I would not say that that is as big an argument, and it has been considered. It was something which came up, and I think clearly this view was taken that we need to look at it from the perspective of the livelihoods and the emotional and the mental welfare and the social distress that is caused for many millions more. So that is as far as the job losses is concerned. Coming to the investment related issue, I think we also need to be clear that it is the industry which asks for this clarity as to what would be permissible and what would not be permissible. So I think that clarity has been provided. This is something.
But if I may, sir, if I may, industry was asking for clarity on the kind of regulatory framework that the government would put in. Industry was not saying bring in a blanket ban to disallow any kind of online money games. In fact, that was not the position that MeitY itself had taken in the previous set of consultations, as well as the regulatory mechanism that the MeitY itself had put forward.
I understand you're referring to the amendments to the IT rules made in April 2023. You would note that although the amendments were made in April 2023, Rule 4B, capital B, indicated that until such time that the government approves the creation of the self-regulatory bodies, this particular set of rules will not come into force, right? And the government had a rethink on this issue, and it never approved any of the SRBs. So I think it would be not fair to say that MeitY, there was a regulatory framework which was created in a particular form. The government has stepped back from that regulatory framework after reconsideration and finding that there were a number of issues and problems there. And the regulatory clarity that the industry asked for was in a clear delineation of the industry to recognize what is permissible, what is acceptable, what will be promoted, and what is problematic, and what would need to be restricted in some form. And that clarity has been given. Of course, it could be argued that there could be regulatory measures which could have been tried of other kinds, whereas the option now has been for an outright ban. That is a call which needed to be taken in terms of the implementability of many of the regulatory restrictions which could have been attempted, as opposed to making sure that such games are not offered at all. And the balance of convenience, the government believes, is in making sure that such games are not offered at all, as opposed to having certain regulatory mechanisms to prevent this. Now, these are choices which are made by different societies in different ways. In the Indian context itself, there are many things which are permissible or which are going on in online gaming today, online money gaming today, which are not permissible in the physical form or in the real world. We are a country which does not allow casinos across in most states. We are a country where many states are attempting to ban this as betting and gambling and not succeeding because people claim that there is an element of skill involved and it is not purely a game of chance. Now, we are now saying that, look, it does not matter whether it is chance, whether it is skill or a combination of both, all of them where any wagering, any deposit, any fees in the expectation that you will win back more, you will get back more, or you will get back that amount is something which is defined as an online money game and hence not permissible. Now, this is a societal decision. This is whether we permit casinos, whether we permit other forms of gaming is a societal decision. And in the Indian context, the political executive is clearly of the view that this is something which is difficult to permit. And the political executive, not just here, many states have attempted to ban this as well, as we already discussed, which are caught up in legal tangles in terms of the competence of state governments to enact. And we believe that the legal competence is there for the government of India, and this is a clear delineation which has to be made. There's a segment which is to be promoted. We have no doubts about that. We are defining it clearly and making sure that we have measures to promote that. And there's another segment which needs to be prohibited simply because livelihoods of a very large number of people of this country are involved. And we need to put that before any investment or any employment is created in that sector. Clearly, the investment is coming in because the returns are outsized in that particular sector. The returns are outsized, and it is actually thriving on the distress of these people. Now, what kind of investments we accept and what kind of investments we don't accept is there in our FDI policy. We don't accept every kind of FDI in every case. If there is a criminal activity, but it fetches very high returns, then naturally you're not going to take FDI in that sector.
Fair enough. As you point out, that this is a decision taken by the political establishment, and some of these factors, as we pointed out and discussed, the concerns that industry has raised have already been weighed on. Another consideration, though, that perhaps was part of the consultation process is the loss of revenue, because as of last fiscal, total collection of about 20,000 crores, Mr. Krishnan, and the expectation was that with the revamped GST, this would be something that would go under the 40% bracket. So was the revenue consideration, like the job loss consideration, also a factor that was discussed?
The finance ministry was also consulted, and they seem to be comfortable with it, and they seem to believe that that is a revenue loss that they can live with, given the larger social good that is being served. Therefore, I think that is not so much, that did not weigh as much as the overall social considerations.
Mr. Krishnan, what next now? As far as this regulatory authority is concerned, the plan that you hope to create, can you take us through what the process will now be? Who will be part of this regulatory authority? If you can lay out the next steps now for us, as and when this does get passed by Parliament. Of course, it's been tabled this morning.
That's right. I mean, we'll first have to, of course, wait for the passage of the bill and the assent of the President. In parallel, we'll have to work on putting in place the rest of the framework, including the rules which will govern how the regulatory authority would be constituted and what powers they have. That is something on which we have already commenced work. And we can sort of, and once this is to be put in place, I think we will be acting very rapidly to make sure that the notification comes out very quickly and we are able to implement this entire framework as quickly as possible. As I already pointed out, some technological upgradation would also be required, not just in MeitY, but across ministries, and also the promotional elements which need to be done, which will be done by the Ministry of INB, the Department of Sports, and the Ministry of Youth Affairs and Sports. All of them will get ready with the kind of schemes and other aspects that they need to implement. So we have work to do. It is, we recognize that there is work to be done, and we will get it done.
On the tech upgradation that you believe you will need to do, sir, I would imagine that this links back to some of the execution challenges that you yourself acknowledged. How soon, of course, the procedural aspects of the legislation will take their time, but how soon do you believe that this is actually going to go into implementation? By when can we actually expect this to be implemented?
I can't give you a specific date until such time that the assented bill is with us. So I would not hazard a guess, but I think it needs to be pretty quick because we are responding to distress. The bill itself has been brought in with considerable expedition. So we will have to display the same expedition to bring it into effect.
Mr. Krishnan, quick follow-up questions. Provision 17 provides a blanket legal cover to the government and the regulator. Why is that the case, sir?
Acts in good faith are always protected. So they are only if they are acts in good faith. If you see, I mean, administrative actions can be challenged under law in a number of ways, right? Now, this is for acts in good faith, which will not become punishable. Now, it doesn't mean that there will be no judicial review of those actions. Under the law, judicial review is possible and they can be questioned. But if it is proved that it was an act in good faith by a civil servant in the furtherance of the objectives of this act, then they would not be punishable. That is what it basically means.
And finally, crypto transactions, Mr. Krishnan, again, as you talk about the implementation challenges of trying to crack down of operators who operate outside of India's jurisdictions, what about crypto transactions? Because the bill makes it clear that banks, financial institutions cannot fund these transactions. But what about crypto transactions?
See, currently, what is permissible as crypto transactions in India are basically that, the transactions themselves, when you take money out of a wallet, you have to transact in INR, in Indian rupees. So the wallets, you can, transfer cryptos in and out. But if you're taking money out or if you're putting money in, then that needs to be through an INR transaction. So wherever there are legitimate crypto wallets which are currently operating, since there is a linkage directly to Indian money, which will enable us to track what is exactly happening. And there again, the proceeds of such games cannot come in. Now, what is illegally happening, what is happening through in the darknet or through the virtual private networks, VPNs, we will have to find technological means to come down on them as we go along. We already come down on them in a number of ways. We track them down. It's a constant exercise. I mean, this is what you need policing for, right? In any society, when you declare something to be a crime, there has to be a mechanism to enforce. And that mechanism to enforce is being built up even as we speak, because, within our overall cybersecurity framework, within our overall framework of laws, and that technical capacity is being built both in MeitY and in other ministries, in the Ministry of Telecom and otherwise, to protect Indian cyberspace. So that will also come in useful to address these challenges.
Right. Any recourse at all for industry? Because they have written a letter to the Home Minister last night, the All India Gaming Federation seeking urgent intervention. Now, of course, the bill in Parliament, but any recourse at all for those who are in the online money gaming business?
I mean, we are prepared to talk to them at any point in time. We are open if there is a representation to be made. The ministry is always open to speaking with people who are affected by its actions or who want to come and discuss their issues with us. So the doors are open for discussion.
Well, the doors are open, but the government making it clear there is political consensus and political will to go ahead with the implementation of a complete ban as far as online money gaming is concerned, because in the government's view and the government's wisdom, it believes that this is a societal issue, and which is why it has taken this decision, it has taken this call. Mr. Krishnan, appreciate you joining us here on CNBC-TV18. Thanks very much for your time, and we look forward to hearing more from you as this bill passes through Parliament and we get more clarity on its implementation. But for this afternoon, many thanks for joining us here on CNBC-TV18. That's the MeitY Secretary. That's the big story, a ban on online money games. It doesn't matter whether you're skill or chance. If there is any kind of fee or deposit, it is curtains for you. That is absolutely clear. And of course, whether there is going to be any legal challenge, one will have to wait to see, but this is the clear intent of the government and the clear intent of the legislation. We take a break. There's a lot more coming up. Don't go anywhere. We're back with the markets in a moment.
Hello, good afternoon and welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Markets as of now trading almost near the day's highest point, 25,070. That's what the level we're keeping an eye out on. Nifty, but comfortably about 25,000 as of now. But this is a show where we solve all your stock-related queries. And to do just that, we have Asta Jain, research analyst at Hem Securities, as well as Somil Mehta, head of alternate research, capital market strategy, Miraya Sher Khan, to answer all those queries. Asta as well as Somil, good afternoon. Thank you for joining us on the show. Let me start with the first query for today. We have this coming in from Shweta Tiwari, who's writing to us from Chennai. She's holding 50 shares of Indian Hotels. Price is 350 rupees per share. Wants to know what should she be doing with her investment. Should she continue to hold or book out profits? Asta, your view. Indian Hotels making a good amount of profit here, right? So should she just get out and maybe book that holiday at Indian Hotels itself?
So, hi, good afternoon to everyone. I would like to congratulate Shweta for a very good investment. And my idea here is just stay invested in this counter for the price target of 855 to 890, because their businesses like cumin as well as ginger are really working well. They are like letting the good revenue diversification for the company. And I believe that going ahead also, there is a strong visibility in the revenues from these counter. So, I mean, there is no reason to get out from the stock at this point of a time, because the stock is in really up move. Stay invested with the price target of 855 to 890.
855 to 890, stay invested. That's the word in the fundamentals. Somil, afternoon. What's your view for Indian Hotels? What are the levels that Shweta should keep an eye out on now?
Afternoon. Taking a holiday is a better option, by the way.
Okay.
Okay. Indian Hotel looks great. It has formed a triangle pattern in the last 3 or 4 months, and this triangle pattern is expected to break on the upside. My targets in the medium term outlook would be 900 plus. So definitely hold on to it. Even in if somebody wants to trade positionally, the stop loss would be around 775 and targets would be above 900. So hold on to it. Trail your stop losses and keep holding this position.
Okay, keep an eye out on those levels over there for Indian Hotels. Next query, Suresh Jain is writing to us from Bangalore, holding 200 shares of Yes Bank. This is at a price of 19 rupees per share. So around their buy price right now is what the stock is trading at. Long-term investor, should they continue to hold this, Asta, or look at something else now?
Right now, we are just recommending a hold on this counter with a price target of 21, because we also agree with what the management has given the guidance regarding the ROA of around 1% driven by the NIMs. And in fact, we are just waiting for this SMBC deal also, because SMBC, that is, we all know, so Mitsubishi Banking Corporation, they are agreed to take a stake at around 21 rupees. So at least till those levels, we are comfortable with this counter and recommending a hold for the price target of 21.
Okay, and Somil, your view, Yes Bank, should they continue to hold this?
I'm not very positive on the medium term outlook. In the short term, probably 20, 21 would be the levels, but in the medium term outlook, definitely weak. I'll be expecting the downtrend to continue till 18, 17 levels. So yeah, from my side, it's definitely exit.
Okay, exit, that's the view coming in for Yes Bank on the technical front. But Somil as well as Asta, thank you so much for patiently waiting by today as well, through the show. This is a truncated show that we had for your stocks, but thank you so much for that. And that was just 2 queries for today, viewers. We'll be taking more on Friday as well, so keep sending them in. And Asta as well as Somil, thank you so much for joining us on the show. With that, we're going to actually wind down this edition of Your Stocks. Thank you so much for tuning in. Don't forget to email us your queries. But up next, Chip Closing Bell to take you through the last hour of trade.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng down almost 0.6%. The Taiwanese index is the big underperformer.
The resistance is unchanged, 61.8% retracement, which we put out yesterday morning as well.
If it involves transfer of money, well, that's simply not permissible. That's what sources are telling us.
Slightly sideways, 19, 20, 25 points lower, 24,950 on this Nifty.
The high momentum and the breakout of those multi-month ranges, we think there's further gains to be had in the auto space.
Absolutely no contribution of real money gaming revenues in this financial performance.
We may not be the best market for the current year globally, but on 3-4 years basis, I think we are the best markets.
It's a green-looking screen. However, the gains are not as high.
Serious breach of the master circular.
It has come off slightly from the highs, but we'll track those moves, what happened, especially in the last 1 hour of trade.
Well, that is the day so far. Markets are looking good. 90 points nearly on the Nifty, 25,066. And I think unlike yesterday when mid and small cap indices were outperforming in a big way, it's more measured, 1/3%. But single stocks, no dearth of individual names, 5, 10, 15%. And you wonder what's going on. We'll talk about many of those names here over the next 60 minutes. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Rima and Nigel with me. Guys, good afternoon.
Hi. It's a good screen, right?
Yeah.
Considering we had two big, Monday was a big day. Yesterday, there was positive bias. And again, today, we're at the day's high. The Nifty's crossed the 50-day moving average and well above 25,050.
Well, that's right. And we've had 3 good sessions for the markets. But the man who's going to have a good evening is Prashant, who's celebrating his birthday party this evening. And we're looking forward to getting onto the dance floor, grabbing a drink, and, turning up to Bottom as well.
I think Nigel is going to do a full jive move. All right.
Please show up wherever he's going, because he's ready to party on your behalf. So you need to be there.
All right. Well, let's just quickly run you through what's coming up here over the next 60 minutes or so. It's turning out to be a decent day, absolutely a decent day. Actually, 100 points from here, and you're essentially at that 61.8% retracement. That is 25,160 or so. We're at 25,60. And you can see the other indices as we put them up on the screen as well. IT pack today is, yesterday was the underperformer, started slow, but I think it's picking up a little bit of pace. So we'll talk about this as well. There's a Kotak note which Rima will outline for us. Big move on Ola once again, 14-15% today after yesterday's big move. So, what's triggering this move? Sudarshan is going to come back on that. And of course, Nazara Tech and taking a bit of a knock after online real money gaming has been hit with a blanket ban. So that's a story which we continue to track. Started about 4-5% lower, down a full 11.5% excerpts of the interview that we had with the management as well. So that's what's coming up here over the next 60 minutes or so. But before we go any further, I just want to quickly outline these names. And these are all just...
Prashant, I just want to come to you in just a bit. We have a clarification coming in for Vedanta. And Vedanta to CNBC-TV18. We had asked them to clarify with regard to what went on today in the courtrooms. So the important clarifications that are coming about, they're saying that the demerger being stalled is actually incorrect. They're giving their view. They're saying the NCLT hearing on the demerger is actually adjourned to September 17th. So that's going to be important. They also go on to add that the process is ongoing and SEBI hasn't opposed. According to what they have to say, it's only issued a procedural caution. So, this is in response to the queries that we have put forward to them. And finally, with regard to the verdict on TSPL, which is their power asset, they're saying it's not linked to the demerger, but that is a legacy issue. So just putting out the clarification out there, Vedanta saying there were 2 separate issues. They believe that demerger is still on. And in fact, they're clarifying that the Supreme Court verdict on the power asset is a legacy issue, and it doesn't have to be mixed up with the demerger. So hopefully we'll try to get the management on the show as well. But for the time being, the crucial responses are being run for you on the screen. Yeah, Prashant.
No, absolutely, and I think it's an important one. So important to take Vedanta, the company's view on board as well. You know, I was just putting out these names as nothing but question marks, and maybe our guests a little later will answer what's going on here, right? Put up Bluestone, 10% higher. It's a big one. Third largest volume-led gainer. There is Protean, which is up about 18.5%. Bluestone, of course, is the recent listing. It's a big gain. Protean is up 18%. This HLE Glass continues to do very well, 6% today. Carborundum Universal is up 9%. There is Newland Laboratories, which is up about 6%. Intellect is up 8.5%. Intellect Design. We reported on Sula, which has cooled off a little bit, but still 4%. Ekio Lighting, 20% higher at this point. Sai Silk, which is Kalamandir, is up about 9%. And there is a company called Prostam, 10%, 213. So, I mean, individually, so many names are jumping up with so much excitement that you wonder what's going on. One thing common for at least a few of these names that I mentioned is that they've all essentially been damaged quite a bit from the highs. They've all sold off quite a bit from the highs, names like Protean, etc. So maybe a little bit of buying coming through. And of course, I mean, the fact is, when large caps don't come off and large caps stay steady, mid and small caps also get a bit of backing, get a bit of courage, and people go hunting. So, but we'll try at least and touch upon with these individual names as we go along with our guests in a bit from now. Guys.
Well, some more movers. On the large cap screen, it's a lot about IT. Infosys is your top gainer. That's up nearly 4%. TCS higher by 2.5%. Tech Mahindra seeing buying. Consumption names continue to be in favor. Big gains seen in HUL and Nestle. It's a gain of close to about 2.5%. In fact, HUL and Nestle have moved up 8 to 9% so far this week. So seen as a clear beneficiary of the GST rationalization, and money continues to move. So FMCG is doing well today. IT is also on the front foot after a long spell of underperformance. Some other mid caps, we'll talk more, but Ola Electric, another move, 15% higher. This week, Ola Electric has rallied close to about 15%. Bluestone Jewelers listed yesterday, and now it's inching towards that 600 rupee mark. Hotel stocks like Lemon Tree up and about, and auto ancillaries like Jamna Auto continue to see buying too.
Okay, all right. How do you position yourself though in the final hour of trade? We have Rahul Sharma, Director and Head of Technical and Derivatives at JM Financial Services, who joins us on the show. Hi, Rahul. Good to see you. I was hoping to get you actually at around 24,300, because out there, as you always point out, when things get stretched, with regard to the RSI, with regard to the PCR, and with regard to the short positions. Now, how much of this covering bounce has played out, and how much higher can we go from here, Rahul?
Yeah, very good afternoon, Nigel. So definitely, today is one of those key sessions where we've taken out the 25,000 mark. Lots of straddle activity was seen in yesterday's session, where the bulls and bears literally had a fight over the last two sessions, whether 25,000 will be taken out or not. But looking at today's traction, we feel that Nifty has opened doors up to 25,400, which is a possibility of another 400 points from current levels. And we are not to forget that we are coming out from a 6 to 7 week of underperformance. So on one side you have global markets which are pretty robust, US markets near lifetime highs, Nikkei, Japanese markets doing well. So overall net a lot of catching up to be done for our domestic markets. And in the short term, I think a good 400-500 point jump can be expected in the Nifty going ahead from here.
Okay, so markets headed higher, 400 to 500 point jump possible on the Nifty. Any stocks, Rahul?
Yeah, so, if we talk of sectors, so cement is one space, that is broken out from multi-week consolidation. Ultratech cement looks good at these levels, can be bought for an immediate upside of 5 to 6% from current levels. But I think the star sector has to be the metal sector. So Chinese markets have been doing well. We see the China A50 index. They have come out of multi-week consolidation. That reflects positively on the metal index. And Tata Steel is one of those which can be the biggest beneficiary. Now, technically speaking, the stock has been sideways. It has not corrected as much as the broader market has. And now I think the time is right for a breakout in the same. So on an immediate basis, 175 is the target. But positionally, speaking of slightly more medium term, we may very well be headed towards targets of 190 as well. So both positional traders as well as short-term traders can have a look at Tata Steel, which is the index heavyweight in the metal space and can dominate this space going ahead from here.
Quick word, Rahul, on the Nifty IT. You're seeing momentum today, but does it have legs to run higher from here?
Yeah, so purely from a risk reward perspective, IT index has formed a short-term bottom and traders can participate in the same. However, the institutional participation has still not shown up, which means no big volumes as such. It should bounce back along with the market and provide some support to the Nifty index as well. But having said that, it's best to be a trader in the IT space where we feel that there will be a lot of investors who have been stuck into this space who would be wanting exits, and sell on rise is something that may happen in this sector. So from a very short-term trading perspective, yes, maybe a 4 to 5% upside can be had. But overall, from a slightly more zoomed out perspective, I think there could be some more pain left in this sector.
Okay, all right. Rahul, what about the big boy? Tech is finding its form, but the big boy is the banking index. It reminds you of the 1990s when India did well, but Sachin didn't perform, then wo boost, you don't get that kind of margin. If Sachin can perform, that is, the Nifty bank, then we could be, heading back towards, maybe towards the fresh all-time highs. What do you think about the Nifty bank?
Yeah, absolutely bang on. In fact, since last few trading sessions, Bank Nifty has, seen good traction, especially led by PSU banks. And we feel that, there is more upside to be had in the PSU banking space. Even private banks, for that matter, the technical structure has improved. On one side, we have HDFC Bank, which is as solid as ever. We have ICICI and Axis, which are improving from lower levels. So speaking of specific levels for the banking index, I think 56,000 and above, we should see more short covering happening in the banking index. And net from a comparative basis, this sector has led the market for most part of this calendar year. And we feel that the rest of the next 3-4 months could be the same case as well. So from an investor perspective, from a slightly medium term perspective, we feel that there is a good upside to be had in banks. Somewhere around the 60,000 mark is where we see the Bank Nifty heading towards over the next 2 to 3 months time frame.
Okay, thank you, Rahul, for joining in. He struck an optimistic note, and now the Nifty is inching towards a 100-point gain. But the leader today undoubtedly is the IT index. The Nifty IT index is up 2.6%, and this is after a big round of underperformance. Year to date, the Nifty IT index is down 18%, while the Nifty is up 5%, which means an underperformance of nearly 23%. And many stocks are down about 25-30% from their recent highs. So TCS is off 32% from its 52-week high. Infosys, HCL Tech also declining by nearly 25%. So 25% off its 52-week highs. Now, Kotak has written a note on Infosys. This is following their meeting with the CEO, Salil Parekh. There are no big takeaways broadly on demand. It's still status quo, which means clients are focusing on cost optimization. There is no change. Companies reasonably confident of meeting their guidance for this year. But a couple of things that stand out from the note. One is the AI readiness of Infosys that Kotak likes. They're saying that Infosys is the AI partner of choice for 10 out of its top 20 clients in the financial services vertical, and the company is hopeful of being a beneficiary in vendor consolidation. Secondly, because the company focused on margin maximization, eking out all the margin efficiencies early on in Q2 of FY24, which basically means nearly 2 years ago, the companies managed to hold on to their margins despite an adverse demand environment. And two, they're able to participate in many of these cost optimization deals, which are competitively fought. So that's the second reason. And third, on M&A, the company told, Kotak Institutional Equities that their acquisitions would be focused on growth areas. And in this calendar year, their priorities are cybersecurity, EU's energy and utility consulting, and cloud services in the ANZ region. So Kotak likes the stock. 1850 is the target price. They're saying the stock is currently trading at 20 times forward multiple. According to them, the fair value should be at 23 times. Prakash is now joining in on the markets. And Prakash, let me start with IT. Is this just some sort of a tactical bounce, money finding its way to underperforming sectors, Or do you think we've formed some sort of a bottom and these large cap stocks are looking attractive now?
Good afternoon, Rima. But, the answer is yes to both your questions. The fact that some of these large names got battered down on the back of poor earnings and poor visibility going ahead is the reason why you see these bottoms being made. Now, there could be a time correction as well. There could be consolidation at these levels. I mean, you mentioned about TCS being almost like 25% off its 52-week highs. I mean, that 25% is a fair distance to kind of catch up on. And in that sense, it will need much more than just a tie-up with a Finnish retailer, to kind of get confidence back. But what's interesting is, and I can tell you this after having spoken to a lot of players in Europe and the US, that most companies that are adopting AI with a very accelerated pace are actually finding far more efficiencies in doing so. So while it might have a very second-order effect, which is very ugly on the employment and all, somewhere around the end of this year, there will be very clear headwinds which will talk favorably about AI being adopted, and some of these players like Infosys, which are on the forefront or have a lead, some sort of a head start, they start kind of getting valued much more, favorably. So I think from now to December is the period where consolidation could happen. It could not probably be the sector of choice, but it will definitely make better, sense to kind of start nibbling into it at some point in time. I'm not too sure. I'm not too sure whether the US market impact will impact them again. If something goes wrong in the US in terms of its debt and repayment of debt and all of that, there could be a setback. The inflation numbers are still not kind of clear yet. So there's lots of ifs and buts, but I think it's bottom fishing which is happening. Institutional money is coming back, and it will have to go to the large caps. Banking is probably not offering that solace, so IT is probably making up for it.
Absolutely. And, the other story, Prakash, which was the online gaming, we spoke with, the Métis secretary, our colleague Shireen, spoke with him, and he was absolutely clear in terms of what the bill proposes and why they're doing it. You may agree and you may disagree, and there are those in the industry especially who disagree the way it's being proposed to be done, but absolutely clear-cut thoughts from the Métis secretary earlier. Nazara is the stock, right? I want to pull up. Stocks, I think, has fallen a little bit more after that interview. We spoke with Nitesh Mitterson, Joint Managing Director of the company. So just want to play out a quick soundbite there. Listen in.
There was no contribution, absolutely no contribution of real money gaming revenues in this financial performance. What that really means is that even going forward, since we are not having any contribution by real money gaming in our financial numbers that we report, there is no disturbance or issues with what we will report going forward. And the company continues to grow strongly, profitably. Now, we do have an investment in Moonshine Technologies, which runs PokerBaazi. We own 46% in the company. And it's speculative now because we don't know what is the content of the bill. But if there is a move, as media has reported, to ban online real money gaming, then of course that particular investment could potentially be at risk. If you see our recent acquisitions that we've done in the last year or so have all been focused on the core gaming IP business, which is a very profitable, very cash flow generative business. We generate through games that are popular all over the world. And that's already something we've been very focused on. In recent commentary also, we've said we're doubling down our focus on core gaming IP. So I think we already have, a very strong pathway for growth. We're already delivering it. As you saw this quarter, we delivered 100% year-on-year growth. And I don't think our strategy changes at all at this point of time.
Volumes on Nazara, that's the management, of course. The volumes on Nazara are the highest in September of 2022. I think Hormuz is also telling us that these are pretty large volumes that we have at this point in time. Yeah, 92, 93 odd lakh shares already traded on your screens now. Any thoughts, Prakash? Nazara, I mean, there's of course, if this is done and the bill is passed in the current form, that investment in PokerBaazi goes away, But in terms of actual P&L impact, as Nitesh pointed out, there's not very much. There's actually nothing in terms of an impact. What's your sense?
Yeah, so I think it's that write-off that is going to impact the company. Since there's not much of contribution on the P&L from this online, real money gaming business, I don't think they will get impacted. What he's saying makes sense. But remember, these are things that, take away a lot of sentiment. I mean, it's like, am I going to buy the stock as an investor, especially as an institutional investor, if it's 12% down, just because the impact has been digested? It all goes back to what's the growth area. Now, Pokerbazi, when it was acquired, was supposedly a very big fillip to the new vertical or new revenue stream, and now that's gone away. So you'll have to price in into your model in terms of what's the organic business growth from whatever they're doing. Most of it is IP-driven, international markets, so they're fairly safe on that. But yeah, it will kind of make people rethink in terms of buying it at some level. You would probably drift it lower, see it drifted lower, and then things could look different.
The Metis secretary very clear that social good takes precedence over the loss of revenue to the centre or even job losses, saying that thousands of jobs may be lost, but crores of people are impacted, perhaps on account of financial loss or addiction. That's Nazara. Stock is down nearly 12%. The other big buzzer, and it continues to be, is Ola Electric. Another day, another big move. Sudarshan joins in to tell us what's getting the street excited. Sudarshan, now above 50 rupees.
That's correct. So do you know the same day in August 2024, stock was at record high of 157, and the similar kind of move that we are seeing today, it's up another 15% after yesterday's move of 9%. So for this week, stock is up almost 30% and up more than 35% from 52-week low that stock had seen last month. Now, if you take a look at the volumes, so today's volumes are 90 crore after yesterday's volume of 58 crore. So if you take a look at yesterday's volume, it was 5x if you compare against 20-day average. So 20-day average of volumes was 11 crore and yesterday's volume was almost 60 crore. Now, if you look at the deliverable quantity of yesterday, it was 14.6 crore. That was highest in last 2 months and almost 25% that was marked for delivery. Now, if you look at the shareholding, so while FI's holding has come down, if you compare from December 2024, when the holding of FIs were almost 39%, now as of June 2025, that has come down to 34%. So there is 400 basis points decrease. But if you look at the domestic shareholding, it's an increase of 400 basis points from 19%. It has gone up to more than 23%. So now it's as of now. So what is going forward? So some of the tailwinds that company has mentioned after Q1 earnings had improved on a sequential basis, and after that company commented that in Q2 auto business will turn EBITDA positive, and in FY26 it's targeting auto business EBITDA margin of 5% or more. Now again festive season is coming, so company is looking to launch few products, and it's bullish on its bike, that is Roadster. Also another positive is China has lifted curb on rare earth magnet supply. That will also aid growth to companies like Ola Electric.
Thank you very much for that. Prakash, Sudarshan has just laid out all the tailwinds that lie ahead. But on the flip side, if you do get this GST rationalization on small cars, two-wheelers, it will make your conventional, ICE vehicles more attractive, which could hurt EV adoption. So explain to us, fundamentally, Ola Electric at this price, how does it look?
So, okay, so here's what I think we need to look at. We need to look at hard numbers. Fundamentals will always go back to assessing what the numbers speak. There is hope that it will turn EBITDA positive in Q2. So we'll have to wait for those numbers to end. And, being EBITDA positive is one thing, but moving to that 5% margin, and, do you really want to pay as much for a company with that kind of margin profile is a question individual investors will need to answer. The second thing is rare earth magnets being now available from China is actually more competition to Ola, because Ola was talking about a gigafactory where they could make batteries without relying on rare earth magnets or elements to make those magnets. So they have a different tech that's yet to be proven again. So there are lots of things which will need to be done. So I think there is still some time before you can kind of pop the champagne and say, okay, things are looking very positive. And in they're not going to be reversible in that sense. We've seen this happen on a lot of businesses which are yet to find their feet, but I think competition is extremely intense. It's going to be hyper competitive for them. And if cars become cheaper, there's a huge migration that happens from two-wheelers to cars very quickly, especially entry-level cars. So, there'll be too much of market share dynamics that will be very quick and fast-moving. I won't personally look at buying into this just because of these things working out temporarily. It's just because Paytm's moved from the dumps into something very bright. Eternal did that. We have a lot of these cases where things are turning around. So people are comparing that, and it's just FOMO that gets most of the attention. But I think fundamentally there's still not enough evidence for it to be kind of celebrated.
Got it. Okay. All right. Prakash, thanks a lot for joining in, giving us a view on all of those names. Wishing you a good rest of the day. Time to slip into a short break. On the other side, Mithun Ashwath, Managing Partner, Kiva Advisors, will be joining in to help us out with his take on the markets, and maybe he'll share a couple of stocks as well.
Welcome back. Let's put the spotlight then on the top movers at this hour. Hormus joins in. Hormus.
Well, a lot of big movers in the small cap space, 10 to 20% gains for a significant number of shares. They start off with Dynamic Cables. First up, it's well over 2,300 crore companies, the biggest single day gain that the stock has seen since May. We've had 50 lakh shares traded compared to the 20-day average of 90,000. But interestingly, the stock in the last 4 years, starting 2021, has doubled in value every single year. So in 2021, the stock was up almost 160%, 22, 117, 23 and 24 also seeing returns of well over 120%. This year, despite this 20% move today, is down year to date, but is down only 1 to 2% now, courtesy of this 20% move. Foseco India is the other one that too has seen double-digit gains today. Take a look at the volumes here. 2 lakh shares have been traded today compared to a 20-day average of just 8,000. It's broken above its 50-day moving average in yesterday's trade when the stock was higher as well, and this too has delivered positive annual returns every single year since 2020. And so the other one in this list is Suraj Estates. It's a recent listing. It's the biggest single day gain that the stock has seen since March. This 12.5% move. It's broken above both its 50-day moving average and is now nearing its 100-day moving average, which is at 326. But despite this move, the stock still remains below its IPO price, which is 360 rupees, and has nearly halved in 2025 so far. So trimming some of those losses is Suraj Estates. Sai Silks is another buzzer today. Another recent listing is the biggest single day gain since August of 24, and this 19th to 20th August period, it has some affinity with it, because on the 19th of August last year, the stock was up 11%. Today, the stock is up 9% in 2025. We've already had almost 30 lakh shares change hands compared to a 20-day average of just around 14 lakh shares. It's turned positive year to date, courtesy of this up move today, but still remains below its IPO price of 222. And the last one of this list is Oriental Rail Infra, another 10% up move, which means the stock is up 15% in the last 2 sessions. It snapped a 6-day losing streak yesterday, and as a result of this move in the last 2 days, the stock has broken above its 50 and its 100-day moving average. Back to you guys.
Okay, Hormuz, trust Hormuz to find interesting correlations, historical data, last this happened, etc., etc. So lots of stuff there. Hormuz, thanks very much for that. Mithun Aswad is with us, managing partner, Kiva Advisors. Mithun, good to have you with us here on the program. Thanks very much. I think we're chatting after a while, so welcome back. So just a quick word first on the index. We're at 25,000, Mithun, and I believe that you see another 10-12% kind of upsides from here, which basically should, in what time frame, and is that predicated on something, earnings revival, or you think it's good to go given where valuations are on the Nifty right now?
Good afternoon, Prashant. I think where we're seeing that 10-12% upside is primarily from, if you look at earnings for FY27, and if we to discount that, we would get about that 10-12% upside based on historical averages. So, any dips in the Nifty towards the 24,000 sort of levels provides you a reasonably decent upside based on that 1-year forward earnings. And as we move closer to December to March, we start discounting, I think, forward earnings. So I think that's where we'll put it as. Obviously, in the near term, these ramifications of the potential excess 25% tariff on India will, put kind of a negative impetus to the exporters, especially, the textiles, some portions of auto components will be affected. But I think if that was to get reversed before the 27th of August deadline, that would provide, another fillip to the markets. As well, the US, there is some expectation of a rate cut by the Fed in September. So I think these couple of pieces of news could propel markets. Domestically as well, the government is talking about GST rationalization. That will also provide some demand push. However, we need to see from when they will implement this, because in the interim, people may postpone purchases of certain products if there is going to be a GST cut.
Got that. Mithun, one of the stocks that you like is TVS Holdings. Tell us a little bit about that. We know it's the holding company for the TVS Group, so they have, the two-wheeler maker. I think even Sundaram Clayton is another, entity that they own. So tell us a little bit more on why is it attractive at this juncture?
Yeah, so good afternoon, Rima. TVS Holdings, basically the holding company of TVS Motors. Earlier, they used to own the real estate business of TVS Group as well, called Emerald, which they exited. And that is when, the market, took this news quite negatively and the stock corrected quite sharply. Post that, we've seen that the management has said that they want to grow the NBFC business into quite a large opportunity. Within TVS Motors itself, you have TVS Credit, and TVS Holdings directly has now acquired an 80% stake in Home Credit Finance. So, these businesses would be, where, the growth driver for TVS Holdings would be there. And obviously, the holding of TVS Motors itself is valued at more than 75,000 crores, while the market cap of this company is in the range of 20 to 23,000 crores. So I think that is a significant upside for patient investors, and is a good way to play maybe even the growth in TVS Motors plus the credit business, where the management has talked about growing the credit business to about a 50,000 crore balance sheet over the next few years.
Hi, Mithun. Good to see you. I wanted your view on a couple of other names. Eveready, I think, is a stock that we discussed in the past that you were quite positive on. The battery got drained out, actually, once the new promoter took over. But now it's finding its form yet again. I think that crucial KKR settlement, that clears the path in case they want to raise some more capital. Any view on that name now?
Yeah, I think, it's tested our patience. It's moved up and down, and now it's hopefully on the right trajectory. Obviously, that KKR resolution will also help the company to offload any assets, non-core assets that they own. They could be in terms of, land where, there are certain plants that they currently have, because they're putting up a large facility in Jammu and Kashmir for the alkaline batteries. And that facility could also house other products from Eveready. So I think over the next few months, once this resolution completely is kosher, the promoter could also infuse capital if required. Plus, there could be this opportunity of selling some of these non-core assets.
So you continue to remain positive on this one?
Yes. Very much.
All right. I hope for you're good, and all your investors good, that good things take a long time to come. So let's see whether or not that plays out. One more stock is Vedanta, I think. We've discussed it in the past, if I'm not mistaken. You have that news flow today with regard to, the demerger that earlier they thought in Q2 it will get done. Then they thought it will be Q3. Now you have some stern comments that are coming there, though the management has responded to our query, and they say demerger, they believe it's in the process and there's no big rejection of sorts. The stock, to be fair, is down only 1% right now. You believe there's still money to be made out here?
Honestly, I think we're quite deep in the money for our investors when we've suggested this company, and it continues to provide a very strong dividend yield. And if we do see some revival in the non-ferrous metal prices, obviously Vedanta will benefit with this demerger or not. It doesn't really matter. Obviously, there could be value unlocking through the demerger, but in itself, the stock is not very expensive, since that dividend yield provides that kind of cushion for Vedanta. Also, its large holding in Hindustan Zinc. Hindustan Zinc themselves have talked about a large expansion plan. So I think, the dividend yield provides that kind of floor to the stock.
Okay, all right, Mithun. Thanks a lot for joining in and filling us in with your take. You're sounding way more optimistic on the markets, and thanks for discussing a few stocks as well. We have the disclosure that comes up for our viewers on the screen. But it's that time of the day when Nimesh gears up, and he's here to tell us about D Street Chatter. Nimesh, what are you picking up today?
Hi, Nigel. Another strong day for the broader markets. We spoke about a lot of buying interest in broader market stock, especially from a bid point of view. And that seems to be the trend today as well. So big moves in a lot of mid-cap names. A lot of individual stocks are up between 15 and 20% as well. I was looking at the entire list, right from Ola to Protein, government. A lot of stocks which have been beaten down of late have seen a big reaction in today's market. So looks like some bit of interest is back from domestic investors in the broader market names. The index itself is up another 0.7 to 0.8%. So big move there. So that's the clear story of the day. There is a lot of momentum back in the broader market stocks, the mid and the small cap names. Technically too, we are above that very crucial support of crucial resistance of 24,950. If you close above those levels in today's market, you might see further short covering rally in the broader market. So that's the sense that from a technical point of view, it looks like there could be further short covering rally. The big sector of the day is clearly the IT index. It's a combination of both fresh buying as well as a bit of short covering as well in the IT, and that led to a bit of big outperformance. So the index is up 2%, and a lot of individual names are buzzing as well. For IT, there are a couple of sales notes as well, which are suggesting that the positioning in IT is very, very low from an institutional point of view. Both the FIs and DI holding in the IT basket is at a multi-year low, and hence you might say a bit of an uptake there. So that explains a bit of move in the IT stocks today. But clearly, the last couple of days, the big momentum seems to be in the broader market names, and that's why you're seeing a lot of winners as well, backed by institutional buying as well in many of those stocks.
Got that, Nimesh. And what about stocks?
So the first stock on my list is India Cements. We've not spoken about this stock for a while now. It's been in a very narrow range in the last many weeks, but now there could be a bit of a supply coming in that particular stock. What I mean is maybe an OFS is on the card on India Cements. Remember, the Ultratech owns close to 81.5%, and they need to bring it to 75. So maybe an OFS from Ultratech could be around the corner in India Cements. That's the first name. The second stock is Shriram Pistons. They were at a conference as well last week, and a lot of interest as well from domestic investors into Shriram Piston. I understand one large domestic mutual fund has been accumulating as well. It's a low liquid stock, but nevertheless, some mutual fund interest is back in Shriram Piston. The third name is Vishal Mega Mart. Across the consumption basket, there seems to be an interest back from large institutions. So expect high delivery volumes, and there is a bit of interest back from larger FIs in Vishal Mega Mart at current levels. And the last name is Astral. The entire, the pipe space has done well of late, and Astral stands out. There is a bit of interest back from larger HNIs, is what I understand in Astral in the last couple of days, and hence a bit of up move in that stock as well in today's market.
Nimesh, any intel on Ola?
Well, Prashant, I knew the seller yesterday, and which is why it was part of my chatter as well, that one large FI was a seller. It's a bit mysterious that, not many people know as to who the buyers are. I spoke to some large HNI investors yesterday, and none of them had a handle on who are the real buyers. Yesterday, even in today's market, look at the kind of volumes we've seen in that stock. In fact, we just flashed that there was a large block as well. I need to get a color on the block, but generally, Prashant, the feedback is not many larger HNIs are having a sense, or at least they've participated in this up move. So a bit of mysterious as to who all bought in the last couple of days in Ola.
Mysterious buy today also, right? As you said, and we'll need to see who the counterparty is on the other side, who's bought, and in some style, in some force, yesterday and today as well. So that is all for you as we've been sort of getting to you. We'll take a break. We're back. What to buy or sell today for reverse trades when we come back tomorrow with our technical experts in just a bit. Okay, welcome back. I think what we're going to do is go across to Nigel, who's walked across to the F&O desk to run us through the stuff which is moving, the stocks which are in focus. Nigel, over to you.
25,100. That's the important mark that we'll have our eyes on for tomorrow, because that's where the weekly expiry plays out. And the PCR has moved up now. The last time I checked, it was more than 1.3 odd. The two strikes that are very active, in today's trading session. You have the 25,000 put, 25,100 put. Both of them, open interest out there has surged on both those two. 25,050 put as well is seeing aggressive writing in today's trading session. Just take a look at the premium. The premium's come down by close to around 45 to around 50%. But the 25,100 call, just take a look at it. You've got the direction right. If you have bought that particular strike, this is, I'm talking about the 25,100 call, but the premium is down because writing aggression is very, very evident at that particular level. So that 25,150, that becomes the crucial level that these bears will look to defend. Important to track that. Getting straight to the stocks then, we are seeing some fresh buying on Eternal. Big move on the stock. Open interest built up as well, and that one is actually looking quite good because the kind of rally that we've seen and the momentum is with that counter. RBL Bank, the street was sniffing some kind of announcement. Maybe it's taking longer than what they're estimating, and that's why, in fact, there is unwinding on that particular counter. And there are two stocks that I'm looking at in today's trading session. PG Electroplast, it gave you that bounce this morning. The problem is, in all probability, that one goes back into the F&O band. So PG Electroplast is the first stock. The second stock that I'm looking at is Kalyan Jewellers as well. As per current calculations, unless something drastically goes wrong, both these two should get back into the F&O band once we get the list out later this evening. And just one more name I wanted to highlight. Astral Limited, one of the big underperformers. We had highlighted this earlier today as well. Promoter entity coming in there, chipping in with some, buying some stake out there. And in the futures market, there appears there is some unwinding and there is some shots that are covering out their positions. Back to you.
Thank you very much for that. Rahul is back with us for a few BTST calls. And just to take stock of how the market technicals have moved in the last 1 hour, well, still up close to about 60 odd points. Sometime back, we were up nearly 100, so we've retraced a bit, but it's still a pretty decent session. Rahul, as you can see, a little bit of a come off in the last 10 minutes. Any trades?
Yeah, so we are still closing off well above the 25,000 mark, and there is a good case for the Nifty to go higher. Apollo Hospital is one setup which is looking pretty promising, a bullish pull and flat pattern seen on the daily charts. One can look to buy at these prices for a BTST trade. Stop loss placed at 7,800, and there is a good possibility this goes towards 7,950 and even 8,000 as well. So Apollo Hospitals remains a top pick for the BTST trade.
Thank you very much for that. Mayuresh Joshi is now joining in on the show now. Mayuresh, first, the stock of the day, Nazara, down 12, down 13%. What would you advise people who hold Nazara? If you have to completely write off the investment in Pokerbazi, in Moonshine, which holds Pokerbazi, what would the fair value be? How do you expect this to play out?
Afternoon, Rima. No, so I think one, we need to probably look at the finer print in terms of what the online gaming bill is probably expected to bring about. And therefore, from a regulatory perspective, obviously the price action has been exhibited onto the stock. From an equity valuation perspective, obviously I think the investments that they've probably made in Pokerbazi to the tune of 800 odd crores, the management also adhered to in the morning as well. There is a risk attached to that if the bill goes in the same avatar that is expected or what the street is probably believing it to be. And if that really happens as an eventuality, somewhere I think the risk of writing this entire amount off to a certain extent happens, or they probably need to tweak it even further to probably ensure that it becomes more skill-based or some tweaks in terms of additions onto the platform that they can bring about. So in my opinion, again, I think the kind of reaction that you're probably seeing on the stock has been a little bit too harsh. I think let's wait for the final print of the bill itself, what probably comes through. And what the management probably does if it comes in the same avatar as I'm mentioning, whether they have some tweaks done to the platform. But yes, I think the hit will happen if it comes in the same form. And therefore, I think the kind of loss that Nazara has probably witnessed, there might be some more pain that Nazara might have to endure.
Okay, all right. You know what, Mayuresh? Today is a big day for us in the studio. It's Prashant's birthday, and we're getting into the celebratory mode. And no better time than talking about a drink. So we have Yash who's joining in to tell us what he's picking up with regard to Sula Vineyards. Yash, It's wine for you?
Well, Nigel, unfortunately, I'm only going to talk about the drink and nothing beyond that. But
Don't rule it out. Don't rule it out. Don't rule it out.
Of course, as
has
you
a
said,
big
it's
plan for
Prashant's
us.
birthday, exactly. Never know what's coming there, right?
Go for it.
But yeah, what we're picking up from our sources is that Sula Vineyards, which is, of course, the biggest in India wine producer as well as seller, is looking for a major diversification as far as its business is concerned, which has been entirely wine so far. What we've been given to understand from our sources is that Sula Vineyards is looking to enter the premium spirits category. Now, according to our sources, this would be in categories like whiskey, scotch, as well as vodka. And the company, that is Sula Vineyards, is in talks with 2 to 3 small players for acquisition of a brand. And as per the indication from our sources, this acquisition could be announced and concluded soon is what we've been given to understand. What is the intention? Essentially, Sula Vineyards sees great potential in leveraging its already existing distribution network, the wine distribution network, to sort of expand the business once it enters into the premium spirits category. As far as its distribution network is concerned, it's got about 25,000 point of sale touch points across 23 states and 7 union territories. So it's quite a widespread distribution network, which the company has already put in place, and that could be leveraged as far as the new business opportunity itself is concerned. As far as its potential to acquire, a company is concerned, the company has a healthy balance sheet where debt to EBITDA, stands at 1.9 times. So of course, that supports any kind of acquisition move which the company has to make. And we've written to Sula Vineyards on this particular story. The company has said that they do not comment on market speculation. Also, the management continuously evaluates logical avenues to enhance revenues, profitability, as well as shareholder value. So along with wine, now it's premium spirits, which would be awaited by the market for Sula Vineyards.
Charles. Okay. All right. Yash, thanks a lot for joining in and filling us in with that. The stock, remember, has been a big underperformer, but they're looking at reinventing themselves. Let's see how they go about that. So we'll slip into a short break, come back. We have a few more questions for Mayuresh. Don't go anywhere. Welcome back. A few minutes to go before we wind up trade. But let's get Mayuresh Joshi back on the screen. Mayuresh, I wanted to ask you about this hotel chain. Taj GVK, the one that GVK Group, they obviously own the properties, and the one that manages it for a fee is the Taj Group or Indian Hotels. Now, the stock valuation-wise has some comfort. The problem is they haven't added rooms at that sort of a pace. But as per their release in Q4, they'll be commissioning one of their units, which is very close to the airport, 250 rooms. It has valuation comfort, but do you think you would like to get in this, or would you like to stick to the leader? Indian Hotels, premium valuations, adding capacity. Would you prefer that name?
So Nigel, again, I think from a Markets with India perspective, we've always liked leadership stocks, and therefore I think within the hospitality space, Indian Hotels and ITC Hotels is something that we continue holding in our portfolios. Valuations are very, very dear, specifically for Indian Hotels. But I think the expectation in terms of the product mix that they're expected to grow, whether it's their premium suite or even Ginger as an example, and even their mid-level hotel offerings, I think there is sufficient room for growth over the next few quarters, and that's what has been exhibited from an FY30 perspective when they have put out their forward numbers, which is priced to perfection. But again, I think there is a potential that they can do relatively better in terms of ARRs. So from a holding perspective, I think Indian Hotels ITC is something that you hold. But for Taj GVK in particular, I think the areas that they operate out of, the expectation in terms of ARRs actually remaining steady state is a huge possibility. They are doing additions. They have done a few additions in the last few quarters, and they are expected to do some additions as well. And therefore, I think the size at which they operate, the areas in which they operate, and the ARRs which are expected to generate with the valuation comfort, I think within the mid-size hotels, that becomes a very, very good bet.
Okay, no, absolutely. And we've been sort of talking about some of this, but, the big one, of course, has been Ola. Mayuresh, do you have any views here? As someone said, when things go from very bad to just bad, I mean, the rate of change can be very large. I don't know if that is what is happening here, or this is just coming off very bombed out kind of levels. Any thoughts?
So Prashant, first of all, I think wishing you a very, very happy birthday.
Thanks, Mayuresh.
I just messaged Nigel that me and Nigel are free in the evening, so you can call us wherever you want.
Yeah, Mayuresh, I'm just messaging you the venue. Make sure you're there.
Nicely
don't
done.
Don't drive and come, because it's going to be a crazy party. Prashant's birthday.
Mayuresh, nicely done, huh? Poker face.
So jokes apart, I think when you talk about Ola, right, and I'll be taking an Uber, not an Ola, for coming out there. So I think when you're probably talking about an Ola as an example, I think there is still sufficient expectations of a turnaround expected to happen, and therefore we'll wait and watch. In fact, our founder, who's no longer there, William O'Neill, has a very famous quote, Prashant. I think I've never met a successful pessimist, but I don't want to use this quote for Ola.
I don't want to use the code for Ola.
Yeah.
Okay. I think that says a lot. Yeah, I mean, 18% higher, humongous volumes. And as Nimesh and I were discussing, we'll see if we figure out who's the buyer, right? I mean, yesterday, today, but there is a significant amount of activity which is going on. All right, we'll see. Market closing, Mayuresh, just stay with us. I'm just going to wrap up things in terms of where we land. So I think about 70 points higher on the Nifty. 25,050 is where we finally end. The Nifty Bank, interestingly, ends slightly lower, about 0.3%. Actually, Bajaj Finance, Shriram Finance, etc. are down and out. The mid and small cap indices were up 1% yesterday. They're up exactly half of it today. But good run, half of 0.45, mid-cap, small-cap index about 0.25% coming through there. But it was really single stocks across a wide range of sectors, very disaggregated sort of list of names with huge volumes and lots of price gains, which really, I think, kept us busy through the bulk of today's trading session. Rima.
Okay, let's run through the movers then. On the way up in the large cap screen, Infosys, Nestle, TCS, HUL. So the top four gainers are from IT and consumer. So these are the sectors coming in for buying. NTPC did well. Tata Steel, Grasim also higher in trade. On the way down, BEL continues to see some profit booking. In fact, defense has been a bit subdued. Banks were under pressure. The Nifty banking index ending with a cut of about 160 points. Names like Kotak Mahindra Bank and ICICI Bank, IndusInd Bank losing between 0.5 to 1%, and Reliance Industries was a bit of a drag. The mid-cap index ends off the highs, but up close to about 0.5%. The big gainers here include Ola Electric, Protean eGov. You had a few hotel names like Lemon Tree, ITC Hotels surging in trade. Mahindra EPC also rallying on very large volumes. On the way down, Nazara Tech, JSW Cement, Shriram Fine, IRB Infrastructure, Vedanta was also one of the stocks under pressure. Well, that brings us to a close. Markets closed up with a gain of about 70 points, exactly at the 25,050 mark. Thank you for watching Closing Bell. Don't go anywhere. Markets Forward comes up next. Markets clock gains for the fifth straight day, marking its longest winning streak in 2 months. The Nifty ends above 25,000 for the first time since July. IT, Realty, FMCG leads the charge.
Shares of Nazara Tech and Delta Corp traded lower after online gaming bill 2025 was tabled at the Lok Sabha. The bill calls for a ban on all online money gaming and bars any advertisement. A centre claims that the bill is a societal decision and is acted based on the feedback received.
After Jio moves its 1 GB plan off the online platform, Bharti Airtel follows by scrapping its 1 GB entry plan. The initiative highlights increasing data usage and raises the potential for ARPU improvement going forward.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vinny Motiwala, with me is Rima as well. Rima, an interesting day. Finally, we managed to close about the 25,000 mark, right? So
yeah, convincingly. So up close to about 0.25% on the Nifty and the Sensex. And so far this week, in the first 3 days, we're up close to about 1.7% on the Nifty. The mid-cap index has moved up close to about 2.5%. And leadership came in from IT. The Nifty IT index was the top gainer. But you also had strength in consumption. So names like an HUL, a Nestle, they've rallied 8-9% so far this week. So this clear GST rationalization where consumption is likely to get a leg up, maybe some margin boost. There is that buying emerging in consumption as well. On the way down, lots of other big stories like Nazara Tech. We'll discuss that in greater detail. But all in all, not bad. Nifty Bank, though, was a bit of a drag, ending down with a cut of about 160 points.
And that too, Nifty Bank actually snapped its 4-day gaining streak as well. So that is where I think a bit of that red that we saw on the screen today. But apart from that, mid and small cap also managed to see some bit of that gain that we saw. So in line with the benchmark indices, no complaining in terms of the advanced decline ratio as well. But we have a very exciting lineup for you all on the show, and what we have in store for you all. We'll start with the top movers and shakers of the day with Hurmas Fatakia and move on and talk about individual stocks, starting with Nazara Tech that slipped in trade following centers introducing the online gaming bill. While we also had Vedanta that witnessed a decline, and this came in after NCLT deferred the company's demerger hearing. On the other hand, Ola Electric surged nearly 30% in today's trade. But last but not the least, we'll also delve into the key market events to watch out for in tomorrow's trading session.
Okay, let's get to the first element on the show then. Hormus is at the big wall with the top movers and shakers.
5 days of gains, and a common thread among these sessions have been the fact that there have been pockets that have been dominant all through the trading session. And today, of course, the day belonged to the IT names, be it large cap IT, mid cap IT. Gains were seen across the board, led by Infosys with a 4% surge. Look at Coforge, Emphasis, TCS and Intellect Design ending with a 9% pop in today's session. The other sector that outperformed today was FMCG. That continued to move higher with Imami, Britannia, Colgate, HUL, all of them seeing gains of anywhere between 2 to 4% in today's session. So proxy for consumption, well, hotel names were also buzzing in today's session, be it Chalet Hotels, Lemon Tree, Indian Hotels, Taj GVK and even EIH Associated ending with a 6% gain in today's session. There are a lot of these stocks that had double-digit moves in today's session, and look at Ola Electric, of course, can't not talk about it. Over 100 crore shares were traded in today's session. Carborundum was another mover today on the upside, 14% higher. Dynamic Cables and Eco Lighting, a 20% circuit for both of them. And Godfrey Phillips, after this recent sell-off over the last couple of sessions, was back in the gains, the 13% surge. The stocks that bucked the trend though today, Nazara was the leader of that pack, ending 13% higher. Aurobindo also clarifying on the acquisition, but the street continued to beat the stock down, 3.5% lower here. Uflex and Sterlite Tech seeing a 6% cut today, and Hyundai seeing some profit booking after a 4-day advance. Back to you guys.
Okay, Hurmas, thank you so much for that. So keeping an eye out on the stock movers in today's trading session. But let's bring on board our experts for today. We have Mayuresh Joshi, Director of Research at Mark Smith India, and Shrikant Chauhan, EVP at Kotak Securities. Mayuresh as well as Shrikant, thanks for joining us on the show. Shrikant, finally 25,000, we have closed above that mark. But again, tomorrow, will we see some bit of that profit taken? Because 25,000 is not something that we've seen sustaining in the last few months.
Yeah, absolutely. The market is highly cautious, even though And despite the market has crossed the level of 25,000 under the leadership of tech companies, we saw very cautious sort of activity in the market. Broadly, I am of the view that the market is going to consolidate for some more time. But one thing is very clear that the supports have shifted from 24,500 to 24,800, and now the next level to watch out for would be 25,500. So it will take some time. We need some support from bank stocks because there we are seeing complete lagging sort of activity. But this particular strength in IT companies may provide some more relief in the near term. I am of the view that we should look for adding those stocks where there is value, and the similar sort of trend we are going to witness for next couple of days.
Okay, let's also get in Mayuresh. Mayuresh, give us open-ended question, but give us one idea, one investment theme that looks attractive to you at this juncture.
So, Reema, I think we've been speaking at nausea about autos, but auto ancillaries selectively can also do well. And therefore, on our watch list, we've got a stock called Uno Minda. My own sense is that the kind of business that Uno Minda is into, switches, seats, acoustics, and the kind of domestic share that Uno Minda has at 89%, I think that's significant because the export share is relatively lesser, which makes it a little bit more immune in terms of tariff and tariff tantrums per se. At the same time, I think from a balance sheet perspective, the debt equity is around 0.34 times, which is very, very healthy. And the expectations with input costs expected to trend lower it makes us believe that EBITDA margins should start trending higher with better leverage at play across their product mix. Across their 70 plants, I think a large part of those plants are very well located and situated near OEMs, which is also a major component in terms of their revenue pie. And therefore, I think as the mix improves, specifically in terms of OEM and the replacement market, along with the product mix, and the entire content per vehicle, which is expected to move from 12,000 for an ICE to almost 36,000. And the platforms that they've probably got, which is largely attuned to electric powertrains or otherwise, which are largely agnostic in terms of adaptability, I think the kind of revenues that they can post can be fabulous. I think from a ratings, rankings perspective, institution holding, whatever you see in CanSlim, this probably looks like a very, very good bet. This is something that we've got to watch list.
Point taken there, Mayuresh. But let's move on and talk about Nazara Tech as well as Delta Corp. Now, these online gaming players or, the gaming side was something that was a bit in focus. And why? Because what we saw coming in is that the cabinet had cleared the gaming bill that calls for a ban coming in on online money gaming. Now, this is something that spooked the shares, especially of Nazara Technologies. Why is Nazara Technologies so spooked by this? Now, they have an investment of around 800 crores in Moonshine Technologies, which is pokerbazi, and that is a 46% stake that they have in terms of equity. Other than that, there were CCPs as well, which are going to be convertible in the next 2 to 3 years, but that is of around 200 crores as well. Now, the current risk that comes in is of this 800 crore investment that they have, because as of now, 46% stake means this is an associate company of Nazara Tech and not a subsidiary. So it is not included in the part of the revenue of Nazara Technologies, so no impact will come on revenue for Nazara Tech. But if there's an investment write-off and if this ban actually goes through, where does this pokerbazi business actually go? And what will this write-off mean for the company on the balance sheet front becomes a big concern. And that is why that was a risk even the management themselves sounded off, and that's a big concern coming in, and that's why Nazara Technology was down. On the other hand, Delta Corp, they also had investments in online gaming, but they divested that in 2024, 2025, and they sold that 51% stake. Now they only hold 5% stake in that online gaming, money gaming side of the business. So not much of a concern coming in for them. They only hold 5% stake. So that's why Nazara Technologies was clearly the one that was under pressure, given that there could be a risk in terms of writing off of that investment. But let's also listen into what the management had to say on this front.
There was no contribution, absolutely no contribution of real money gaming revenues in this financial performance. What that really means is that even going forward, since we are not having any contribution by real money gaming in our financial numbers that we report, there is no disturbance or issues with what we will report going forward. And the company continues to grow strongly, profitably. Now, we do have an investment in Moonshine Technologies, which runs pokerbazi. We own 46% in the company. And It's speculative now because we don't know what is the content of the bill. But if there is a move, as media has reported, to ban online money, real money gaming, then of course that particular investment could potentially be at risk. If you see our recent acquisitions that we've done in the last year or so have all been focused on the core gaming IP business, which is a very profitable, very cash flow generative business. We generate through games that are popular all over the world. And that's already something we've been very focused on. In recent commentary also, we've said we're doubling down our focus on core gaming IP. So I think we already have, a very strong pathway for growth. We're already delivering it. As you saw this quarter, we delivered 100% year-on-year growth. And I don't think our strategy changes at all at this point of time.
Also pertinent to listen into the views of S. Krishnan, Secretary of Ministry of Electronics and Information Technology, METI. We had him on our channel earlier and he defended the gaming bill. He said it's not fair to look at the bill only as a prohibition effort. The government acted based on the feedback it received. Listen in.
The jurisdiction of the bill actually, in a sense, has an extraterritorial jurisdiction. It applies to entities outside the country who are offering it in India. That is there right in Section 1 of the bill itself. Section 69A of the Information Technology Act 2000 can be used to block online money gaming, which comes whether it is within the country or from overseas. We will have to keep monitoring when these games come up, and we have the capability to do that. And as and when it comes up, we'll have to keep consistently blocking new sites which come up, new portals which come up, new ways in which it gets offered. Now, that is an implementation challenge. And that is what the civil service and the entire machinery of government is there for. We have to implement the law which the parliament would enact. The number of jobs created are in their thousands, and the number of livelihoods affected are in their hundreds of millions. The industry itself claims that 450 million people play these games, many of whom are distressed. And I think parliamentarians, ministers, and others who understand the distress of their constituents are very forthright in saying that this is a serious issue. So we have to balance. We have to balance between what is in the overall social good, and many of these people have talent and will find jobs in the legitimate gaming sector, which is being encouraged.
Okay. Shrikant, quick word on the charts of Nazara Tech. Do you see more downside?
Both the stock, there is complete mismatch. I'm to say Nazara is showing weakness. Today's sell-off is indicating us that the stock has formed lower top as compared to its previous top. And now the stock is heading for its next support, where it has the support is having between the range of 1,950. So I think the stock can fall towards 1,000 sort of levels. But for Delta, it is showing some altogether different sort of technical pattern. It is showing that in the near term, we can see the levels of maybe 120, 125. But one thing is very clear, that we need to be careful in Nazara Technology, at least for the time being.
Okay, we'll have to be a bit careful on Nazara Technologies on the for a bit from now on. So keep an eye out on regulations that come in. But let's talk about Ola Electric, right? Because that rallied in trade today, 19% almost uptick that we saw coming in today itself. Almost a 30% uptick this week is what we're watching out for from Ola Electric. And the stock saw its highest trading volumes ever yesterday as well. Sudarshan is joining in with us to give us details on what's aiding the stock. Sudarshan?
So Ola Electric continues to see buying. Even in today's trade, stock was up 19%, and this week it's up almost 35%. And if you talk about today's trading volumes, it's the highest ever the stock has seen, and it was more than 100 crores. And if you compare against 20-day average, it's almost 10 times. And also volumes were aided by large block deals that we have seen of more than rupees 3% equity worth rupees 830 crore. Now, apart from these trading volumes, if you see it, I've tried to look at the shareholding if there is any change. So since December of 2024, FI's holding has come down while domestic holding has seen a sharp rise. So FIs holding in December 2024 was at nearly 39%, which has come down to less than 35%, while domestic holding has increased from 19% to more than 23%. Now, what are the major tailwinds for the company going forward? So first, a company has recently announced Q1 earnings. Earnings had improved on a sequential basis, and company did make a comment about auto business turning EBITDA positive in Q1, and FY26 auto business company is expecting to be 5% or more than that. Now, apart from that, yesterday basically China has announced lifting the curb on rare earth magnet supply, and that also would be positive for Ola Electric. Also, festive season is coming, and companies announcing few launches, but the biggest product that company is bullish on its roadster bike. So we'll have to see how the next few days pans out for Ola Electric. But as of now, we are seeing a very healthy volume in the stock.
Thank you. Sorry.
Okay, thank you so much for that, Darshan. But let's also go to Upasana and understand why these food delivery stocks were in focus, right? Eternal, Swiggy. A note that came in from DAM Capital, what was his highlighting and what is the clear mention in that is what Upasana will talk to us about. Upasana.
Well, DAM Capital has initiated a note on food delivery companies. It has initiated a buy rating on Eternal with a target price of 400 and Swiggy with a target price of 515. Hence, both these counters saw a positive move today. Now, the note says that both the companies have now in a matured phase, and they expect margin expansion and strong FCF growth over the next 3 years for these two companies, mainly driven by lower capex and improving working capital efficiency. Now, coming to the quick commerce businesses, it believes that Zomato's quick commerce business is likely to reach EBITDA profitability by Q4 FY26 and Swiggy by Q4 FY28. It also forecasts a revenue growth of 42% for Eternal and 28% for Swiggy over FY25 to FY28. It believes that the Zomato is already PAT profitable, while Swiggy will reach its profitability by FY28. Hence, both these counters remained in focus today on the back of this note.
Thank you. And the other big story is Vedanta. Shares declined in trade after the NCLT deferred the hearing on the company's demerger, flagging serious objections. However, Vedanta has responded to this, saying that SEBI hasn't opposed the demerger and their counsel could not conclude the arguments today. Ashmit joins in with the details.
Well, Vedanta demerger facing twin hurdles at the NCLT in the form of the government as well as the market regulator, SEBI. Now, let's bear in mind, the NCLT was hearing an application filed by Vedanta for its demerger, seeking a legal sanction. But there were two hurdles. Number one, the government, the MOPNG, the Ministry of Petroleum and Natural Gas, coming on board to say that it has strong objections, saying that this demerger should not be allowed. It has strong objections. The government submitted that it finds itself in a position where it will be unable to recover the dues coming to it, going on to say that there has been lack of disclosure by Vedanta, there's been concealment of some important details by Vedanta, that in some cases the revenue has been overstated, liabilities have been understated, and all of this has led to a situation where the government is front and center opposing Vedanta's demerger application. That was, however, only one part of the story. The other part is with respect to SEBI. Now, even the government, as a part of its submissions, had clarified that Vedanta had tweaked, had modified its demerger scheme after getting the nod from the exchanges as SEBI. That is something that was also seconded by the market regulator. SEBI was present in NCLT. They submitted that there indeed has been a modification. This is a gross violation, a serious breach of its master circular, and that it has issued an administrative warning to Vedanta. This warning needs to be tabled before the board of directors of Vedanta for their consideration. So clearly, twin hurdles here. One SEBI, two the center. The next hearing is on September 17th.
Okay. Mayuresh, your thoughts coming in on, when you look at Vedanta, this concern and this delay that comes in of the demerger, how should one actually watch out for Vedanta now?
So, Vinny, I think it should be a wait and watch mode, because I think let the hearing probably come through and then we'll get a clearer picture. Obviously, I think from a core earnings perspective, I think the core metals pack itself, whether it's silver has been doing pretty well, so there is no two ways about it. But I think the other commodities that Vedanta probably has, I think the pricing itself remains a little circumspect, and how demand will come back, specifically globally, which will then influence LME prices, which will largely then determine how the overall growth dynamics on the balance sheet will appear. So let's wait out for the hearing. I think there's no harm in waiting for that. as we speak.
Gentlemen, thank you very much for joining in. Get into a break on the other side. Top corporate voices and the big events to watch out for. Stay tuned. Welcome back. Let's take stock of the key corporate voices of the day. So first up, despite global geopolitical headwinds, India's hospitality industry continues to deliver. That's the word coming in from the management of Chalet Hotels. In a conversation with CNBC-TV18, the management said the company expects the growth momentum to remain healthy in Q2, with the upcoming festive season likely to drive further improvement. Average daily rates are projected to strengthen in the second half of FY26. Margins likely to remain stable in the mid 40% range.
We also spoke to the management of Galaxy Surfactants, K. Natarajan, who said that he is seeing early signs of recovery in the Indian market and expects demand to strengthen in the second half of the year. He added that the GST rationalization would further boost consumption, while business in North America remained challenging due to tariff uncertainty and sluggish customer orders. Europe and Latin America did well. Natarajan also said that the company is hopeful of achieving around 6% volume growth in India, where business is currently growing at 3 to 4%.
And before we wrap, we'll get you some of the key market events to watch out for tomorrow. Upasana joins in.
First up, let us start with the global economic news. Countries like US will be reporting with the Jackson Hole Symposium, one of the most important, from 21st to 23rd of August. US will be also reporting its initial jobless claims and also existing home sales data. Now, UK and Europe will be also reporting its PMI data tomorrow. And back home, that is in India, S&P Global Manufacturing PMI data will be out. Now, let us look at the key stocks that will be in focus tomorrow. Vedanta board to consider second interim dividend on 21st of August. GMR Airport will also be in focus on the back of fundraising plans. And lastly, counters like Coal India, HAL, RVNL, all these counters go ex-dividend. Now, coming to the other corporate affairs, Minister of External Affairs to hold talks with Russian foreign ministers in Moscow tomorrow. So that is one of the key important events that we'll be closely tracking as well. Now, GST Council nominated group of ministers on rate rationalization, which is likely to meet tomorrow. And mind you that the monsoon session of Parliament is likely to end tomorrow as well. Now, coming to various IPOs such as Vikram Solar, GEM Aromatics, Patel Retail, Shriji Shipping Global, all these IPO closes for subscription tomorrow. So all in all, looks like quite a power-packed day.
Okay, Upasana, thanks so much for that. But with that, we'll wrap this edition of Markets Forward. Thank you so much for tuning in. Don't go anywhere. Up next, you have more news and updates.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The Sensex and the Nifty gain for the fifth day. This is the longest winning streak in 2 months. The Nifty reclaims the 25,000 mark. Government introduces a bill proposing to ban the $25 billion online real money gaming industry. The centre claims broad political support, argues for larger social good by curbing addiction and debt spiral. But Karnataka's IT minister calls a blanket ban a knee-jerk and bad policy making. The government opposes Vedanta's demerger plan at the Company Law Tribunal, flags inflated revenue and concealed liabilities. SEBI says Vedanta modifying the demerger plan after getting a no-objection certificate is a serious breach of the master circular. Kremlin lays down the talk of imminent meeting between Putin and Zelensky as the US and EU begin drafting security guarantees. Trump rules out deploying US troops in Ukraine but hints at air support. Kyiv claims 14 people injured in Russian attacks across the Sumy region. India's Foreign Minister Jaishankar arrives in Moscow for bilateral discussions. The Russian ambassador to India expects crude oil trade between both nations to remain unchanged, despite tariff threats from the US, says there is no alternative to Russian oil as it is offered at a 5% discount on average. India and China set to resume direct flights and border trade in a bid to reset the bilateral ties. China also promises to lift curbs on the export of rare earth. An expert group will be set up to resolve border standoff, and a working group will be set up to maintain peace at the border. Shares of Hindustan Aeronautics rise after the Union Cabinet clears a 62,000 crore rupee fighter jet deal. HAL will supply 97 light combat aircraft to replace the MiG-21 fleet, which will retire next month. Chaos in Parliament as Home Minister Amit Shah tables a bill to remove ministers detained on serious charges for more than 30 days. The bill will also provide legal framework to remove the Prime Minister and Chief Ministers. Well, it's a busy day in Parliament, but it's also an action-packed day for the stock market. The market's closing higher for the fifth straight session, making the longest gaining streak in 2 months. Nifty ending above 25,000, and this is the first time that we've seen that in nearly 2 months. So that's the Nifty closing above 25,050 is where it closed. 213 points higher on the Sensex. The Nifty Bank, though, down by about 160 odd points today. In the mid-cap index, higher by about 0.5% or so. Prashant standing by to wrap up the market action for us. Day 5 and gains continue, Prashant.
Well, fifth day of gains for the Nifty. The market, the index ending about 1/3% higher. Broader markets doing a little bit better. Nothing, compared to the outperformance that the broader market saw to the Nifty yesterday or the day before yesterday. Today it was milder. So those indices ended up. Nifty Bank, interestingly, ended slightly lower, about 0.25% down by the end of it. But it was IT, and I will come to stocks in just a bit, which shown up with some action. So large caps, I'll start with IT. Infosys was the big one, 3.5% move. TCS and Tech Mahindra were not far behind either. FMCG, Nestle, HUL, Tata Consumer also on the Nifty, which did quite well. In terms of cuts, there was Bharat Electronics, but small, nothing large. Bajaj Finance and Shriram Finance were the three names which lost between 3/4 to about 1.5%. The big gains in the broader market coming through in, actually, again, nothing to do with A or B sector, but very disaggregated. Ola, for the second day running, huge amount of volume. I think it's done 25% in 2 sessions flat. Godfrey Phillips was up yesterday. It's up today. Protean, has a catastrophic fall from 1,700 rupees to 800, coming up a little bit. Bluestone, recent listing. Carborundum Universal was up sharply. HLE Glasscoat having a fantastic week. There was a company called Denta, which is up for the last 3 sessions now. Newland Laboratories, Intellect Design, Travel Foods again is a fairly recent listing. Sula Vineyards, our story. They're going into harder stuff compared to just being in the wine space. Sky Gold, Eco Lighting, Sai Silk, which is Kalaman. These were some of the other stocks which really participated. But no real common thread through any of these except the fact that some of them have been really sold off quite hard. Some cuts coming through as well. Nazara, of course, is the obvious one. Again, news-related. Aurobindo was down from the word go. Hyundai, Tilaknagar Industries, Goldium, and something like a Sterlite Technologies were also slightly lower. I think 5 days on a trot, almost making up for that 6-day drawdown that the Nifty had seen. We'll see if the market's able to get above the so-called Lakshman Rekha, which is, an important retracement of the entire fall. And then, I mean, you basically will start to flip from being in a slightly downward, sideways kind of trend to maybe asking for higher levels. We'll watch that space. Back to you.
Yes, we will. Prashant, many thanks for joining us. The top story this evening, the union government has tabled a bill that proposes a sweeping ban on online money games. IT Minister Ashwini Vaishnav introduced the bill in Parliament today. Now, the bill highlights the proliferation of online money games has had a harmful impact on families, society and the economy, and it's called for prohibition, which essentially means a ban. Regardless of whether the games are based on skill or chance, there is no differentiation. Either skill or chance, it doesn't matter anymore. If there is a fee or a deposit, then you are considered an online money game. The bill also proposes to constitute an authority for regulatory oversight. That's not all. It also provides an insulation to the government or the authority for any actions taken by them in good faith, but it's not clarified further. The move comes as a body blow to the gaming industry, which is paying taxes to the tune of 22,000 crore rupees to the government. That was the number for last year. The Gaming Federation, in a letter to the Home Minister, has urged for progressive regulation instead. The IT Secretary, while defending the bill, told me that the political leadership was clear about the need to act against online money games. Karnataka's IT Minister, Priyank Kharge, has called a blanket ban a knee-jerk reaction and bad policy making. We will come to that in just a bit, but first let's go across to Ashmit, who decodes the bill for us. Ashmit, very clear, there is no room now as far as online money games are concerned. It doesn't matter whether you're skill or chance. That's the death knell now as far as online money games are concerned, with this bill being tabled in Parliament. Ashmit.
Well, the government clearly has its mind made, saying that there's no room available as far as online real money gaming is concerned. The bill's been tabled in the parliament. What highly placed sources within the government tell us is that there's unanimous support across party lines, going on to say that this is an issue that's affecting the society, saying that 45 crore people are affected in the form of losses. The losses estimates say, as per the government, these losses stack up to over 20,000 crore rupees on an annual basis, and that's the reason why there was a need felt for the government to intervene. As a part of this intervention, this bill very clearly spells out complete prohibition, complete curtains on any form of online real money gaming. In fact, real money gaming has been defined in the bill as not making any distinction between what is skill, what is chance. All forms of real money gaming are prohibited. Endorsing, advertising such platforms is also prohibited. Banks, financial institutions are prohibited from allowing any transfer of funds from the user to such platforms. What the government says is that through this bill, they want to recognize that the users are in fact victims, and therefore there is no legal penalty for them, but there are definitely teeth. Those found violating these rules, these provisions of the bill, could face jail terms as high as 3 years. There could be penalties as high as 1 crore rupees, and not just that, even for companies that are found violating the provisions of this bill, they could potentially face legal action. The bill clearly says that people in decision-making positions in those organizations, in those companies, could also be liable to face legal consequences.
The jurisdiction of the bill actually, in a sense, has an extraterritorial jurisdiction. It applies to entities outside the country who are offering it in India. That is there right in Section 1 of the bill itself. Section 69A of the Information Technology Act 2000 can be used to block online money gaming, which comes whether it is within the country or from overseas. We will have to keep monitoring when these games come up, and we have the capability to do that. And as and when it comes up, we'll have to keep consistently blocking new sites which come up, new portals which come up, new ways in which it gets offered. Now, that is an implementation challenge, and that is what the civil service and the entire machinery of government is there for. We have to implement the law which the parliament would enact. The number of jobs created are in their thousands, and the number of livelihoods affected are in their hundreds of millions. The industry itself claims that 450 million people play these games, many of whom are distressed. And I think parliamentarians, ministers, and others who understand the distress of their constituents are very forthright in saying that this is a serious issue. So we have to balance. We have to balance between what is in the overall social good, and many of these people have talent and will find jobs in the legitimate gaming sector, which is being encouraged.
Well, that is the METI secretary defending the ban on online money games, saying that this is in the needs and interests of society and there is political support across party lines for the same. But how will this move impact real money gaming industry and listed companies like Nazara in particular? Now, the Nazara stock saw some sharp cuts in trade today. Vinny is standing by to give us the details. Vinny.
Right, so absolutely these gaming stocks were the ones that were in focus today, and this is obviously come in after that government has approved that online gaming bill which was tabled today for real money games which are likely to be banned. So that impacts all these online gaming apps and online gaming companies as well. Now Nazara Tech, what is the risk that we face here? Now Nazara Tech overall had invested 46% in Moonshine Technologies, that is the PokerBaazi business of the company. The net revenue for PokerBaazi in Q1 was around 191 crores. Now, 46% means it's an associate company. It's not a subsidiary of the of Nazara Technologies. So, associate company revenue is not included in Nazara Technologies revenue. That is why the company said and clarified that currently there is no impact of Moonshine Technologies in terms of the revenue because it's not included, so it doesn't come in terms of impact coming in on the EBITDA front as well. Now obviously the loss that PokerBaazi is facing, that is something that comes in on the bottom line front for the company. So loss figure, that is something that is there, that's where the impact comes in. But other than that, the bigger impact is of that 46% investment that they've made in Moonshine Technologies. 800 crores is what they'd invested. There's around a 200 crore more CCPs that they have, which is convertible, preferential shares which are there, which was convertible 2 to 3 years later from now. So that is not a worry, but that 800 crore investment is a worry because if this business doesn't exist or there are issues that come in on this business, then they will have to start writing it down. That will impact the balance sheet of the company. So the risk of this investment write-off, possibility of that front is a fear that comes in if this bill goes through. That's a major concern that even Prabhudas Leeladhar highlighted, and they said that PokerBaazi even accounts to around 35% of the SOTP EV valuation of Nazara Technologies. So that if this goes through, this ban comes through, then they would have to revise the target price downward as well. 35% is a big chunk over there. Now let's talk about Delta Corp. Delta Corp also had that online gaming business, but they divested this business in 2024-2025 and they sold it to Head Digital Works, and that was at a price of around 491 crores. 51% stake is what they had sold completely, and now they only hold 5% stake. So not a major investment there, doesn't impact their revenues, bottom line, nothing on that front as of now, and that is why Delta Corp recovered from the day's lowest point. But Nazara Technology, the risk of write-off is a big concern of that 800 crores in PokerBaazi, and that is what has led to the sharp fall in the stock today.
All right, Vinny, many thanks for the big corporate story. We are tracking today. Shares of Vedanta declining in trade after the government objected to the company's demerger in the National Company Law Tribunal. Now, the centre has claimed that it has serious objections with the demerger, flagging inflated revenue and concealed liabilities. The market regulator SEBI has also said that the company modified the demerger plan after getting a no objection certificate. Ashmit is back with us now to take us through the government's argument and what this means for Vedanta. Ashmit.
Well, Vedanta demerger facing twin hurdles at the NCLT in the form of the government as well as the market regulator SEBI. Now, let's bear in mind the NCLT was hearing an application filed by Vedanta for its demerger, seeking a sanction, seeking a legal sanction. But there were two hurdles. Number one, the government, the MOPNG, the Ministry of Petroleum and Natural Gas, coming on board to say that it has strong objections, saying that this demerger should not be allowed. It has strong objections. The government submitted that it finds itself in a position where it will be unable to recover the dues coming to it, going on to say that there has been lack of disclosure by Vedanta, there's been concealment of some important details by Vedanta, that in some cases the revenue has been overstated, liabilities have been understated, and all of this has led to a situation where the government is front and center opposing Vedanta's demerger application. That was, however, only one part of the story. The other part is with respect to SEBI. Now, even the government, as a part of its submissions, had clarified that Vedanta had tweaked, had modified its demerger scheme after getting the nod from the exchanges as SEBI. That is something that was also seconded by the market regulator. SEBI was present in NCLT. They submitted that there indeed has been a modification. This is a gross violation, a serious breach of its master circular, and that it has issued an administrative warning to Vedanta. This warning needs to be tabled before the board of directors of Vedanta for their consideration. So clearly, twin hurdles here. One SEBI, two the centre. The next hearing is on September 17th.
Ashmit, many thanks for joining us. Vedanta responding to that, saying that they are even willing to issue a corporate guarantee to the Ministry of Petroleum and Natural Gas. Up next, chaos in Parliament as Home Minister Amit Shah tables a bill to remove ministers detained on serious charges for more than 30 days. That and more when we get back. Well, the big global story just days after the Alaska summit and Zelensky's visit to the White House, the Kremlin is playing down talks of any imminent meeting between Russia's President Putin and Ukraine's Zelensky. President Trump is calling for a trilateral summit between the US and Russia and Ukraine. The European Union has begun drafting security guarantees. Trump has ruled out deploying US troops in Ukraine, but has signaled at the potential of air support. Amidst all of this, Russian attacks on Ukraine continue. Kyiv claims 14 people injured in Russian attacks across the Sumy region. Russia's ambassador to India expects crude oil trade with India to remain unchanged despite the threat of US sanctions. Russia's envoy says Indian refineries receive around 5% discount on an average, which they will not get anywhere else. He also added that India and Russia will further develop a currency payment settlement system. He also said that the Trump administration's secondary sanctions on India are illegal and the pressure on India is unjustified.
The positive outcomes of the Russian President Putin visit to the US last week, after that, President Trump, as far as according to the reports, decided not to impose additional tariffs on India. But whatever happens, if whatever are the disruptions globally, so we are very much capable to resolve them for the mutual satisfaction with India, and we will just continue our partnership as we do, despite any external threats.
Well, that's Russia's ambassador to India saying he expects trade to remain unchanged. India and China, meanwhile, are set to resume direct flights and border trade in a bid to reset the bilateral ties. China has also promised to lift curbs on exports of rare earths. All of this after China's Foreign Minister Wang Yi visited India, and Prime Minister Modi is set to visit China later this month. Parikshit standing by now to take us through the details. Parikshit, this has been work in progress over the last several weeks now, and of course it's been picking up momentum. The story that we broke about flights likely to be resumed now confirmed.
Absolutely, and both sides are working towards incrementally resuming, re-engaging economically, and also possibly bringing some stability at the border as well. We haven't seen full disengagement, but during the talks, both NSA Doval and Wang Yi acknowledged that there is at least peace and stability at the border. The Ministry of External Affairs, after the conclusion of these meetings at the level of foreign ministers, the call on by the Chinese foreign minister and the Prime Minister and his meeting with the NSA Ajit Doval, has gone on to say that there is a need to take a political perspective of the overall bilateral relationship while seeking a fair, reasonable, mutually acceptable framework for the settlement of the boundary question. This is the main reason why we have been having tensions, disputes between India and China for decades. Having said that, new mechanisms have been decided upon by the two sides to somehow disengage and bring peace at the border. This includes an expert group to look at an early harvest boundary delimitation in the India-China border areas, working group to be set up to maintain peace and tranquility in border areas, and creation of more mechanisms in order to bring stability in ties in eastern, middle sectors, in addition to the western sector. Now, let me speak about the economic partnership, which is very critical. Both sides have decided to resume direct flights at the earliest, so we could possibly see an announcement on that during the visit of Prime Minister Modi to Tianjin, where he meets Xi Jinping. India and China will finalize an updated air services agreement. They have agreed on the facilitation of visas to tourists. India has already started giving visas to Chinese tourists. Also visas for businesses, media, and other visitors in both directions. It has been decided upon to reopen border trade through 3 designated trading points, namely Lipo Lake Pass, Shipkila Pass, and Natula Pass. And both sides agreed to facilitate trade and investment flows between the two countries through concrete measures. Now, sources have told us that India has been assured by China that consignments of rare earth magnets, tunnel boring machines and fertilizers have left for China from India. Those restrictions have been lifted, but we really have to wait and see how this pans out over the next couple of months.
All right, Parikshit, appreciate you joining us. That is the latest in the India-China talks. Chaos in Parliament today as members of Parliament almost got into a scuffle. Home Minister Amit Shah tabled a bill to remove ministers who've been detained on serious charges for more than 30 days. The bill also provides legal framework to remove a Prime Minister and Chief Ministers. The legislation has been sent to a parliamentary committee for vetting. Abhimanyu standing by with the details. A controversial bill, Abhimanyu, now going to a select committee.
The bills introduced in Parliament call for removal of any minister in the central or a state government if he or she has consecutively spent a period of 30 days in jail. The bills also allow for reinstatement of any such minister after their release from jail. However, the opposition has termed these bills as draconian and has claimed that they may be weaponized or misused by the union government to destabilize opposition-ruled states and their governments by arresting several ministers and even their chief ministers in several arbitrary cases. It remains to be seen what kind of recommendations would be given as far as any further approvals and any further consultation within the Parliament on the bills is concerned. On the other hand, the rationale behind bringing these bills is to check corruption and also to avoid an administrative backlog or a peculiar situation similar to the one which had emerged in the national capital when Arvind Kejriwal, when he was the sitting Chief Minister of Delhi, he was arrested, and while being in jail, he could not sign several files delays which led to an administrative backlog, and there was no law which was in place to force the resignation of a minister who's in the custody of a central agency or the police. It remains to be seen what kind of further deliberations and consultation would take place on the bills which already have been introduced in Parliament.
Abhimanyu, many thanks for joining us. A controversial bill being introduced there in Parliament. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Last week, India completed 78 years of independence. And like many of you, I also heard Prime Minister Modi's message of Atmanirbharta delivered from the ramparts of the Red Fort. And it really struck a note. Atmanirbharta, self-reliance, the one thing that guards our independence. Now, it holds true for a country, and it definitely holds true for us as individuals as well. Self-reliance is the only way to ensure our financial freedom and our financial well-being. Over the last many years, mutual funds have become our biggest partners on this road to financial freedom. Small ticket or big, metro or non-metro, mutual funds have sparked the revolution, which is rapidly converting India from being a nation of savers to a nation of investors. And today, we take stock of where this journey is heading and what new innovations the mutual fund industry perhaps has in store for us investors. Well, I have a full house with me on the show today. So let me quickly welcome all of the mutual fund veterans. I have with us, of course, Navneet Manoj, Chairman of AMFI, as well as MD and CEO of HDFC Asset Management. I have Saurabh Nanavati with me in the studios as well, CEO of Invesco Asset Management. And, of course, we have Nilesh Shah of Kotak Mahindra AMC joining us, virtually. And again, in the studio, Sandeep Sikka, Executive Director of Nippon Life India Asset Management. Gentlemen, thank you so much for joining in. What a pleasure. It's a full house. And I think it's great to have all of you in because we want to really understand where the journey is going when it comes to mutual funds, self-reliance and financial freedom, because that's what it's all about, right? So tying in with this Independence Day month. So let me open with you, Navneet. Broad thoughts on when the whole aspect of mutual funds giving you the freedom that you need in your life. How do you describe, first of all, financial freedom?
So thank you, Surbhi, for having us. It's an honor and privilege for all my industry colleagues and me personally to be part of this industry over the last 30 years. It's a coincidence that we are also celebrating 30 years of MFI, and it's been an honor for all of us to serve this industry and serve millions of investors. You started by talking about Prime Minister's message on Atmanirbharta. That's what he's been saying for the last few years, and it's very important that in every possible way, each and every citizen lives a life of dignity. Government has done a tremendous job on creating that social security by supplying many things to meet their day-to-day needs, but at the same time for financial security, it means living a life of dignity. It means ability to fulfill your aspirations. It means life without financial insecurity. And I think mutual fund as a product, mutual fund as a solution provider over the last couple of decades have worked very hard to provide that ability to each and every household that they can meet their financial goals, they can meet their life goals by investing through mutual funds. So benefits of diversification, benefits of convenience, and making it easier for every investor to create a financial freedom for themselves. So that's what our industry has been working under the guidance of our market regulator.
Absolutely, and for the average Indian, citizen, moving away from just the concept of letting your money sit in a bank account, and that's the best way to ensure your retirement safety, security, etc., to looking at it in a very, very different manner from an investment lens. Let me bring in Nilesh as well. Great to have you on this discussion, Nilesh. So you tell us, let's talk, when we talk about financial independence, what is the definition? Is it X amount of money in the bank? Is it a 6-digit salary? How should a person really think of financial empowerment and financial independence?
Thank you, Surbhi, for having us over here. And financial independence is a state of mind. आपको जो करना है, वो आप कर सकते हैं. When you reach that state, that's financial independence. For someone, it could be 6-digit salary. For someone, it could be bank balance. For someone, it might be wealth creation. It's a state of mind which allows you to do what you want to do.
Okay, let me bring in both Saurabh and Sandeep into the conversation as well. So it's been a long journey, and most of your own companies have been around for decades as well. So Sandeep, you tell us, what are the changes in the investor that you're noticing? I mean, just this year, if we see, the market has not been very charitable with returns. But you folks pull in the money every month. I mean, I report on those mutual fund inflow numbers, and the last number was a record high number. So your thoughts?
So Surbhi, first let me start by, I think you mentioned about the Prime Minister's speech on the 15th. I think Prime Minister had this, Har Ghar Mein Taranga. I think today, we're happy to say, as a part of the mutual fund industry, we want to take it Har Ghar Mein Mutual Fund. So that is something what the industry is working towards. And I'm very happy to say, this is actually, it's happening. Today, we can proudly say, almost every pin code of India, every district of India, we've got investors. And while the foundation of this was laid by the regulator long back when we started something called B30, and today we give credit, now on the 30th of our AMFI, we have crossed that stage of B30 to B300. And the reason why I give this example is this is the big change that has happened. Earlier, the mutual fund investors used to come from big cities and towns. Today, the fact is, I think coincidentally as an industry, we opened our first branch in Leh. Now, that tells you where we are going. But the big change that we are seeing, I mean, the markets you mentioned, right, this year the markets have been flat. But the big change that we have seen is investors are maturing. 10 years back, when markets used to be volatile, the number of calls we used to get from investors in a call center, our RMs used to be very high. Today, the fact is, when the markets have been volatile, people are investing more through SIPs because they understand, they need to time it out. You can't time it to perfection, but you need to spread out your investments. So that's a big change we have seen. And also another big change that we have seen, way back in 2000, when my father retired from government service, I had to convince him to invest in mutual funds. But last time my daughter started working, she asked me this question, which SIP should I invest? That is the big change. That is the new India, where young investors want to move away from bank deposits and come to mutual funds. And that is exactly what is going to make India Atmanirbhar Bharat, where every investor will be joining this journey of India growth story through the mutual fund industry.
Okay, well, absolutely. I mean, fingers crossed and optimism galore. But Saurabh, every time the market falls, obviously this thesis gets tested, and till now retail investors have completely prevailed, right? It's just that now, and especially for people who probably came on the mutual fund investing bandwagon after COVID, this is probably the first time that their patience is being tested in terms of returns. Usually returns draw more inflows, draw more investors. But now, with what we've seen the last couple of months, do you think there is a bit of a test ahead for new investors, young investors particularly?
I think the new investors, the perspective has changed. This whole education which has been carried out by the regulators, AMFI as an association, the fund industry, I think is hitting home. And when you talk with these investors, they are coming with a 5-year, 10-year perspective. They are basically saying that, look, I want to participate. It's time in the market rather than timing the market. You may feel that the last year has been challenging from the index being flat. I think there are a number of funds which have actually delivered even double-digit returns, and that's where the active fund management part of the industry has come in. So if you analyze the flows, you will see those performing funds are also garnering the majority of the money, because they have really stood out. Flat returns on the index, but a double-digit return on your mutual fund. That's a great outcome in that sense. So I think what has really changed is, you go back 30 years, that first, Morgan Stanley mutual fund, where people lined up thinking that 10 rupees will become 30 rupees. And come today when people are basically saying, look, I'm here for the long term. There is an NAV which reflects the correct market price, and I just want to stay put. I think that's the big difference over the years. Just one more aspect on this. The industry has gone through tough times. 2008 to 2016, I'm not sure if but the numbers will show that retail investors were leaving the industry. They have started coming back from 2016 onwards. And I think this time it is for the right reason.
That's interesting, Saurabh, that you're saying that the lessons seem to be getting learned very well. So Navneet, you tell us, I mean, in your experience, and I'm talking about the recent past, the last 2 years, 3 years, post-COVID, what is the one trend that you've noticed in terms of investor behavior that really stands out as a change?
If I can use one word, I think it's resilience. Over the last couple of years, notwithstanding the volatility, what we are seeing is a resilience among investors, maturity among investors, and across all kinds of investors. Sandeep talked about more and more investors joining from smaller towns. Saurabh talked about the younger investors and the behavior that's changing. I think that's one of the biggest change. Investors understand that life expenses are increasing. Life expectancy is increasing in terms of number of years, and life expectations are increasing. They need to invest more, and they need to invest for longer term. I think that's one of the biggest, I would say, trend that is clearly visible over the last couple of years. And we have seen, like last month, you gave the example of July, where markets were not doing well. I think you had all kinds of news flow, which led to volatility. But despite that, investors kept the faith and increased their SIPs.
Nilesh, on this point, domestic investors are all coming in, keeping their faith for the long term, and that money has been pouring in. The argument that's often made is that is it going to, not really a bubble, but is this going to create its own, repercussions? Because domestics have been buying at a time when foreigners have been selling, when insiders have been selling, private equity has been selling. So sometimes you feel whether retail could be, a little vulnerable in an environment like this.
Anyone who believes there is a bubble Will he be willing to short the market at current level for 10 years? Most will say no. For 5 years, answer will be no. For 3 years, answer will be no. Let the action speak louder than the world. Now let's look at from a consumer point of view. We as Indians prefer short-term gain over long-term pain. There is 9 out of 10 speculators losing money in retail on speculation F&O as per SEBI's report. About 1 lakh crore is lost over there. In the gaming, again 1,20,000 crore is lost. In the lottery, sellers make money, not the buyers, but there are states where people put more money buying lottery than buying equity. If you look at Ponzi scheme, even in Mumbai, in Taurus, a jeweler, bankrupted people. Now, all these people, if they invest in lottery, Ponzi, F&O trading, gaming, crypto, people have no problem. But when they invest in mutual fund, yes, in the short term, they could lose money, but in the long term, they will make money. Now, should we go for short-term gain and long-term pain, or should we go for short-term pain and long-term gain? So from a consumer point of view, investor point of view, as well as from a commentator point of view, mutual fund sahi hai.
Okay.
So I come in here, it's many times this assumption is there that foreigners are selling, foreigners are more smart, Indian investors, retail, like we said, are they gullible? But the data shows something very different.
Not just foreigners. Indians are selling. Indian promoters, Indian venture capitalists or private equity who were holding the stocks earlier.
Let me use all the retail investors, let them see them as a stock. And when we have a lot of retail investors, we have done this analysis many times for our own database, The smallest of investors, the retail investors, actually have made the maximum money.
On that note, we're going to take a very quick break. On the other side, we want to find out from these gentlemen what the future holds for us investors. There's so much changing with respect to regulation. The industry's been given some more freedom to, offer differentiated products as well. So what does it mean for us? We'll find out after the break.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week we're talking about what the mutual fund has in store for us in our journey towards self-reliance, Atmanirbharta, and financial independence. And we have, of course, industry veterans with us in the studios, as well as Nilesh joining us virtually. So, gentlemen, now I want to talk about the future, because the future does look very, very interesting. You know, almost every couple of months, we have new regulations coming in, some of them to tighten up the screws on the industry. But these days, there is a lot of talk about offering more flexibility as well. So I want to take that up with the panel. And Saurabh, let me start with you. The latest consultation paper that I read through had a lot of, different aspects that they were talking about, allowing funds to perhaps invest in other areas like REITs, equity funds to invest in, things like REITs and gold, etc. There is, also talk about looking at value and contra funds. How do you limit overlaps and yet let the products be out there in the market? So let's just start right there. When it comes to investing in things beyond equity, is the time right? Is this something that the industry would want?
So great questions would be, let's first start at the core of what you mentioned, different asset classes. And here, I think we need to understand that mutual funds is not synonymous with equity investing only. We need to understand that it's a vehicle which basically is giving you the option to invest into every underlying asset class. So it's equities, it's debt, it's gold, silver, international equities, REITs, InvITs. So it's actually a medium in which you can get exposure to whichever underlying asset class you basically can get into.
On that, actually, I should request our director and producer to throw up the stat. So let's understand how the industry also stacks up right now, because these are the latest numbers. The total industry AUM of close to 75 lakh crores. The largest still is equity. Over 33 lakhs is equity. The next big category, of course, is fixed income debt. That's about 18 to 19 lakh crores. And then there is the hybrid category, which is now growing and gaining popularity and prominence as well, over 10 lakh crores in hybrids. And then a bunch of other things, and there is passive investing, and we'll come to that as well. But that's the current breakup. But you're right, absolutely. Mutual funds, can be investing across a diverse range of assets. So as investors, what further innovation should we expect from the industry?
No, I think we are getting into the asset allocation era. The more the education, more people will realize that it's important to allocate correctly in different asset classes over a period of time, over a longer period of time. And that will reduce the risk of your portfolio, but it will give you better risk-adjusted returns. I think, increasingly going forward, you will see more focus on multi-asset allocation, retirement plans, as there's a percentage of population which starts getting old, and I'm living longer. So I need money for a longer period of time after retiring, which is the best instrument, and how do I go about that? All these concepts will start coming into play very, very soon at this point of time.
Navneet, on retirement, great that you brought this up, because again, as part of the same consultation paper, SEBI is now talking about some more flexibility when it comes to retirement products and also products for children's planning, these children's fund. And as of now, these are called solution-oriented schemes, by the way. It's a very small paltry sum compared to the overall total. So what will it take for these products to really take off? And how do you make it less confusing? Because for an investor, I want to save for my retirement. Now flexi cap fund, regular diversified large cap fund, or a retirement product. I mean, how does it become easier for the investor to decide?
No, I think it's quite a simple product. Over the last 30 years, I mean, you just talked about there are lots of changes coming. But I think the thing that we take pride in is the continuity that has been maintained. There are so many products that all of us have been running, which have been around for 20, 25, 30 years, and they've done tremendous amount of wealth creation. At the same time, as markets evolve, as India grows from 4 trillion to 10 trillion, 10 to 20 trillion, there would be different kinds of aspirations of investors, expectations of investors, newer asset classes are emerging, and SEBI has always been forthcoming, proactive in terms of ensuring that mutual funds can take access to those markets, can provide a better solution to the to the investors in terms of accessing those asset classes, and which is what Saurabh talked about, where be it the investing in the gold and silver or money market or solution oriented products or equity products or hybrid products. I think it's a we consider ourselves a solution provider for any kind of life goals that you have. You have a solution from the mutual fund, right from parking a short term cash surplus to income generation to a long term wealth creation.
But that's what I'm saying. It's still confusing, right, for an investor, because retirement objectives can be achieved through a diversified fund as well.
You need a good, you don't need, but on a sarcastic note, you need a good advisor.
Financial advisor to perhaps handhold. Fair point. But now let me take up something a little contentious. And, we at CNBC-TV18, particularly me, looking at Let's Talk Money, the focus is only the end investor, the retail investor. And there I want to ask a question to our entire panel. Let me start with Nilesh on this. Nilesh, NFOs and thematic and sectoral funds. I know you already know the question that's coming, right? Because this is where the bulk of the money has been coming. And even in the last numbers, so through the last couple of months, actually, lots and lots of new fund offerings coming in, many of them on the sectoral and thematic side. And this is where SEBI is now also talking about ensuring that there are not too many overlaps. Now, how will the industry perhaps look at balancing its own, need to create more products and get more flows with the need of investor experience not getting soured? Because many of the NFOs do end up coming in pockets where there's a lot of exuberance in the market. So how should, from an industry perspective, how do you look at this trend? And what is your message? What will be your message to investors as the distribution machinery continues to push the NFOs forward?
So to investor, my message is simple. You don't have to buy NFO if it doesn't meet your objective. Just because there is NFO doesn't mean that you have to invest into it. Now, assume mutual fund as a restaurant. We first started with basic dal roti chawal sabzi. That's where our diversified funds came into play. And there are 9 categories of diversified fund, from large cap to multi cap. Now, beyond that, there is need for sectoral and thematic funds. There is need for newer quant-oriented funds. There is need for hybrid funds. But investor must choose only those products which are required by them. We as distributor will try to expand our range because we want to reach out from 5 crore investors to 25 crore investors. And to reach out to that number of investors, we'll have to create a range of product. And there are many people who say, oh, but NFOs open at a discount. So please show me any NFO which is still at a discount after 5 years of investment. When we launch product, we recommend people to follow asset allocation. We recommend people to do investment via systematic investment plan. So people have to exercise caution while investing in NFO. And we do mention investors to come with long-term horizon. If you are doing SIP, you are doing asset allocation, you are investing long-term investment, you will make money.
Okay, all right. So basically the onus is on us investors, and I'm not shying away from that at all. Ultimately, we need to ask the right questions and make sure our investment objectives are met. We're unfortunately out of time. So I want to take 10 last seconds from each of the panelists, because this is Let's Talk Money. You have to give us your personal money mantra, your personal money / investing / personal finance tip that you follow or you tell your friends and family to follow. Sandeep?
So I think from my point of view is keep it simple. Don't invest in something that you don't understand. Don't invest in something with the layers where you can't see where you're investing.
Okay.
And to your earlier question, I would personally stay away from thematic funds.
Oh, there you go. He's saying he's not looking at thematic. So it's what works for you. Know your risk appetite and know your objectives. Got that. Keep it simple. That's his message. Saurabh?
You need a good night's sleep. If your investments basically are going to keep you awake, if you have to keep watching the mobile phone for your NAVs or the price movements, you have invested in the wrong products.
Okay, so invest for a good night's sleep. That's a very interesting line. Navneet?
2 things. One is there is only one formula of wealth creation, that is sound investment plus time plus patience. Nothing else.
Sound investment plus time plus patience.
I think if you don't have these 3, then you won't create wealth in the long run. It will be very, very difficult. And second is the people on this panel are the ones who take tremendous joy in making money for other people than only thinking about ourselves.
Okay, absolutely. Nilesh, final word and your investment mantra and tip as well.
म्यूचुअल फंड सही है.
We've heard that before. एक नया वाला भी.
So I will just say about mutual fund industry rather than money mantra. हजारों ख्वाहिशें ऐसी कि हर ख्वाहिश पे दम निकले. बहुत निकले मेरे अरमान, फिर भी कम निकले. We have done a lot in last 30 years, but we have a long distance to cover to ensure that every Indian is financially secured.
Wow, very well said, and what a poetic note to end on. Thank you very much. Great conversation, gentlemen, and quite an enlightening discussion as well. We hope that all of you and your peers keep powering forward so people like me, people who are watching the show, can go ahead and realize all our financial as well as life goals and dreams. Thank you so much.
Thank you.
Thank you, Sabir.
Well, with that, it's a wrap on this edition of Let's Talk Money. Thank you so much for joining in. Keep sending us your comments, feedback, and queries. See you again next week.
Let's Talk Money.
Hello, welcome to News Centre. I'm Parikshit Luthra. The union government has tabled a bill that proposes a sweeping ban on online money games. IT Minister Ashwini Vaishnav introduced the bill in the Parliament today. The bill highlights that the proliferation of online money games have had a harmful effect on families, society and the economy, and calls for prohibition regardless of whether the games are based on skill, chance or a mix of both. The bill also proposes to constitute an authority for regulatory oversight. That's not all. The bill also provides an insulation to the government or the authority for any actions taken by them in good faith, but does not clarify anything further. The move comes as a body blow to the gaming industry, which has paid taxes to the tune of 22,000 crores to the government last year. The The IT secretary, while defending the bill, told us that the political leadership was clear about the need to act against online money games.
The number of jobs created are in their thousands, and the number of livelihoods affected are in their hundreds of millions. The industry itself claims that 450 million people play these games, many of whom are distressed. And I think parliamentarians, ministers, and others who understand the distress of their constituents are very forthright in saying that this is a serious issue. So we have to balance. We have to balance between what is in the overall social good, and many of these people have talent and will find jobs in the legitimate gaming sector, which is being encouraged.
All right, I'm now joined by Aruna Sharma, former Secretary, Ministry of Electronics and IT, Robbie John, who is the CEO of Super Gaming, and Vidushpat Singhania, Managing Partner at Creda Legal, also with us. Thank you very much for joining us. Ms. Sharma, if I can begin with you, do you think this is the right step forward that the government is taking? Just a few years ago, we wanted to encourage the e-sports or the e-gaming ecosystem in the country. We wanted our citizens, our youth, to design games for the country, for the world as well. But will this now be counterproductive to that larger exercise?
It came as a shock to the entire industry, and I can appreciate that. Because if you say so, the same mighty ministry came up with the rules which defined gaming. And same ministry flagged it separately, what is game of chance and what is game of skill, so that the real money games and games of skill are differentiated from the game of chance. Now, when that kind of a differentiation was being talked about, they also talked about that the parameters will be worked out, and they encouraged the SROs to come up for absolutely the kind of doubts that were expressed for money laundering or for using it for the money being taken to the wrong calls and those kind of things. So it was very encouraging when the three SROs worked really meticulously to ensure KYC of those who are on board. All payments were made digital, and then they also demonstrated, because in the bill it has been stated that the results or the outcomes can be manipulated. So they demonstrated that this is not possible. The results are not, cannot be manipulated. And it is definitely the skill which decides who the winner is. So that was the kind of track we were going. The first jolt, as everybody is aware, came with the GST with retrospective effect and putting the GST on all the money on the table. So all the industry had to go to the court and get the stay on it, so that immediate injury is not there, and that hearing, unfortunately, is still on. Not only that, an amendment was brought to the GST which enabled to sort of condone the retrospective effect, and it empowered both the center and state government, which nobody did. And to define which money of the GST is to be taxed, which has to be a goods or service. So money on table is neither goods nor service. With this, the state government started coming forward. You have government of Tamil Nadu who came up with a good regulatory system, a regulator, and the doubt which has been expressed in the clip which you have said, which is like a moral policing, that addiction will be there or people are wasting their money. So filters are there where you can put the number of hours you want to do, or you can also put the amount of money you want to play in your 124 hours of the day cycle, and red flags will be raised. And government cannot sort of decide on the behavioral pattern. And, it has been mentioned that more than 40 crores of people of the Indian population, so which is nearly 1/3 of the Indian population, is indulging in the gaming. So what it is putting a ban on the real money games. So in the sense, it's a complete washout, not on the gaming industry per se, but the innovation. My worry is the entire innovation part of it, the startup part of it, is going to get hit. So I'm very sure when this bill will be placed in the parliament, there will be many voices who understand that through gaming, they are labeling it as a sin. Gaming is not sin. It can be an educating thing because it also put a spark into your senses of coordinating, deciding, planning how you can go about it, and it can be worked out. So gambling, you have an act where you get, whether it's online or whether it's on the shore. The government of India has come up with the powers, which state government we used to object that no, we will have a centralized legislation. And now with this kind of a negative bill, I'm sure the states may come forward with a note which they may not agree to what the central government is trying to interpret and put a complete ban on real money games.
Right. All right, let me get in Vidushpat Singhania also. Vidushpat Singhania, do you believe there is going to be a legal challenge to this bill? We're told, we spoke to Jayesh Ranjan, a top-level bureaucrat in the Telangana government, and he said a bill, a case related to online gaming is being heard by the Supreme Court, and the government has, in a way, preempted what the Supreme Court may do. Do you think there could be a legal challenge to this in the days to come?
So let me just clarify one aspect. The Honorable Supreme Court of India was hearing the matter, both regarding GST and the aspect of whether the state governments can legislate on betting and gambling, and whether skill gaming for money would come within the aspect of betting and gambling or not. That hearing concluded about a week back, and the judgment has been reserved on that particular matter. So as we speak, the judgment has been reserved on that. I take leeway from what ma'am has said, Dr. Aruna Sharma has said, that initially the government had thought about regulating this industry, and they had taken a laudable step of saying that we will recognize the self-regulatory bodies, which will then come out with regulations or checks for even for manipulative gaming, for cross-border, for KYCs, all the ills that have been highlighted at this point of time. So what the industry expected is further consultations with them to check and prohibit exactly these evils. Therefore, it has come as a shock. A prohibition has come as a shock. What the industry was expecting is a regulation, maybe a very strict regulation in discussion with them, but what the industry was expecting a regulation. Now, I take the point that the challenge when if the bill becomes an act, then the challenge is going to be on multiple fronts. One, whether the state governments have a right to make the law on betting and gambling, or whether the center has a law. It will further get complicated with the aspect that Sikkim already has a law for online gaming, and they allow for online gaming within the state. Nagaland also has a law for online gaming, and they have been in existence for a while. So whether that will be covered or not, or whether they still have a right to make a law on that or not. The second aspect will then also come in is what happens to horse racing. The horse racing has been traditionally been regulated and has been offered for licensed for the past 100 years. So what happens to that? And when that moves online, which is there on horse racing and betting horse racing is also there in kiosks outside the race courses, which are licensed. So whether they are covered within this bill or not, I think that's another significant question. I believe the lotteries are largely out of this bill because Lottery Act and rules are separate and largely not covered within this aspect. But these are really questions that will come up in court, besides the fact of Article 19 challenge, that is the right of person to profession and trade, and whether these restrictions that the seeks to impose are reasonable or not.
All right. Let me also get in Robbie at this point. Robbie John, what do you believe when it comes to e-gaming companies in the country? There is a big worry in the industry that jobs will be hit, investments will be hit, and this will no longer be a sunrise sector. What's going to be the immediate impact on companies like yours?
I want to clarify a couple of things. One is that, from a bill perspective, the bill clarifies two things, which is good games and bad games, or, the one-third that's kind of clarified as gambling or real money games. That's a separate category of the games that we make. I would like to say that the bill clarifies two things from our perspective, which is really saying that, hey, what is a video game and esports being kind of furthered by the government is really the key part of the bill from our perspective. Now, whether the games kind of are good or bad, that's not my job to kind of decide. But we've definitely seen what we wanted, which is a distinction between video games, which are played for entertainment, and games that are played for a financial motive. I think the bill separates both of these things out. I think that's really a big win from the video game industry, because people often confuse gaming and real money gaming, and that's kind of been something that we've kind of always highlighted. The next part of will jobs be hit and will that be there? I think the government secretary kind of clarified that there is enough scope in our gaming industry for an absorption of these jobs. I do agree with all of that because India is a very, very large market from a entertainment for video games perspective.
All right. Let me go back to Ms. Aruna Sharma, and we'd just like to tell our viewers that the online gaming bill has been passed by the Lok Sabha. Ashwini Vaishnav, the Minister for Electronics and IT, spoke in the House a short while back. This bill has now been passed. It will go in the Rajya Sabha, and we expect the bill to be passed by Parliament soon. Ms. Sharma, it seems that the government is moving ahead very fast. It's likely to be passed in the Rajya Sabha, so it's not going to be long before this turns into law.
Yes, you are absolutely right. Because of the number is getting pushed. But I'm surprised to what they have called as a sports gaming. Does it mean that fantasy sports is becoming a part of it? I doubt, because sports gaming is entirely different sector. So in the sense, all these popular games, which the majority play, which you have labeled it as 1/3 and 2/3, I do not know how this classification is done as to what is sports gaming and what is real money game. Because gambling and real money game, skill game, a category one understands. But esports is entirely a different thing, where the skills is being done and no money is involved into it. And it's a pure sports which is graduating into the e-platform. So now all this gaming is involved, and as Vidushpat very rightly said, horse racing or rummy, which is popular as a club gaming on the tables of the clubs, which became an e-gaming, or you go into the other kind of games which are extremely popular, and definitely they are money games. One, it is going to hit the FDI very, very clearly. It is going to hit because the biggest things are real money games company. It is going to hit them.
Okay.
And it is going to hit their talent, as you yourself in the introduction has said. Yes, they will find their way in involving the new game, but what will be the financing module for that? Because the innovations are important. Right. I'm not so much concerned about the games played. I'm more concerned about the innovations involved. So yes, it will
Most
come
concerned
through
about what
Rajya
happens
Sabha.
to startups and the innovation ecosystem. We've run out of time, but thank you very much to Aruna Sharma, Vidushpat Singhania, Robbie Chauhan for joining us. IT Minister Ashwini Vaishnav, while defending the ban on online money gaming, highlighted its negative effects in the Lok Sabha. Let's listen in.
कई ऐसे परिवार है, कई ऐसे व्यक्ति है जिनको ऑनलाइन मनी गेम्स के कारण एक एडिक्शन हो जाता है, जिंदगी भर की बचत गेम में उड़ा दी जाती है। फ्रॉड और चीटिंग एल्गोरिदम्स ऐसे होते हैं कि पता नहीं चलता कि कौन किसके साथ खेल रहा है, और एल्गोरिदम्स ओपेक एल्गोरिदम्स होते हैं, हार निश्चय हो जाती है। फाइनेंशियल लॉसेस, माननीय अध्यक्ष जी, कई परिवार नष्ट हुए, एक्सट्रीम केसेस हुए, सुसाइड भी हुई।
Time for a short break, but don't go anywhere. We continue our discussion on the government proposing to ban online money games with Jayesh Ranjan, CEO of Industry Investment Cell in the Telangana Chief Minister's Office. Stay tuned. Welcome back. You're watching News Center. The Lok Sabha has passed a bill to ban online money games. The bill is expected to bring sweeping changes to online gaming as it seeks to prohibit all forms of such games. The ban will be regardless of whether the games are based on skill, chance or a mix of both. To take this forward, we're now joined by Jayesh Ranjan, CEO of Industry and Investment Cell in the Telangana Chief Minister's Office, one of the state's top bureaucrats. Mr. Ranjan, thank you very much for joining us. My first question to you, would you agree with the central government that there is a need for a separation between esports and real money gaming and online betting? Is the separation very essential?
So, first of all, I have said so on so many other platforms also that banning is not the solution. In fact, you are in a way throwing the baby out of baby along with the bath water. There are many ways in which you can provide good regulation, robust regulation, and the timing of this decision of the cabinet is also kind of surprising, because on the one hand, the government of India itself had given draft guidelines, draft rules. In its states were also given lots of autonomy to decide how to regulate, what are the games of skill, what are the games of chance. And we also know that there is lots of legal reviews going on. In fact, the Supreme Court itself is now hearing a batch of petitions, whether the government, be it the central government or the state government, do they have the power to ban or regulate or prohibit? And in a way, you have kind of preempted Supreme Court's hearing and judgment also in this matter. So I personally feel that banning is not the solution. And secondly, the timing of this decision, we could have been much more judicious about it.
Right. There are concerns about large-scale job losses. The industry bodies are saying that there is almost a valuation of 2 lakh crore that this sector has. Annual revenue generation is 31,000 crores. You've got 20,000 crores in direct and indirect taxes that are paid annually, and this sector is projected to grow at 20% compounded annual growth rate as well. This is a sunrise sector. Do you think this move will be a death knell for the gaming industry?
See, we have already seen, and there are evidences in many states, including our state of Telangana, that banning also gives rise to a grey market, a black market. There are currently also lots of illegal offshore companies, even domestic platforms, and who are currently also prohibited in many states. There is a ban on online betting, including in Telangana. But we know that they are operating with impunity. They are having their own networks, VPNs, and that also is a big loss to both the country, the state and the center. Plus, it also gives a sense of lawlessness. Like, even if you ban, I can find a way out, I can create something else. And as long as there is an interest of people to participate in these kind of games, of course, I do agree with the reasons given behind banning, that it causes, many of these games actually use bots, so you don't know whether you are playing against a fair rival or it is manipulated. There is underage participation, there is addiction, but there are ways in which these can be overcome. There is technology available today. In the earlier guidelines, which were issued again by the Ministry of INB, there were provisions that you have regulating bodies at the state level who check the veracity of what kind of gaming architecture has been created, and so on and so forth. Now, as you all know, everything has been kind of discarded, and the notion that banning will solve everything, that is getting imposed. As I said, in my opinion, this possibly is not the best or the most optimum solution.
Right. And when it comes to the states implementing this regulation, when it comes to online gaming or betting, especially betting activities, these are a state subject. Will state governments implement this law that is being passed by the center?
See, of course, if this is a national law and the government of India takes a stand that this is a national subject, we have all the right to regulate, and it is given to everyone as a fait accompli. Possibly the headroom with a state to do something beyond that gets restricted. Of course, this is very sudden. This has come as a news to us just yesterday night and today morning. We are still reading. And obviously, there are many steps to go by. What has been decided in the cabinet will be presented before the parliament. In the parliament also, sometimes they refer these kind of bills to a select committee. There will be consultations, discussion. So possibly this is not the final version, but at least we know the intent of Government of India. And I still feel that we can distinguish between games of skill and games of chance. Even if a game of skill involves money, there is a way of preventing the illegalities or misuse which happens. And if you completely ban, as I mentioned, the grey market emerges, which is much more damaging to countries' interest in the long run. It also erodes the finances, which justifiably should have gone to the government. So I guess there are multiple steps to still cross through. And at some point in time, if they consult the states or if there is a select committee which hears alternative views also, we will make these opinions and options known to them. And eventually, whatever comes as a national law, after that, I don't think there will be any great opportunity to deviate from it. But if the law incorporates the fact that states also are autonomous, they have better judgment to understand about what's happening in their state. If they have technology prowess to prevent some of the misuses, then why not give that, delegate that authority to them? If the bill emerges finally in this form, and if the law comes in this form, obviously that will be something which will keep everyone happy.
Right. So when you say an autonomous view, why is this important? Currently, the central government says and authorizes central government officers to seize evidence, carried out raids without warrants, investigate, search, seizure. What do you think is the problem? Why do you think states need their own autonomy to regulate e-gaming and also online betting?
See, the thing is, you mentioned this. So as I said, as a state, we are definitely against online betting. There is no skill involved at all. So we have no issues at all if online betting is banned. But online gaming is very different from online betting. Online gaming, for instance, I mean, again, I don't want to name anyone, but I know of many online platforms where you form your own team. That team plays against another team, or when the actual team is performing on the ground, you compare your results with the performance of those players. And there is lots of skill. You do lots of analysis. You understand which bowler is in form, which batsman is in form. And then it's also very engrossing. I mean, if you're a cricket enthusiast, and obviously people like us, we don't play it in a very active way. We can only engage recreationally. This is a great way to think of how you, in your younger days, when you were captain a team, this is what you will do. That is the strategy that you will follow. All that gets recreated here. And of course, it's not that we are heavy bettors, but if there is some fees to participate in this kind of a game, we'll be happy to do so. So that is one, that it deprives many people of something which otherwise could have been a very great source of recreation and all that. The second is something which you earlier asked. I'm sorry I did not answer you directly, but this point is emerging now, which is job losses. So in Telangana, as you know, animation, gaming, VFX is a very important line of activity. The government has spent lots of efforts to promote this vertical. We are building one of its kind infrastructure of the country, which is called Image Tower. And I can tell you for sure, because I was directly involved in those kind of discussions. Many companies have told that we'll be happy to put our development team, our tech team in your city, because Hyderabad is a great technology hub. And we will do more and more and more, provided the government provides a conducive ecosystem. So there'll be job losses. There'll also be a loss of GST. I'm sure the industry associations might have also raised this issue, because we also as a state get a good amount of GST. That opportunity will be cut. So I do understand the concerns of behind banning. There are issues which are obvious. No one denies that these kind of things are not happening. But there could have been other ways of curbing it. And as I said again and again, banning possibly is not the only solution or the best or the most optimum solution.
Mr. Ranjan, thank you very much for joining us on the program. With that, it's a wrap on this edition of News Center. Thank you for watching. Goodbye.
Hello and welcome to this special monetary policy show, the minutes of the last monetary policy meeting on August 6th, when status quo was maintained, have been just released. The consensus among all members is that wait and watch is better. The minutes appear to show some difference of opinion on growth, while the governor and deputy governor, as well as the RBI members, are somewhat confident of growth. Some of the panel members, especially external member Nagesh Kumar, appears to be a little more worried about growth, given the current trade scenario and likelihood of much higher tariffs from the US. But all the members have more or less agreed that some firepower needs to be retained by the Reserve Bank, considering the prevailing uncertainty, considering the several moving patterns. To take this discussion forward, I'm now joined by Mr. Nagesh Kumar, the external member of the RBI MPC. Mr. Kumar, thank you very much for joining us on the show today. Sir, you are an expert in international trade, and you have indicated that you are quite worried about the way in which the trade between India and the US is progressing and the likelihood of high penalties. At the moment, you are, of course, wiser than what all of us knew on August 6th. What is your assessment? Do you think now the blow to growth looks a little higher?
Certainly, the Trump tariffs and also the 25% penalty kind of penal tariffs, which have been talked about. And one has to see whether we can have them waived, because there are discussions currently, as we see, happening between President Trump and European leaders to see the war, Ukraine war, coming to a stop. And if that happens, the rationale for imposing those tariffs, penal tariffs on India, would be gone. So we have to see that. But in any event, I think 25% tariffs, which were imposed earlier on India, and especially in the context of the fact that US is the most important market for India, and especially for the labor-intensive goods, it would certainly hit the Indian economy, the manufacturing sector, in particular the labor-intensive sectors, which provide a lot of jobs. So there will be impact. But, we need to take action to minimize that impact and, move on. So there are some estimates which suggest that there could be 20 to 30 basis point kind of, effect on our current year's growth.
That is assuming 25% tariff. It is a 0.3 percentage point of the GDP likely to get impacted. Is that right?
Very preliminary, back of the envelope kind of calculations, and nobody has really come up with very serious general equilibrium type of estimate.
I agree. But what you are referring to is the 25%. If it is 50%, the hit would be more.
Yeah, obviously.
Fair enough, sir. I'll just come back to the trade and the growth bit in a minute. But I also wanted to ask you, since you are an expert on international trade, how are you seeing the disinflationary or inflationary impact? Since everybody is going to be handicapped in terms of their exports to the US. And even today, we are seeing commodity prices receding, especially crude, but not only crude. So do you think the disinflation that you're seeing in the country can be even more than what the Reserve Bank has forecast?
I think on inflation side, we can expect a kind of a downside risk, and also because all of these actions that are being taken in the United States are likely to hurt United States economy, and the prices are going to go up there because of the impact of tariffs. And if that happens, the growth, rate of United States will be affected, and that would also depress the global commodity prices. So there will be a kind of several, a very complex kind of impact on global commodity prices.
Yeah, that is another general equilibrium analysis we have to do because of the many-sided impact that we can have. The third factor that is different from what you didn't know on August 6th is the GST cuts that look imminent by the time we come to the second half of the year. Will that have a further pressure on inflation and therefore give the MPC more elbow room to cut, you think?
Definitely think that there will be effect of the GST cuts, on especially on the items of mass consumption. And if the GST rates are cut, obviously it will bring down prices. And that, as you said rightly, inflation remaining in the range-bound manner really gives some policy space. So, but one has to wait and see what kind of impact that is, and then accordingly, act on those numbers.
Okay. So, there are some people who are extremely despondent about growth because of this threat of 50%, which now maybe will prevail at least for some weeks. It doesn't look like we're going to escape on August 27th itself. Given that, as well as, other factors, there are people who are a little more pessimistic about growth in the second half, not in the first half of the year. Do you think there is more than 25 basis point space to cut or requirement to cut? One, because inflation is likely to be lower than even what the RBI thought because of GST and Asian disinflation. And two, because growth may be hit more than we thought.
I mean, this is what we discussed, and we thought, let the data come. And so it was too early to say that growth will be hit by how much and inflation will be remaining in restrained manner. And so we thought we need to pause for this moment and let the data come in, and that shows the way.
Okay. When you read the data, when you read the minutes, it does look like the RBI members seem to be a little more confident of growth versus the external members. Was there such a sense you got during the discussion as well? Y'all seem more worried. Clearly, you seem.
Because I, work on industry and manufacturing sector, I have been a bit concerned about the fact that private investment is not picking up the momentum. And of course, currently, you can't blame the private sector because the trade policy uncertainty is definitely an issue, a challenge. So I'm a bit concerned about growth and manufacturing sector. And that is, what is reflected in my statement.
Okay. So was there, during the discussion, a feeling or an argument which any of you made that giving the rate cut in August would be better so that the festival demand will pick up? If you gave the rate cut on September 30th, then probably a little bit of the festival season, at least Dussehra is over, or much of the Dussehra shopping would be over. Was not that a factor that give it earlier rather than later?
The point is that we have already cut the repo rate by 100 basis points.
Yes.
And the transmission happens with a lag. So even the existing action has not been fully transmitted. So there is this, cut which is yet to be going to the market, so to say. And so I expect that this ongoing process, and especially because the liquidity remains in surplus, I hope and I'm sure everyone is looking at the further transmission of the existing actions taken by RBI in the last 3 rounds.
Yes, absolutely. 100 basis points and 100 basis points CRR cut is fairly significant. So, the number that we will get on August 31st for the first quarter are likely to be good because there was advance buying ahead of the tariffs, and there is almost negative WPI for a couple of months. So the deflator also will be very low. But the industry, the sense I get from industry is that they're terribly worried about the second half. Would you share that, sir? Are we in danger of a 6% or a sub 6% at some point in the second half simply because the world is looking very nasty?
Definitely, there is a concern, but I remain optimistic that we can make it to 6.5% or thereabout, because government is taking action on export front. The package for export diversification is being worked out. The stimulation of private investments is also being thought about. The demand also will be stimulated by capex of the government. So overall, my feeling is that we will close the year with closer to 6.5% plus minus.
A very quick last question, simply because you are the trade and industry expert. Do you think a specific subsidy is called for those exporters who are going to be hit? The textile exporters, leather exporters, jewelry exporters, shrimp exporters, extremely labor intensive. A specific, government giving them that 25% penal tariff. You think that's called for?
Completely some kind of hand-holding and, giving them the confidence that we are with you in this hour, while negotiating with the trade partners a better deal, and also, the working out how we can, exploit some of the domestic demand, which is currently met by imports, and also using or exploiting or harnessing the potential of some other trade agreements that India has concluded in the past, like Japan, Korea, UAE, Australia, UK in the very recent times, and working to expedite the negotiations with EU on the pending FTA. So all of these actions and some hand-holding would be very helpful.
Okay. Yeah, actually, you have summarized that very well in your minutes itself. Mr. Nagesh Kumar, thank you very much for joining us with a comprehensive view of what we may be in for in the remaining months of the fiscal. Thank you very much for joining us. We have to take a very quick break, but thereafter we're going to be joined by some industry experts to tell us what they have made of the minutes of the RBI MPC meeting. Welcome back to our special broadcast on the minutes of the Monetary Policy Committee. The committee meeting, of course, was on August 6th, 4th to 6th, but what we now get are the minutes. We just heard Nagesh Kumar, the external member of the MPC. I'm now joined by Abhishek Upadhyay, senior economist at ISEC PD, and Suvadhi Prakshit, the chief economist at Kotak Institutional Equities. Gentlemen, thank you very much indeed for your time. Abhishek, let me get directly to the heart of the issue. Did the reading of the minutes give you the sense that October is very live? September 30th is very live for a rate cut?
So that was the focus after the dovish pause, which markets anticipated. It was a hawkish pause. I think besides the timing, there was also some emphasis on whether there is scope for any additional cuts at all or not. For both these aspects, whether scope for additional easing is there or not, and October rate cut, there is no big clarity from the minutes, particularly if you are reading the comments from RBI leadership. Yes, an outgoing RBI member has indicated it was a closer call, this policy meeting, and the bias is really to preserve some policy space to act in case downside risk to growth crystallize. And that is prudent, but otherwise no clear hint per se that any rate cut is imminent. There is continued focus on medium-term inflation prospects. Arguments broadly indicate members feel growth is still resilient. And there is an additional point being made that totality of RBI actions need to be seen both in terms of rate cuts and liquidity easing measures. So it is likely that RBI is going to be more reactive to any bout of growth weakness, which we do think is a reasonably high probability scenario, rather than being preemptive and taking measures to curb downside risk to growth.
Tomorrow, when the bond markets open, you don't see this as a hawkish pause being converted into a dovish pause. You don't see bond prices inching up at all?
So if you're looking at the swap markets, roughly about 50% probability of a rate cut in October meeting is what is priced in, and nothing thereafter, which I think is a reasonably low probability broadly in terms of rate cut expectations. So I don't see this, these minutes to give any additional information to markets in terms of rate outlook.
Okay. So we remain at around 6.5. Suvadhi, what would be your key takeaway? Are you getting a sense that you can detect some more dovishness than we heard at the conference?
I think so. I would not say it is dovishness per se, but a willingness to keep the door open. I think that is my takeaway from the minutes, that they are willing to keep that door open, look at the tariff impact, and not just the impact, but also what the outcome is of the tariff. Keep in mind that what the growth impulses are, and then remain data dependent. I think it's important to note that almost everyone has mentioned that they want to be data dependent. Yep. So the room for rate cuts is there, as some of the members have mentioned. But at the same time, I think they are not committing to any kind of rate cut stand or any kind of rate cut to be built in as of now.
Okay, so basically the key takeaway is that MPC members as a whole have kept the door ajar for a possible rate cut, but not committing to any. Now, Suvadhi, a lot of water has flowed under the bridge from August 6th to today. Chances are that the 50% tariffs are going to stay for some time. It doesn't look like that they're going away on August 27th itself. It may be for a few weeks only, but it looks like we're going to be faced with that. Do you think that from then to now, the growth picture has gotten worse and therefore the chances of an October cut are higher? I'm not discussing minutes now, I'm discussing the macroeconomy.
Sure. So a couple of things have happened. One is, if you look at the tariff side of things, the tariff part has gotten worse in the sense that we now know that there is a penal rate which can come sometime towards the end of August, and we will have clarity on that. But even with the 25%, I think there's a 30-40 basis point impact, negative impact that we can see from base case of, let's say, 6.5%. We were at 6.2%, factoring in some impact of the tariff. We continue to remain at that. However, if it's a 50 basis point, I think it becomes a much more serious issue in terms of much more higher impact. The entire 55 billion odd of exports comes at risk. Along with that, I think important part to note is that there will be impact on the labor market too. These are all export-related numbers that we are talking about, a direct impact, not necessarily a more so-called general equilibrium impact that we talk about. This is more on the labor market. There could be an impact. The second part is that, the GST rate rationalization has already been done. We'll have a fair sense of, by the end of September at least, we'll have a fair sense where we are headed. We might or might not know about what the rates are, but we'll have a fair sense of how much of an impact could be coming in. And I think the RBI would look into these two aspects and kind of take a call whether the growth impulses are weakening further from what their August policy meet indicated.
Okay. A similar question to you, Abhishek. Are you getting a sense that the macros have worsened since August 6, especially on the tariff front? And therefore, the Reserve Bank, if it were writing its minutes now, would have been more dovish? Are the chances of a cut, therefore, higher on September 30th?
Agree to that, Lita. So if we are talking in quantitative terms, if 50% tariffs hit and then stick for some time, then we think the annualized growth impact of that could be almost 1% in GDP terms. On the contrary, on the flip side, we've had this GST. We will likely have GST rates edging lower. On the benefit of that could be half the negative impact of tariffs. So about 0.5% or so. So overall, adding these two drivers, we do think downside risk to growth have increased since the last monetary policy meeting. At the same time, from RBI standpoint, they will like to see whether these tariffs are going to stay for a reasonably long period of time or not. Also, they would likely, after having front-loaded so much easing, they should likely wait for more clarity on how government is likely to react to these build-up of risk by way of fiscal policy easing measures. Therefore, in that context, I would think the probability of rate cut in October is still quite low. But I do think RBI could act a little more forcefully once it is reasonably clear that downside risk to growth are material looking ahead.
So you're saying that December or February, the chances are brighter for a cut than September?
Yes, based on information we have currently.
Okay. So what's your policy expectation?
Similar expectations. I do not attach let's say, a more than 50% chance on a rate cut in October. But I think the growth impulses are quite weak if we start factoring in the tariff impact. And from that perspective, the room for rate cuts remain. However, if you look at the August policy, the bar for cutting rates have been raised higher. Okay. And to that extent, we have to take into account the fact that FY27 inflation is not looking favorable, at least from RBI's perspective, and it has to balance out the growth impulses, which may not necessarily show.
So you're saying not bright chances of another cut. Is that your point? Okay.
Yeah.
Very quickly, just give me a monosyllabic answer, both of you. Where do you all see the 10-year for the 10-year bond yield for the remaining part of the year? Abhishek?
It's at 6.5 currently. I think it settles down here for a bit, but then the direction of travel is clearly higher, assuming we are at the end of rate cut cycle.
Okay. Swadeep?
A similar 650 is where I would place it in the near term, but I think once the chances of the rate cuts are taken away, it starts moving higher.
Okay. Thank you very much, gentlemen, for packing in so much in a very short time. The key takeaway for our experts is that although the Reserve Bank minutes are indicating a wait-and-watch attitude, the chances are that the Reserve Bank may wait it out even in the September policy and go forward and maybe take some action if growth is genuinely hurt. Take the action in the December or in the February policy. Also, their expectation is that bond markets have really nothing much to react to. The set of minutes, they are pretty much what we got from the press conference on August 6th. That's it on this edition of our special coverage on the MPC Minutes. Thanks for watching. There's more news and updates lined up for you after this break.
We crossed Lok Sabha. But tell us, this came as out of the blue for a lot of stakeholders. Wasn't expected, wasn't anticipated. Why now, and why the compulsion by the government?
First, let's understand what is the objective of this bill. The entire online gaming sector has three major segments. First segment is esports. Second is online social games. Third is online money games. This bill aims to promote 2 out of the 3 segments, where different schemes will be created and authority will be created. The 2 segments are part of the creative economy, the creators economy, which is getting developed as part of the Digital India vision. The first segment, esports, is emerging as a very important segment where players play as a team, play in a very coordinated way, develop strategic skill, develop coordination skills. The second segment, which is online social gaming, that is a segment which is rapidly growing, and it's a segment which helps people in education, helps people in improving the cognitive functions. It's a very important part of the entire digital technologies. So as part of this entire exercise, 2 of the 3 segments are being promoted, and India will, in this exercise, become a game-making hub. So there will be a lot of employment generated because of this promotion, because of this encouragement. New startups which get into online social games and esports, they will also get promoted. The harmful impact of online money games, which has been so well documented by WHO, where there are so many evidences, where recently there was a Times of India report which says that in 31 days, 30 suicides have happened because of online money games. Entire middle class families, they are losing their entire life savings in online money games. Extreme cases are there where children commit suicides, where people commit suicide because they are not able to face the losses which happen because of online money games. That's the harmful impact which needs to be discouraged in a very significant way. Over the last 3.5 years, we have been very closely engaged with the industry. We have attempted self-regulation, but that has not really worked. There was a GST imposed, that has also not really worked. Still the harmful impacts continue, and it's something which is very significant. MPs who have met me from across the country, across the parties, they've all been asking for significant action to be taken against online money games. Honorable MLAs who meet, and the entire society in a sense has this pain which is reflected in the suicides, pain which is felt in the form of entire life's money going.
So the industry is slightly concerned. They point out that we've seen over $3.5 billion in investments, direct, indirect jobs of over 2 lakh. Is that something that weighed on the mind of the government before, at the time of drafting of this legislation? How do you account for that?
So our government has been very actively promoting digital technologies, development of new technologies. The entire DPI today is known across the world, and we'll continue to do that. What's important is that the benefits of the technology should be encouraged and the harm should be discouraged, and we have a fiduciary duty to protect the society from the harms of something which is emerging and which is clearly visible today. So that's a constitutional duty which is there on the elected government, and today the Honorable Speaker also said it, expressed from the chair, that practically across the aisle MPs have been asking for strict action on it.
One question, sir, with respect to this being a prohibition on online gaming. There's no mention online money gaming. I beg your pardon, online money gaming. There was just a few questions raised that is this a case of maybe state legislating, or is the center competent to legislate? Just that grey area between betting and gambling on one side and gaming on the other.
We have kept this legislation clearly focused on gaming only. Online gaming world, within that the 3 segments, online social gaming, esports and online money gaming. So we are limited to that. That is the mandate of the center because that comes under the union list.
And one final question, sir. The preamble of the bill talks about societal impacts. It also talks about possible linkages, national security concerns as well with respect to terror financing as well as money laundering. Tell us about what went into the thinking, the inputs that you received while going ahead for a measure such as disallowing and prohibiting online money gaming.
There are multiple such instances, and I'm sure you also know about it. The entire country generally knows about what is happening, how money laundering is getting facilitated because of the online money games. And clearly we have taken into consideration everything which the government has observed over a period of time. And it's, a lot of thinking, a lot of thought process has gone in it. And as I said, a lot of engagement has been with the industry over last many years. And it was very important to save the society from the harmful impacts. And I do understand the overall picture. And within that picture, our endeavor will be to make sure that the game makers, the people who write games, the creators of games, they keep getting the promotion within the two segments which are very important for the society.
And just 20 more seconds, sir. Once the bill gets the presidential assent, assuming it's passed by the Rajya Sabha, does it become effective immediately? Do we need to wait for the rules? Just the implementation roadmap.
Let's see.
Wish you the very best, sir. Thank you so much for joining us.
Well, let's go across now to the Secretary of the Ministry of IT and Technology. Joining us now is Mr. S. Krishnan. Mr. Krishnan, appreciate you joining us here on CNBC-TV18. This came as a bolt of the blue for industry as well as for state governments, this bill that has now been tabled in Parliament. In fact, both industry as well as states asking the question that there has been no consultation that's taken place. Why did the government feel the need to bring this bill in and provide a blanket ban on all money games as far as online games are concerned? Because this is contrary to what your own ministry was attempting to do, which was to drive regulation and not prohibition. Why the decision to go in for prohibition, sir? What changed?
I think you need to look at the whole context of the bill. I think it would not be fair to look at it only as a prohibition effort. There is a significant element there which is promotional. there's a very large segment of the industry. You see, one thing that the industry has been asking repeatedly is a clear delineation and a clear identification of those parts of the industry which are legitimate businesses, which are creative, which involve a lot of technical skill, and which involve development of software and all of those skills connected with it. So there's a clear recognition of those segments of the industry, which includes esports and online social games, which includes both recreational games and educational games, the entire gamification industry, the entire AVGC segment as it's called, which are distinct elements and which are being supported and promoted through this particular bill. So that regulatory distinction is being clearly made, which is what the industry wanted. Now, as far as the segment which relates to online money games, this has been a problematic segment for quite some time now. And there's been a lot of back and forth and also a lot of issues in various courts across the country on how exactly this issue requires to be tackled. There have been litigation. There have been various kinds of debate as to who's competent to handle this, and especially when it is online and it functions across states and in a way that and also comes from overseas, whether states would really be able to regulate this, would the states actually be able to legislate and administer the regulation relating to this, have all been concerns. Many states have attempted to do this in multiple ways. Many of those legislations have been mired in legal conflict in different courts, primarily because of issues such as this in terms of legislative competence and so on. We believe that the courts have now given some clarity. There are legal pronouncements which have given clarity, which say that even if it's a game of skill or a game of chance, ultimately it amounts to trade and commerce. And within a state government can regulate this as trade and commerce within the state. Now, the problem starts when it becomes an interstate issue or a cross-border issue from overseas. Then the competence for legislating on that really rests with the government of India and the list under list 1 of the 7th schedule of the Constitution, item 41 and 42, which cover interstate trade and cross-border trade. So that is the basis on which we derive the legislative competence to legislate in this area. And that is the basis on which this is being done. The industry has represented a number of times across various fora in the government of India on this issue. I think their concerns and all that they have had to say has been well reflected. They have indicated what they need. One part of it, of course, was the regulatory clarity. Another part, of course, as you point out, is an approach towards regulating as opposed to restricting. Now, under the Constitution, again, under Article 19, Clause 6, which talks about the reasonable restrictions which can be placed in the general public interest on trade and commerce, we understand that the Supreme Court has held in various other cases in the past that a complete prohibition or a complete ban also amounts to a reasonable restriction in certain cases. And I think it is important to recognize that this is what is reasonable varies from circumstance to circumstance, and it is in the government's judgment. It is in the way that internal and in the way that discussions have taken place at the government level and in various parliamentary standing committees. There was consensus across the board that online money gaming needed to be acted against, and that is what is reflected in the bill. One, an impetus to promoting those segments which will be deemed to be legitimate and supporting them where there is considerable potential for Indian software prowess to grow and development prowess to grow. And that is something that the government is committed to support. We've already done the National Institute of Creative Technology, which is to come up in Mumbai. There are other efforts to promote this, including the Waves Summit, which was held. All of that will be continued and will be redoubled, and more will be done to promote that segment of the industry. This segment is what causes distress. By the industry's own admission, about 450 million people across the country play various kinds of online money games. And various parliamentarians and others cutting across party lines have indicated at different points to us in different fora that it is an area of serious concern, and the government and the Ministry of Electronics and Information Technology need to act in this space. And that is what the government has done. And I do not expect that there would really be much objection, at least from across the political spectrum or even from state governments, that this is an exercise of power which has been done without consulting them. This is very much within the Government of India's remit, and I think we've acted in a way that many state governments have wanted and tried to act, but have been unable to due to various legal challenges.
There's a lot that you've said there, Mr. Krishnan. You believe that states are unlikely to object. You also say that this decision of the government to table this bill and prohibit online money games does enjoy wide political support, and you don't anticipate any opposition coming in from state governments. But on the point that you made, that you believe the central government is legally competent to bring in this legislation, overriding what states may or may not choose to do because of the interstate transactions. But let's talk about the overseas transactions, because one of the arguments being made by industry is that this will actually push people who indulge in online gaming to operate within fly-by-night, with fly-by-night operators, with people who are operating outside of the jurisdiction of India. Now, what can the centre do about that?
To be honest, the jurisdiction of the bill actually, in a sense, has an extraterritorial jurisdiction. It applies to entities outside the country who are offering it in India. That is there right in Section 1 of the bill itself. So in that sense, it has limited extraterritorial jurisdiction. That is point one. Point two is that we have in the past, and in fact, MeitY itself has blocked almost 1,524 cases where illegal betting, gambling, and online money gaming sites have been operating. And against those, we have taken action and blocked them in the past. That provision has also been made in this Act, that Section 69A of the Information Technology Act 2000 can be used to block online money gaming, which comes, whether it is within the country or from overseas. So technologically, it is possible to block this. Of course, it will be a constant exercise in vigilance. We will have to keep monitoring when these games come up, and we have the capability to do that. And as and when it comes up, we'll have to keep consistently blocking new sites which come up, new portals which come up, new ways in which it gets offered. Now, that is an implementation challenge, and that is what the civil service and the entire machinery of government is there for. We have to implement the law which the parliament would enact.
Yes, it is going to be an implementation challenge, as you acknowledge there, Mr. Krishnan. But, you know, I go back again to the arguments that are coming in from industry, that this once again raises the issue of policy unpredictability, because this again was a sector that the government itself has been championing for. There's about $3 billion that is coming in terms of FDI. Industry claims that direct and indirect jobs amount to about 2 lakh at this point in time. I would imagine that these were considerations that were factored in as part of the consultation process that took place. Now, what do you say in response to that, that this is going to lead to job losses, that this is going to lead to uncertainty as far as foreign investors, domestic investors are concerned, who have already put in money into this sector and were hoping to be able to do a lot more? This is another retrospective action on the part of the government. How do you respond to those questions that are being raised by industry and other investors?
So let me address the issue of job losses first. I think what you have to weigh here is the number of jobs created are in their thousands, and the number of livelihoods affected are in their hundreds of millions. The industry itself claims that 450 million people play these games, many of whom are distressed. And I think parliamentarians, ministers, and others who understand the distress of their constituents are very forthright in saying that this is a serious issue. So we have to balance. We have to balance between what is in the overall social good, and many of these people have talent and will find jobs in the legitimate gaming sector, which is being encouraged. So I think that is an issue which we should be able to tackle in terms of the job loss prospect itself. So I would not say that that is as big an argument, and it has been considered. It was something which came up, and I think clearly this view was taken that we need to look at it from the perspective of the livelihoods and the emotional and the mental welfare and the social distress that is caused for many millions more. So that is as far as the job losses is concerned. Coming to the investment related issue, I think we also need to be clear that it is the industry which asks for this clarity as to what would be permissible and what would not be permissible. So I think that clarity has been provided. This is something.
But if I may, sir, if I may, industry was asking for clarity on the kind of regulatory framework that the government would put in. Industry was not saying bring in a blanket ban to disallow any kind of online money games. In fact, that was not the position that MeitY itself had taken in the previous set of consultations, as well as the regulatory mechanism that the MeitY itself had put forward.
I understand you're referring to the amendments to the IT rules made in April 2023. You would note that although the amendments were made in April 2023, Rule 4B, capital B, indicated that until such time that the government approves the creation of the self-regulatory bodies, this particular set of rules will not come into force. Right? And the government had a rethink on this issue, and it never approved any of the SRBs. So I think it would be not fair to say that MeitY, there was a regulatory framework which was created in a particular form. The government has stepped back from that regulatory framework after reconsideration and finding that there were a number of issues and problems there. And the regulatory clarity that the industry asked for was in a clear delineation of the industry to recognize what is permissible, what is acceptable, what will be promoted, and what is problematic, and what would need to be restricted in some form. And that clarity has been given. Of course, it could be argued that there could be regulatory measures which could have been tried of other kinds. Whereas the option now has been for an outright ban. That is a call which needed to be taken in terms of the implementability of many of the regulatory restrictions which could have been attempted, as opposed to making sure that such games are not offered at all. And the balance of convenience, the government believes, is in making sure that such games are not offered at all, as opposed to having certain regulatory mechanisms to prevent this. Now, these are choices which are made by different societies in different ways. In the Indian context itself, there are many things which are permissible or which are going on in online gaming today, online money gaming today, which are not permissible in the physical form or in the real world. We are a country which does not allow casinos in most states. We are a country where many states are attempting to ban this as betting and gambling and not succeeding because people claim that there is an element of skill involved and it is not purely a game of chance. Now, we are now saying that, look, it does not matter whether it is chance, whether it is skill or a combination of both, all of them where any wagering, any deposit, any fees in the expectation that you will win back more, you will get back more, or you will get back that amount is something which is defined as an online money game and hence not permissible. Now, this is a societal decision. This is whether we permit casinos, whether we permit other forms of gaming is a societal decision. And in the Indian context, the political executive is clearly of the view that this is something which is difficult to permit. And the political executive, not just here, many states have attempted to ban this as well, as we already discussed, which are caught up in legal tangles in terms of the competence of state governments to enact. And we believe that the legal competence is there for the government of India, and this is a clear delineation which has to be made. There's a segment which is to be promoted. We have no doubts about that. We are defining it clearly and making sure that we have measures to promote that. And there's another segment which needs to be prohibited simply because livelihoods of a very large number of people of this country are involved. And we need to put that before any investment or any employment is created in that sector. Clearly, the investment is coming in because the returns are outsized in that particular sector. The returns are outsized, and it is actually thriving on the distress of these people. Now, what kind of investments we accept and what kind of investments we don't accept is there in our FDI policy. We don't accept every kind of FDI in every case. If there is a criminal activity, but it fetches very high returns, then naturally you're not going to take FDI in that sector.
Hello and welcome to Startup Street. I'm Arundhati Ramanan, and with me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. Government introduces a bill proposing to ban the $25 billion online real money gaming industry. Centre claims broad political support, argues for larger social good by curbing addiction and debt spirals. But Karnataka's IT minister calls a blanket ban knee-jerk and bad policy making.
Data analytics software firm Databricks has signed a term sheet for its Series K round, which it expects to close soon with backing from existing investors. The funding values the company at over $100 billion. It expects to use the new capital to accelerate its AI strategy, expanding Agent Bricks, investing in its new database offering Lakebase, and fueling global growth.
Weaver Services, a tech-led housing finance platform, is raising 1,481 crore rupees in funding led by Lightspeed and Premji Invest. The funds will support asset acquisitions, tech development and expansion.
IIM Calcutta Innovation Park has launched a 50 crore rupee fund for clean tech and sustainability startups to be deployed over the next 12 to 18 months. The fund will support early-stage ventures working in clean energy, climate resilience, sustainable agriculture, and waste-to-value solutions.
As part of a project known internally as Kitty Hawk, Amazon plans to release a higher-end tablet as soon as next year, offering the Android operating system software for the first time. If Kitty Hawk is successful, Fire tablets could be more desirable for consumers who crave compatibility with other Android devices, the report added.
And those are the headlines that we're tracking for you today on Startup Street. But the top story that we're tracking this evening, the union government has tabled a bill which proposes a sweeping ban on online money games. IT Minister Ashwini Vaishnav introduced this bill in the Parliament today. The bill highlights the proliferation of online money games have had a harmful effect on families, society, and the economy, and calls for prohibition, regardless of whether the games are based on skill, chance, or a mix of both. The IT Secretary, while defending the bill, said political leadership was clear about the need to act against online money games. Karnataka's IT Minister has also called this blanket ban a knee-jerk reaction and bad policy making. Let's go across to Ashmit Kumar, who decodes the bill for us.
Well, the government clearly has its mind made, saying that there's no room available as far as online real money gaming is concerned. The bill's been tabled in the Parliament. What highly placed sources within the government tell us is that there's unanimous support across party lines, going on to say that this is an issue that's affecting the society, saying that 45 crore people are affected in the form of losses. The losses estimates say, as per the government, these losses stack up to over 20,000 crore rupees on an annual basis, and that's the reason why there was a need felt for the government to intervene. As a part of this intervention, this bill very clearly spells out complete prohibition, complete curtains on any form of online real money gaming. In fact, real money gaming has been defined in the bill as not making any distinction between what is skill, what is chance. All forms of real money gaming are prohibited. Endorsing, advertising such platforms is also prohibited. Banks, financial institutions are prohibited from allowing any transfer of funds from the user to such platforms. What the government says is that through this bill, they want to recognize that the users are in fact victims, and therefore there is no legal penalty for them, but there are definitely teeth. Those found violating these rules, these provisions of the bill, could face jail terms as high as 3 years. There could be penalties as high as 1 crore rupees. And not just that, even for companies that are found violating the provisions of this bill, they could potentially face legal action. The bill clearly says that people in decision-making positions in those organizations, in those companies, could also be liable to face legal consequences.
Entire middle-class families, they are losing their entire life savings in online money games. Extreme cases are there where children commit suicides, where people commit suicide because they are not able to face the losses which happen because of online money games. It was very important to save the society from the harmful impacts, and I do understand the overall picture, and within that picture our endeavor will be to make sure that the game makers, the people who write games, the creators of games, they keep getting the promotion within the two segments which are very important for the society.
And moving on Investor Eye today, Artha India Ventures has closed its Artha Select Fund at 432 crore rupees, overshooting its target by 131% and taking the firm's total assets under management past 1,200 crore rupees. Marketed as a winners-only vehicle, ASF will double down on the top 15% of Artha's 135-plus portfolio companies, writing Series B and C checks of around 20 crore rupees each. With 80% of capital anchored by Indian family offices and the rest from global investors, ASF aims to plug India's missing middle funding gap, ensuring proven startups have the capital and backing to scale globally. Joining me now to discuss the firm's plans is Anirudh Damani, MD of Artha Group. Anirudh, thank you so much for taking time out and being here with us on Startup Street. You know, as I just said, you closed Artha Select Fund at 432 crore rupees, oversubscribed by 131%. What does this strong sort of response from investors signal about confidence, not only in your model, but about also about like India's, you know, startup ecosystem?
First of all, thank you, Arundhati. Thank you, Ritu, for the wishes. I know it's been a very interesting journey, quite honestly. What we've noticed is that early stage funds usually take that, about 3 years to graduate a company from seed to Series A. And family offices that are for the first time entering the AIF market or to invest in startups, they're preferring to see companies that have already matured or gone through that valley of death, which is what really led to the success of this fund. Is that a lot of families that wanted to say, hey, we don't want to really invest very, very early, but we want to invest in companies that have passed the muster, they've gone through the valley of death, and we want to invest in companies that are breaking out. They're just got their Series A, they're doing their Series B, Series C. That's where our fund comes in, and that's why the success of the fund. I think there is a lot of enthusiasm within family offices to participate in the Indian startup ecosystem. They may not want to take all the risk of seed, so they've decided to back something that is a winners only fund.
Right, absolutely. It is focused on the top 15% of your portfolio, right? So how do you sort of identify these winners, and what sectors or themes are looking most exciting for you right now?
So we have a proprietary framework we call Scout, which is, we look for companies that are solving real human problems. There are category winning companies with optimized unit economics, with companies that are which have an unmatched right to win, and companies that are tech enabled but not tech first. And then all of these frameworks, along with the exponential scale, that's the way we look at companies. And so that framework usually defines within the first 3 years whether the company is actually going to be something that will give us alpha returns. And the way where this fund comes in is after 3 years of watching those companies, within the venture fund, where we've done the seed round, the pre-series A and the series A, we then look at those companies breaking out, and that's where Select comes in. So it's a journey that we have already seen with the founder, with the company, for at least anywhere between 24 to 36 months before the winners fund comes in. That's where this money makes a lot more sense for the company. It's no longer trying to get the company out of the valley of death. We're actually looking at expand. The only focus for this capital is growth. Now, to your second question, what are we looking at? First of all, we don't believe in sectors. We're a thematic investor. Thematically, right now, we are very excited about the Indian deep tech ecosystem. Obviously, our first investment from Select was in Agnikul, and we continue to back that company. We've done investments in space tech. We're looking at investments in semiconductors. I think almost 30% to 40% of our current strategy is to invest in those kind of deep tech sectors. And then we're looking at the affluent Indian consumer and fintech infrastructure, as well as applied AI as the remaining 3 themes we're investing in.
So a few themes there that you're betting big on, but if we can see your exit strategy, right? You've had about 33 successful exits already, and you've sort of built a reputation for disciplined investing. What kind of learnings from those exits are shaping ASF's strategy today?
So I think it's important to have very strong alignment, right, with the founder, right? And not every company, Arundhati, is supposed to scale. Not every company is supposed to be venture fundable. In fact, out of 34 exits, 9 of our exits were buybacks, where the founder bought us back because the company became profitable enough for them, but they realized that scale could actually be the problem here, right? Not every business is supposed to scale. And I think we discover that in the first 3 years because of this Scout framework, that if the company can achieve Scout, but not the exponential scale, it's still a great business. Just because it cannot take venture funding doesn't change the quality of a business. The only thing that is changing is if you can't have exponential scale, then venture capital is a very expensive form of capital to rely on. And what we discover in that first 3 years is whether we're going to hold on to that company throughout that 10-year journey till the exit, series D, E, F, or IPO, as has become popular right now, or is it the time to exit before Series A or at Series A, while the company is still able to do well, but does not need to scale because maybe it cannot handle scale, or maybe the market is not big enough for it to scale, and which is why ASF then becomes like this very clear sieve, if you will, a very clear indicator from our side that we believe the company has the ability to scale, very fast and into a very big market.
Absolutely. And, if you could quickly tell us, your AUM has now crossed 1,200 crore rupees, right? And you have a target of 10,000 crore rupees by 2032. What does the next phase of growth look like for Artha, both in India and globally?
So we're looking at setting up our entities in Gift City. So we're looking at Africa as being a very big market. I think India is about 15 years ahead of where Africa is at the moment. So I think Africa has a lot of potential. So we're definitely looking at Africa. We're also looking at setting up a few more funds, possibly in the micro buyout space. We'll probably at some point come up with a second seed fund now that our first seed fund is finished investing. So we've got a few ideas up our sleeve. I'm sure I'll be back to talk to you about that in detail.
All right, looking forward to that. All right, Anirudh, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Thank you so much.
Well, we continue the conversation around venture capital funds, and we have Boundless Ventures, which is an early stage venture capital firm that was founded by former K Capital partner Natasha Malpani, and it has announced the launch of a 200 crore rupee fund that is aimed at backing AI startups that are emerging from India. It has already made about 6 investments, including in Pearside, Superhealth, Knot, and others. And the fund will now primarily focus on pre-seed and seed stage investments in companies building AI stacks across consumer, infra, Asian tooling, and vertical applications in healthcare and logistics, alongside made in India hardware and deep tech. For more on the company's investment thesis and strategy, joining me now is its founder, Natasha Malpani. Natasha, thanks very much for your time here on CNBC-TV18. You know, Boundless is entering a venture market that is already quite saturated with AI-focused funds, whether, you know, even general funds are repositioning themselves as being AI forwards. So what is the distinctive edge that Boundless VC brings, and what is your investment thesis here?
Got it. Thank you so much for having me. I actually think there's not that many funds, especially at early stage, that are entirely specializing on AI right now, right? So that is one of our differentiators, that we are an AI-first pre-seed seed fund. And we have some very deep thinking in terms of the different markets we want to back in consumer, vertical AI, AI infra, deep tech. But of course, you know, given that we are early stage, we will be founder first and market second. But we think that, you know, we're literally at day -1 when it comes to capturing the AI wave. So we are looking at this, you know, a very exciting journey of backing some real breakout companies from India, either for India or for the world, over the next decade.
Okay, you know, Natasha, 200 crores is meaningful, but not really massive by global standards. I wanted to ask how you plan to compete with heavyweight AI investors that can write bigger follow-on checks, especially if the founders need, you know, a capital-intensive runway.
Right. So we have been very intentional in the choice of the fund and the check size. We are very clear that we want to do 200 to 400K as the initial check with room to follow on. And the point is that we come in early, right? We are willing to take that sort of underwriting risk and back teams in markets that might not be obvious from the outset. We want to back that sort of category defining company. And I think you can see that in our portfolio, you know, whether it's Pearside, which is real-time ocean intelligence, or Armatrix, automated snake-like robotic arms, or, you know, even Superhealth, rethinking healthcare from an AI perspective. We want to come in early, and then obviously we plan to be very collaborative in partnering with larger funds to help take these companies to the next stage.
Well, let's talk about some of these companies that you mentioned, because the fund has already invested in 6 of them. What patterns of founder traits are emerging that convinced you that they can really build defensible companies in this AI space, which is quite crowded again?
Yes. And as you'll see, right, our first 6 investments already are extremely differentiated. 2 are in deep tech, you know, a couple are in consumer, 1 is in AI infra, 1 is in vertical AI. Basically, what we're looking for, of course, will differ by sector, but we are looking for founders who have that ambition, vision of actually reshaping a market, who are thinking from first principles, you know, who have that both ambition and then that relentlessness to believe that they can shape the world around them. We are also, interestingly, looking for founders who obviously have a science or technology background, because this is a deeply technical field, and, you know, the world of AI is changing so quickly that you have to be updated constantly to keep up with the waves that are happening across the world. But we are also looking for founders who actually bring a storytelling and design edge, which we think is differentiated, because, you know, I think in today's market, you need a certain level of velocity and distribution, especially if you're building in consumer AI or vertical AI, to be able to stand out. And actually, even if you're building an AI infra or hard tech, you have to be able to tell that story to be able to, you know, convince your investors to be able to take that very long-term bet on you. So we're looking for that mix of science and storytelling in our funders. And actually, otherwise...
Well, that's a long list you've got there, Natasha. Yeah. You know, that's a long checklist you've got there for founders. Natasha, I wanted to quickly ask, beyond these 6 companies, what's in the pipeline? Have you already identified some startups you want to invest in? And how many in total will you be giving this 200 to 400 crore rupee check size to?
Yeah, so we'll be investing in 20 to 30 companies. Honestly, our pipeline is massive. So I think the question is not pipeline. I think the founders themselves, have recognized that this is the start of a wave. So there's a lot of extremely talented people who are building, right? And here, I think in AI, it's not so much your college degree, it's what can you actually build in consumer. It's, what insight you actually have of consumer behavior changing. Whether it's vertical AI or AI infra, it's, what have you actually built in terms of product? You need to move beyond demo to deployment. So we are seeing a very, very exciting pipeline across the board. And even in hardware, deep tech, I have to say, I'm meeting some fascinating founders. Of course, some very experienced founders, in space tech, people who've worked at ISRO for 10 years. But then also, people who are building autonomous cargo airplanes, or people who are trying to rethink DNA as storage, who sometimes themselves are college dropouts. So I think it's very interesting in terms of the archetype of founder also changing in this AI wave, right? Because age is not a bar.
Sure. Natasha, quickly, you sort of laid out the criteria you're looking at from the founders. What about the investors that have given you money for this fund? What sort of returns could you promise them, from the kind of companies you're looking at and the kind of investments you're making?
Yeah, I think, we're an early stage fund. So we will be promising the sort of returns that a pre-seed seed fund would promise at this stage. But obviously the point is to actually try to be in some of these exponential companies, right, that can return the fund multiple times over.
Yeah. Yeah, well, we'll wait to see what you do there, Natasha. Thanks very much for your time. It's been a pleasure speaking with you.
Thank you. Thank you so much.
On that note, we're going to slip into a short break, but up next, India's gardening market is sprouting fast and Ugao has already hit 100 crore rupees in annual recurring revenue. A special report on their growth blueprint and more coming up after this break.
Welcome back. You're still with us on Startup Street. India's gardening market is sprouting fast and Ugao has already hit 100 crore rupees in ARR. With that, the company also announced its newest brand ambassador, actor Jackie Shroff. CNBC-TV18's Rachna Dhanrajani caught up with founder Siddhant Bhalinge to understand the growth challenges and what's next for the firm. Take a look.
Balconies are turning into mini forests and desks into leafy retreats. Riding this green wave in India is Ugao, a startup that's growing its roots in the urban gardening market with a business that has reached 100 crore rupees in ARR. But as demand blossoms, competition is coming on strong and there are other problems looming large.
Founded in 2015 by Siddhant Bhalinge, Ugao blends 3 generations of agricultural heritage with modern horticultural science. Over 1 million orders shipped in 3 years, selling 2.5 lakh plants every month to more than 3 million customers. A 47 crore rupees Series A last year is now funding retail expansion, production capacity and tech upgrades. Unlike aggregators, Ugao owns its 25-acre farm near Pune, giving it control over quality and pricing, patented packaging, educational content and omni-channel reach. From its app to Blinkit and 10 offline experience stores have helped the company achieve a 36% monthly repeat purchase rate.
But the $500 million Indian gardening market is now attracting new entrants. From quick commerce plus to local nurseries selling online. The space is getting intense, with logistics prices rising, along with maintaining an inventory that's live and perishable. Ugao will also have to defend its margins while expanding to 80 stores by 2030. So how will Ugao do it? How will Ugao be able to defend its margins while maintaining plant quality at scale? Thank you so much, Siddhant, for joining us on CNBC-TV18. I'd like to first start by asking you, you've hit an ARR of 100 crore rupees. What does profitability look like? How much of it is bottom line? How much of it is top line?
So last year we reached about 100 crores and this year we are going to about 140 crores in ARR. We have been break even last year and this year we plan to achieve at least 3% profitability right now. And bottom line, we're looking at around 2 to 3 crores in FY26.
But I also want to understand that managing live inventory can be tricky. So how is it that you differentiate yourself with your competitors, especially now that the scene has so many new entrants? How do you manage inventory while also defending your margins?
So there's a big difference between Ugao and its competitors. We are the only ones who actually grow our own plants. We have a 25-acre nursery and we have very rigorous systems and processes set already. So we are able to manage inventory and also manage the entire supply chain to all our regional hubs as well as more than 20 cities in the country right now very effectively.
So what's your wastage rate like?
Our wastage rate is less than 1%. The good thing about plants is that, you know, if you're not able to sell a plant in a 4-inch pot, we have to transfer it to a bigger pot. So the price of the plant appreciates with time. So our inventory value goes up rather than it becoming a wastage for us.
But also, how do you plan out different geographies? Because you are based out of Pune, the inventory is coming from Pune, but you're also supplying everywhere else. So how do you manage the supply chain?
So the idea is that we produce all our plants, almost 3 lakh plants a month in Pune. We have regional hubs in Delhi, Bangalore, Hyderabad, Kolkata, Mumbai, where we send the plants. We acclimatize the plants for about 30 days over there and then sell it to the consumer. So the plant is quite sturdy, is acclimatized to the weather conditions over there and does really well, does not die soon and at least lasts for, you know, about 6 months.
Right. So 80 offline stores by 2030, that's the outlook that you've shared with us.
Planning
before.
for 100, but I think we'll be there at 80.
But at what point does it break even for each store, and does this expansion mean diluted margins on D2C?
So right now the break-even point comes at about 15 to 18 months, depends on the store size as well. Smaller stores are often around, 14, 15 months.
Let's speak about this one, where this has to be the most prime location store. We're in Linking Road in Bandra. Yeah. What's the break-even point for this? What would be, if you could give the economics of this store?
So right now this is about 800 square feet. This is our smallest store in India. We broke even on this within 12 months. Right now it's at an EBITDA of 20%. And the reason for that again is that we control the, we have backward integration. Most of the products here are produced by us, so our margins are very healthy. And the product quality is way better than what is available around.
Ugao's bet is that urban India's love affair with greenery will outlast the pandemic and become a lifestyle staple. But in a market where trends shift quickly and competition is multiplying, whether this growth story stays evergreen or gets cut short will depend on execution, margins and market discipline. In Mumbai, Rachna Dhanrajani.
Okay, and on that note, it's a wrap on this edition of Startup Street. From Arundhati and me, it's a goodbye and thanks for watching. More news and updates will continue on the other side.
Welcome to Standard Chartered presents CNBC-TV18 Leadership Collective, where we bring together the minds rewriting what leadership looks like in a changing India. Thank you for joining us this evening. We open the evening with a keynote from someone who has witnessed India's transformation across finance, education, policy, and private capital. Please welcome TV Mohandas Pai, Chairman 314 Capital, co-founder and Chairman Iron Capital.
The big challenge for India today is to grow the economy from 4 trillion to 10 trillion. Can we do it? The answer is an yes, and let me tell you why. 1991, our GDP in rupees was around 5,32,000 crores. It's grown to 331 lakh crores today in 31st of March 2025. That is 12.2% a year for 34 years in rupee terms. In dollar terms, it grew from $275 billion to $3.94 trillion. That's 8.1% a year in dollar terms, CAGR for 34 years. And from here, to grow to $10 trillion, we need to grow the GDP from around 331 lakh crores to around 9 lakh crores, possibly by 34-35. That's about 11% CAGR in rupee terms. Of course, the big zinger is the rupee dollar rate. The rupee dollar rate, if you assume at 85 and assume it stabilizes at 90, we should be able to do that. Out of 14%, 7% could be the nominal rate, 4% could be the inflation, with the rupee possibly depreciating to 90 and stabilizing to 90. I remember when I joined Infosys in 1994, the rupee was 27 to a dollar, went to 33, now it's come to 85, 86. So even though our GDP has grown, it doesn't reflect in dollar terms, primarily because the rupee depreciation of 3.5–4% a year for the last 34 years. But in rupee terms, it's very clear. And the rupee terms is reflected in the PPP GDP. We are $17.5, $17.6 trillion in PPP. Across all areas of industry, traditional industry, we are number 2 or 3 after China. And we're going to be number 2 after 3 of China, because China today is about $20 trillion nominal. And
instead of having an across-the-board pullback.
Yeah, retail is about a fifth now of total equity options volume. That's the highest in history. To David's point about this being a significant element of the market. Let's get the opening bell in the CNBC Real-Time Exchange. And the big board, Big Bear AI, provider of intelligence for supply chains, logistics, and cybersecurity at the NASDAQ. Chimera Therapeutics, focused on the treatment of immunological
Speaking of
disease.
retail names that got caught up in the frenzy, Big Bear AI. This has been a company that's been public for a while. It's got AI in the name, and it's been one of the most heavily traded stocks every single day for months.
So people are assembling theories of why we're seeing this rotation. They're throwing in CoreWeave's earnings. And we got some filings about share sales, Cisco's guidance, AMAT's guidance, and then the Palantir and the Meta things that you already mentioned.
All of it, I think, just a general sense that GPT-5 has been underwhelming. I think you're starting to see people get a little bit nervous about just the GDP intensity of data center capex.
Oh my gosh.
And this idea that, look, we're all in on this one trade. I also was looking at the flows into the AI-specific ETFs. Pretty much went vertical in the last several weeks. And so, this could just be a cooling off moment, another reset. We've had these before. We got nervous about how much Google was going to spend at one point. We've been nervous a couple of times about Meta. Obviously, Supermicro and NVIDIA, in fact, over time.
Well, NVIDIA, I mean, next week, not that it would be unimportant in any market, but certainly will be a focus as it comes towards the last week of August as well.
There's no doubt it's important.
It's going to be very important.
And I think it's maybe going to allow us.
Welcome to Standard Chartered presents CNBC-TV18 Leadership Collective, where we bring together the minds rewriting what leadership looks like in a changing India. Thank you for joining us this evening. We open the evening with a keynote from someone who has witnessed India's transformation across finance, education, policy, and private capital. Please welcome TV Mohandas Pai, Chairman 314 Capital, co-founder and Chairman Iron Capital.
The big challenge for India today is to grow the economy from 4 trillion to 10 trillion. Can we do it? The answer is an yes, and let me tell you why. 1991, our GDP in rupees was around 5,32,000 crores. It's grown to 331 lakh crores today in 31st of March 2025. That is 12.2% a year for 34 years in rupee terms. In dollar terms, it grew from $275 billion to $3.94 trillion. That's 8.1% a year in dollar terms, CAGR for 34 years. And from here, to grow to $10 trillion, we need to grow the GDP from around 331 lakh crores to around 9 lakh crores, possibly by 34-35. That's about 11% CAGR in rupee terms. Of course, the big zinger is the rupee dollar rate. The rupee dollar rate, if you assume at 85 and assume it stabilizes at 90, we should be able to do that. Out of 14%, 7% could be the nominal rate, 4% could be the inflation, with the rupee possibly depreciating to 90 and stabilizing to 90. I remember when I joined Infosys in 1994, the rupee was 27 to a dollar, went to 33, now it's come to 85, 86. So even though our GDP has grown, it doesn't reflect in dollar terms, primarily because the rupee depreciation of 3.5–4% a year for the last 34 years. But in rupee terms, it's very clear. And the rupee terms is reflected in the PPP GDP. We are $17.5, $17.6 trillion in PPP. Across all areas of industry, traditional industry, we are number 2 or 3 after China, and we're going to be number 2 after 3 of China, because China today is about $20 trillion nominal and about $36 trillion in PPP. So can we be a China? No. There's room for only one China in the world, which is 30% of the world's manufacturing capacity, the largest exporter, possibly the largest importer, the largest holder of foreign currency reserves. But we can grow the economy in our own way, because we have to grow at 11% and we have to make sure it reflects. So I want to end by saying we are on a great wicket. We are going to build this country to 10 trillion with the 85–90% probability by 2035. We are investing adequately. We are midst of the digital revolution. We have young entrepreneurs coming up. Country is becoming efficient, and entrepreneurship is going up, and corporate profitability is at an all-time high, and that's going to continue. We have a great future. Go for it, and we'll all do well. Thank you very much.
At a time when speed, trust, and integration define the future of finance, our next conversation brings us to a space where institutional depth meets the startup drive to build fast and at scale. To take off from where we are today in Bengaluru, the startup ecosystem, the startup ambition, bank financing has not been part of the picture, part of the story so far. Do you see a greater link now between banks as well as the startup ecosystem?
So banks have been closely associated with the startup ecosystem for a very long time. If I can say, in the first phase, providing them the banking rails, providing some of the tech startups the banking rails was the first phase that we saw. During that phase, we also learned about how this ecosystem is growing and what the startups require. Each one had a slightly different requirement. So for example, a very fast growing tech startup would require a B2B platform, or would require someone who can do the reconciliation for them. So that's where I think the bank stepped in, and the bank could do a good job of that. In the next phase, there was a mismatch between collections and payments, and that's where probably working capital, etc., came in. As I think these startups have matured, there's also been acquisition finance, there's also been long-term finance, and selectively some of this has also taken off. So setting this context, if I look at our own journey in the bank and take an example, like I told you before we had a chat that, I love giving examples. So if you look at how a fintech player was eventually scaling up and the requirements that they had. So it was a requirement for very fast payments to happen, setting out the payment rails. In one of the cases, they required a sponsor to be part of the Bharat Bill Pay system, and that's where the bank could add value. In every phase, I think there is a role that banks can play with this ecosystem.
You laid out very well the phases that we've seen so far. But as we step into the next phase, as we look at scale, as we look at the possibility of many of these entrepreneurs also looking at global markets, what specifically do you believe roles the role that a bank like yours can play to fuel that ambition, fuel that fire?
So as the ecosystem grows and as the startups achieve a certain scale, they want to acquire other companies. So you need an advisor to help them firstly identify that target, then to also make sure that the financing is done in the right way. As they scale up, and the ambition is to go to the capital markets, as you've seen so many
Yes.
of our colleagues here doing that. You need pre-IPO finance. You need to bring in probably private investors into the mix. You need some kind of bridge finance at times. A lot of startups have gone and accessed international markets, so they want to grow their business overseas, and they also want to get funding from offshore. I think that's where the super connector banks that have offshore operations have a network in place. Those are the ones that can act as super connectors and make sure that these startups understand the new ecosystem that they are going into, which could have regulations, it could have market nuances, and all of that can then be brought in a sensible way to the core of the business.
You know, in your conversations that you're having with startup founders today, what do you believe are the key challenges that they continue to contend with, that they continue to cope with?
So the good part is startups are now coming from tier 2, tier 3 cities as well. So this is a more inclusive entrepreneurship story that we are seeing. During these phases where they are able to test their hypothesis and grow. So I talked about $5.7 billion of funding coming in.
Yeah.
2 billion of that has come in the growth phase. 3 billion has come in the late phase. It's the startup phase, the actual when rubber hits the ground. In that seed funding phase, we've seen a number of transactions of smaller value, and that's where I think a little more work can be done. And that's where when helping startups find their feet and moving through the various phases.
Let me end by asking you, what do you take away as inspiration? If you could start up today, what would you want to do?
So a startup is very hard work. It starts with an idea, and you need to believe that idea is a real world requirement. You need to test the hypothesis, then you need to put money behind it, probably your own. So it's very tough for a startup entrepreneur to actually convince a whole lot of people that this is the need of the hour, and this is a better need of the hour than the idea next door, because everyone here has a startup in their head. But what really inspires me is the manner in which, the diligence with which I think a lot of these ideas have actually grown into real world solutions, solving issues that are large and adding value to mature businesses in economies like ours at scale.
PD Singh, what an absolute pleasure. Thank you very, very much for joining us here at the Bengaluru edition of the Leadership Collective. Appreciate your time and look forward to having more conversations with you. Moving on to our next conversation, India's digital public infrastructure is one of its strongest global narratives today, but it's what happens between platforms and people that sets a benchmark. Dr. Shalini, you've been part of the state's journey for over decades now. Tell us, what were some of the early bets that Karnataka made on infrastructure, on policy, and on people that laid the foundation of the innovation hub that we see today?
It's been about 36 years that I have been in Karnataka. And the very culture of the administration of Karnataka, I think, is the core factor for encouraging entrepreneurship in general, and startups and IT and deep tech and global tech and all kinds of technology-driven enterprises in particular. So the officers, right from the time I have been introduced to this cadre, are very, very particular about citizen-centric governance, the accountability, the transparency, and all that is being fueled by the e-governance initiatives of our state. So we are always pioneers in connecting to the people and to the stakeholders. And that projects have been becoming national projects and sometimes even international replicas. So I'm really proud to be part of the team.
When you look back, tell us what has been the toughest part of putting systems in place that serve people and not just policy. How have you been able to do that?
mindset change was the biggest
Well,
challenge.
that's the most, yes.
Was the biggest challenge, but also was the most important and the most benefiting. The biggest challenge for us was that how do you make our government employees from top to bottom sensitized about the fact that delay is deadly?
Yes, delay is deadly.
So, as you know, the caption goes that we deliver in time, and we are proud of that fact that we deliver in time. And so, as they say, justice delayed is justice denied. So, if service is delayed, it is service denied.
Absolutely.
And what's the point in our being called the administrative service if you're not administering it in time? So there was a sudden change of mindset in the sense that, yes, we have to bring in a positive image of government as a whole.
Before I wrap up our conversation, you've worked deeply across skilling, entrepreneurship, and women innovation especially. What changes on ground make you feel hopeful, and where do you think we need to push boundaries harder, especially to ensure that the next wave of innovation comes from each district and demographic?
Ultimately, the grassroots. So our grassroots will be the primary education, right? And I'm so happy to say that Karnataka has always been number one in contributing innovative ideas from the schools of Karnataka. Many of them are government schools, and it is in the annual competition that the Department of Science and Technology holds. 40,000, more than 40,000 innovative ideas are coming from our children from the government schools, rural areas, and so on.
Absolutely. And on that futuristic, optimistic note, I would like to wrap up our conversation. Many thanks, ma'am, for joining us today this evening. It was an absolute pleasure speaking with you. Ladies and gentlemen, up next is a conversation that rewrites the rule of what scale can look like. I would request Shireen to kindly come back on stage and take this conversation forward. Nitin, you're always a little bit circumspect on what the case for India is, what the hypothesis for India is. So let me start by asking you, as you look at where we are today relative to what's happening in the world, what is the bull case for India?
In essence, our GDP is growing at the pace. And it's showing up in different places. And whereas, of course, the tariffs, etc., are concerned for now, but I guess it's after 3 months we'll just look back behind this, So.
Yeah, I would imagine that the tariffs are not going to have a long-lasting impact. As you look at the opportunities that Zerodha, for instance, is looking at this point in time, break that up for me. What do you foresee as the actual consumption that's likely to take place? How many people do you believe are going to be opening more demat accounts, getting onto Zerodha? I mean, what are you building in as estimates for yourself?
We claim that there are 20 crore demat account holders, but I'd say there are 4 to 5 crore unique Indians with any kind of a stock holding or a mutual fund holding. And we believe that number can be 10 crores over the next 5 years. And that's going to be like a significant growth for the markets. In terms of the stocks itself, there's enough and more supply coming in. I mean, like Swiggy.
Yes, like Swiggy.
So.
But not Zerodha.
I mean, for now, no, but yeah.
That's a change. For now, no. For now, no. Yeah, otherwise it's always been no and never going public.
Yeah. We've invested like 1,400 crores. Over the last 1-2 years and last 3-4 years, and the idea is that we are bullish and we are as bullish as it can be, So
funny, let me come to you now. I mean, your story is very different from the Zerodha story, the Swiggy story. 11 years, as I pointed out.
As you see India grow, and with the many bets that Swiggy is taking between Instamart and, of course, food delivery and the live space, live economy business as well, what do you believe this could look like over the next few years?
Yeah, I think we are fundamentally big, massive believers in the Indian macro story. I mean, I'm sure there are going to be ebbs and flows. There are going to be good years and bad years and tariffs and whatnot. But we do believe in the longer term, it is the story to bet on. We had a chance a few years ago, or I don't know if a chance, but we thought a few years ago if we should actually diversify into international markets, probably the best decision we made, focusing on India, etc. And see, people say we are, I don't know, 10 years behind China, 15 years behind China, 20 years behind China. But I mean, it doesn't matter. If you're going to willing to play the long term, we do think that there is enough amount of compounding that will play out. Even a 7% compounding over whatever 15 years is going to be massive in many ways, right? While today we kind of actually cater to maybe, I don't know, 20 million people, 25 million people on a monthly basis, our long-term ambition has been saying, can we imagine a day where 100 million people transact with us?
When do you believe you're going to go from 20 to 25 to 100 million?
Yeah, see, there's a famous quote, right? You always overestimate the short term and underestimate the long term. So I'm very skeptical of coming and saying, is it in 5 years, 10 years? I don't think it's in the next 5 years. I think it's still probably 10 years away. But then a 15% compounding over 5 years is like more than doubling the business. Our ambition is just to be the operating system that powers people's lives and makes it a lot more seamless.
Nitin Kamath and Pani, thank you so much for joining us here. We now close the evening with a discussion about the quiet back ends of big ambition, the infrastructure of trust, reach, and repeatability. We have an exceptional set of builders and bankers with us. So let's dive in how you guys are building, scaling, and of course, staying reliable in a world where change is the only constant. Abhay, let me start with you first.
We didn't have a choice. I remember going to so many VCs at that time and everybody said कि यार, and it was almost like, जैसे आप शॉल की दुकान पे जाते हो कि यार चाइना में क्या है दिखाओ, तभी मैच होगा तो मैच द फॉलोइंग करेंगे, अमेरिका में है कुछ तो मैच द फॉलोइंग करेंगे. Nobody understood the India problem, right? And nobody
there was no playbook, yeah.
है ही नहीं, कुछ भी नहीं है, right? So that was the issue, right? And we figured, very early on that consistency and standardization will allow us to win. And it's in the 19-20 ka farak that, the difference between a good and a great company will get, delivered. And just to solve for that 19-20 ka farak, we had to raise, copious amounts of capital upfront to invest in capex, infrastructure, so on and so forth. And we did the Samaj Seva and, diluted ourselves fully, but capital in the hindsight allowed us to do a lot of stuff that had to be done upfront before doing many things, and that was imperative.
Raghuram, load share. What is the lesson that you've learned in that geography, doing business in that geography, that has taught you about reach and resilience?
The reason we started in Northeast is not for any other reason. It's a cold-blooded decision to start where our clients have the biggest problems, right? So we said we have relevance where we go and solve the client's biggest problems. And in my experience, I was at Myntra at that time, and I used to find that Northeast logistics was fully broken. I said, if I have to get relevance with customers, I have to go and fix this problem. So that was the reason with which we went in. And the learning has been that, what Northeast taught us is actually a lot of self-confidence, right? I think it gave us belief that no matter what the geography, no matter what the problem, I think the confidence got built up that we can actually solve it with the right tools and build it in a way that is kind of relevant and will stay relevant, right? So that way, I think it's been a good lesson. Northeast is still an important geography for us.
Yes.
But now we've diversified beyond, and we are now solving like really metro city problems.
Yes.
So yeah, that's been the learning for us.
That's an interesting take that you just gave us. Movin, coming to you, your journey has been interesting. It started with a tweet that got you your first customer, and now you're building Skydo into what you call a cross-border bank. Tell us, how did this leap of imagination first happen?
One of the main reasons why we chose this was that my co-founder had actually been running a business, his family business, and he experienced this himself. While on the other side, I had worked at a payments company and experienced how to build the nuts and bolts of payments and how to work with the regulation and how to work with customer needs on payments in India. So I think we kind of brought all these three together and realized that this is a problem we could solve. Not many had tried solving it, but we just had this belief in the long-term solvability of this problem and also the long-term size and importance of the problem. And then we started going out to some of our friends and some entrepreneurs who were actually running export businesses and started asking them how their business runs and just started learning from them. I think we spent about 6 months during this period before we resigned from our jobs and called it a startup.
Sanjay, let me come to you now. I understand that you've been working with startups and the new age banking segment for many, many years now. Tell us in your experience how it's been working with this segment. What are the kind of shifts that you've seen in the ecosystem?
In Standard Chartered's interactions with startups, has, if I were to characterize that, probably two words stand out: exciting and enriching. And let me explain that. So exciting from a perspective of just the amount of innovation being done by this segment. It's driving change. So that's the exciting part, which is all visible to all of us. But the enriching part is equally important from a banker's perspective. And what happens is, as they drive innovation, they're pushing us to push the boundaries to drive innovation ourselves, to meet their needs. So again, examples, payment infrastructure, for example, the number of transactions that we're able to process, given a lot of them have small tickets, high volume business, we have to do more TPSs, right? So that, or payment as a service, PaaS as we call it, right? Bespoke solutions, or infrastructure, or supply chain financing, vendor financing, or even more structured financing. So all in all, we learn as they grow, and we grow as they learn. So, yeah.
On that note, it's time for me to wrap up our discussion. Thank you so much, panelists, for your insights, and it was an absolute pleasure speaking with all of you. Thank you so much.
Thank you.
Welcome to Standard Chartered presents CNBC-TV18 Leadership Collective, where we bring together the minds rewriting what leadership looks like in a changing India. Thank you for joining us this evening. We open the evening with a keynote from someone who has witnessed India's transformation across finance, education, policy, and private capital. Please welcome TV Mohandas Pai, Chairman 314 Capital, co-founder and Chairman Aaron Capital.
The big challenge for India today is to grow the economy from 4 trillion to 10 trillion. Can we do it? The answer is an yes, and let me tell you why. 1991, our GDP in rupees was around 5,32,000 crores. It's grown to 331 lakh crores today in 31st of March 2025. That is 12.2% a year for 34 years in rupee terms. In dollar terms, it grew from $275 billion to $3.94 trillion. That's 8.1% a year in dollar terms, CAGR for 34 years. And from here, to grow to $10 trillion, we need to grow the GDP from around 331 lakh crores to around 9 lakh crores, possibly by 34-35. That's about 11% CAGR in rupee terms. Of course, the big zinger is the rupee dollar rate. The rupee dollar rate, if you assume at 85 and assume it stabilizes at 90, we should be able to do that. Out of 14%, 7% could be the nominal rate, 4% could be the inflation, with the rupee possibly depreciating to 90 and stabilizing to 90. I remember when I joined Infosys in 1994, the rupee was 27 to a dollar, went to 33, now it's come to 85, 86. So even though our GDP has grown, it doesn't reflect in dollar terms, primarily because the rupee depreciation of 3.5–4% a year for the last 34 years. But in rupee terms, it's very clear. And the rupee terms is reflected in the PPP GDP. We are $17.5, $17.6 trillion in PPP. Across all areas of industry, traditional industry, we are number 2 or 3 after China. And we're going to be number 2 after 3 of China, because China today is about $20 trillion nominal and about 36.
Hello, welcome to News Center. I'm Parikshit Luthra. The union government has tabled a bill that proposes a sweeping ban on online money games. IT Minister Ashwini Vaishnav introduced the bill in the parliament today. The bill highlights that the proliferation of online money games have had a harmful effect on families, society and the economy, and calls for prohibition regardless of whether the games are based on skill, chance or a mix of both. The bill also proposes to constitute an authority for regulatory oversight. That's not all. The bill also provides an insulation to the government or the authority for any actions taken by them in good faith, but does not clarify anything further. The move comes as a body blow to the gaming industry, which has paid taxes to the tune of 22,000 crores to the government last year. The IT secretary, while defending the bill, told us that the political leadership was clear about the need to act against online money games.
The number of jobs created are in their thousands, and the number of livelihoods affected are in their hundreds of millions. The industry itself claims that 450 million people play these games, many of whom are distressed. And I think parliamentarians, ministers and others who understand the distress of their constituents are very forthright in saying that this is a serious issue. So we have to balance. We have to balance between what is in the overall social good, and many of these people have talent and will find jobs in the legitimate gaming sector, which is being encouraged.
All right, I'm now joined by Aruna Sharma, former Secretary, Ministry of Electronics and IT, Robbie John, who is the CEO of Super Gaming, and Vidushpat Singhania, Managing Partner at Creda Legal, also with us. Thank you very much for joining us. Ms. Sharma, if I can begin with you, do you think this is the right step forward that the government is taking? Just a few years ago, we wanted to encourage the e-sports or the e-gaming ecosystem in the country. We wanted our citizens, our youth to design games for the country, for the world as well. But will this now be counterproductive to that larger exercise?
It came as a shock to the entire industry, and I can appreciate that. Because if you say so, the same mighty ministry came up with the rules which defined gaming. And same ministry flagged it separately, what is game of chance and what is game of skill, so that the real money games and games of skill are differentiated from the game of chance. Now, when that kind of a differentiation was being talked about, they also talked about that the parameters will be worked out, and they encouraged the SROs to come up for absolutely the kind of doubts that were expressed for money laundering or for using it for the money being taken to the wrong calls and those kind of things. So it was very encouraging when the three SROs worked really meticulously to ensure KYC of those who are on board. All payments were made digital, and then they also demonstrated, because in the bill it has been stated that the results or the outcomes can be manipulated. So they demonstrated that this is not possible. The results cannot be manipulated. And it is definitely the skill which decides who the winner is. So that was the kind of track we were going. The first jolt, as everybody is aware, came with the GST with retrospective effect and putting the GST on all the money on the table. So all the industry had to go to the court and get the stay on it, so that immediate injury is not there, and that hearing, unfortunately, is still on. Not only that, an amendment was brought to the GST which enabled to sort of condone the retrospective effect, and it empowered both the center and state government, which nobody did. And to define which money of the GST is to be taxed, which has to be a goods or service. So money on table is neither goods nor service. With this, the state government started coming forward. You have government of Tamil Nadu who came up with a good regulatory system, a regulator, and the doubt which has been expressed in the clip which you have said, which is like a moral policing, that addiction will be there or people are wasting their money. So filters are there where you can put the number of hours you want to do, or you can also put the amount of money you want to play in your 24 hours of the day cycle, and red flags will be raised. And government cannot sort of decide on the behavioral pattern And, it has been mentioned that more than 40 crores of people of the Indian population, so which is nearly 1/3 of the Indian population, is indulging in the gaming. So what it is putting a ban on the real money games. So in the sense, it's a complete washout, not on the gaming industry per se, but the innovation. My worry is the entire innovation part of it, the startup part of it, is going to get hit. So I'm very sure when this bill will be placed in the parliament, there will be many voices who understand that through gaming, they are labeling it as a sin. Gaming is not sin. It can be an educating thing because it also put a spark into your senses of coordinating, deciding, planning how you can go about it, and it can be worked out. So gambling, you have an act where you get, whether it's online or whether it's on the shore, the government of India has come up with the powers which state government used to object that no, we will have a centralized legislation. And now with this kind of a negative bill, I'm sure the states may come forward with a note which they may not agree to what the central government is trying to interpret and put a complete ban on real money games.
Right. All right, let me get in Vidushpat Singhania also. Vidushpat Singhania, do you believe there is going to be a legal challenge to this bill? We're told, we spoke to Jayesh Ranjan, a top-level bureaucrat in the Telangana government, and he said a bill, a case related to online gaming is being heard by the Supreme Court, and the government has, in a way, preempted what the Supreme Court may do. Do you think there could be a legal challenge to this in the days to come?
So let me just clarify one aspect. The Honorable Supreme Court of India was hearing the matter, both regarding GST and the aspect of whether the state governments can legislate on betting and gambling, and whether skill gaming for money would come within the aspect of betting and gambling or not. That hearing concluded about a week back, and the judgment has been reserved on that particular matter. So as we speak, the judgment has been reserved on that. I take leeway from what ma'am has said, Dr. Aruna Sharma has said, that initially the government had thought about regulating this industry, and they had taken a laudable step of saying that we will recognize the self-regulatory bodies, which will then come out with regulations or checks even for manipulative gaming, for cross-border, for KYCs, all the ills that have been highlighted at this point of time. So what the industry expected is further consultations with them to check and prohibit exactly these evils. Therefore, it has come as a shock. A prohibition has come as a shock. What the industry was expecting is a regulation, maybe a very strict regulation in discussion with them, but what the industry was expecting, a regulation. Now, I take the point that the challenge when if the bill becomes an act, then the challenge is going to be on multiple fronts. One, whether the state governments have a right to make the law on betting and gambling, or whether the center has a law. It will further get complicated with the aspect that Sikkim already has a law for online gaming, and they allow for online gaming within the state. Nagaland also has a law for online gaming, and they have been in existence for a while. So whether that will be covered or not, or whether they still have a right to make a law on that or not. The second aspect will then also come in is what happens to horse racing. The horse racing has been traditionally regulated and has been offered for licensed for the past 100 years. So what happens to that? And when that moves online, which is there on horse racing and betting horse racing is also there in kiosks outside the race courses, which are licensed. So whether they are covered within this bill or not, I think that's another significant question. I believe the lotteries are largely out of this bill because Lottery Act and rules are separate and largely not covered within this aspect. But these are really questions that will come up in court, besides the fact of Article 19 challenge, that is the right of person to profession and trade, and whether these restrictions that the seeks to impose are reasonable or not.
All right. Let me also get in Robbie at this point. Robbie John, what do you believe when it comes to e-gaming companies in the country? There is a big worry in the industry that jobs will be hit, investments will be hit, and this will no longer be a sunrise sector. What's going to be the immediate impact on companies like yours?
I want to clarify a couple of things. One is that, from a bill perspective, the bill clarifies two things, which is good games and bad games, or the 1/3 that's kind of clarified as gambling or real money games. That's a separate category of the games that we make. I would like to say that the bill clarifies two things from our perspective, which is really saying that, hey, what is a video game and esports being kind of furthered by the government is really the key part of the bill from our perspective. Now, whether the games kind of are good or bad, that's not my job to kind of decide. But we've definitely seen what we wanted, which is a distinction between video games, which are played for entertainment, and games that are played for a financial motive. I think the bill separates both of these things out. I think that's really a big win from the video game industry, because people often confuse gaming and real money gaming, and that's kind of been something that we've kind of always highlighted. The next part of will jobs be hit and will that be there? I think the government secretary kind of clarified that there is enough scope in our gaming industry for an absorption of these jobs. I do agree with all of that, because India is a very, very large market from a entertainment for video games perspective.
All right. Let me go back to Ms. Aruna Sharma, and we'd just like to tell our viewers that the online gaming bill has been passed by the Lok Sabha. Ashwini Vaishnav, the Minister for Electronics and IT, spoke in the House a short while back. This bill has now been passed. It will go in the Rajya Sabha, and we expect the bill to be passed by Parliament soon. Ms. Sharma, it seems that the government is moving ahead very fast. It's likely to be passed in the Rajya Sabha, so it's not going to be long before this turns into law.
Yes, you are absolutely right. Because of the numbers is getting pushed. But I'm surprised to because what they have called as a sports gaming, does it mean that fantasy sports is becoming a part of it? I doubt, because sports gaming is entirely different sector. So in the sense, all these popular games, which the majority play, which you have labeled it as 1/3 and 2/3, I do not know how this classification is done as to what is sports gaming and what is real money game. Because gambling and real money game, skill game, a category one understands. But esports is entirely a different thing, where the skills is being done and no money is involved into it, and it's a pure sports which is graduating into the e-platform. So now all this gaming is involved, and as Vidushpat very rightly said, horse racing or rummy, which is popular as a club gaming on the tables of the clubs, which became an e-gaming, or you go into the other kind of games which are extremely popular, and definitely they are money games. One, it is going to hit the FDI very, very clearly. It is going to hit because the biggest things are real money games company. It is going to hit them.
Okay.
And it is going to hit their talent, as you yourself in the introduction has said. Yes, they will find their way in involving the new game, but what will be the financing module for that? Because the innovations are important. Right. I'm not so much concerned about the games played. I'm more concerned about the innovations involved. So yes, it will
Most
come
concerned
through
about what
Rajya
happens
Sabha.
to startups and the innovation ecosystem. We've run out of time, but thank you very much to Aruna Sharma, Vidushpat Singhania, Robbie Chauhan for joining us. IT Minister Ashwini Vaishnav, while defending the ban on online money gaming, highlighted its negative effects in the Lok Sabha. Let's listen in.
कई ऐसे परिवार है, कई ऐसे व्यक्ति है जिनको ऑनलाइन मनी गेम्स के कारण एक एडिक्शन हो जाता है, जिंदगी भर की बचत गेम में उड़ा दी जाती है। फ्रॉड और चीटिंग एल्गोरिदम्स ऐसे होते हैं कि पता नहीं चलता कि कौन किसके साथ खेल रहा है, और एल्गोरिदम्स ओपेक एल्गोरिदम्स होते हैं, हार निश्चय हो जाती है। फाइनेंशियल लॉसेस, माननीय अध्यक्ष जी, कई परिवार नष्ट हुए, एक्सट्रीम केसेस हुए, सुसाइड भी हुई।
Time for a short break, but don't go anywhere. We continue our discussion on the government proposing to ban online money games with Jayesh Ranjan, CEO of Industry Investment Cell in the Telangana Chief Minister's Office. Stay tuned. Welcome back. You're watching News Center. The Lok Sabha has passed a bill to ban online money games. The bill is expected to bring sweeping changes to online gaming as it seeks to prohibit all forms of such games. The ban will be regardless of whether the games are based on skill, chance or a mix of both. To take this forward, we're now joined by Jayesh Ranjan, CEO of Industry and Investment Cell in the Telangana Chief Minister's Office, one of the state's top bureaucrats. Mr. Ranjan, thank you very much for joining us. My first question to you, would you agree with the central government that there is a need for a separation between esports and real money gaming and online betting? Is the separation very essential?
So, first of all, I have said so on so many other platforms also that banning is not the solution. In fact, you are in a way throwing the baby out of baby along with the bath water. There are many ways in which you can provide good regulation, robust regulation. And the timing of this decision of the cabinet is also kind of surprising. Because on the one hand, the government of India itself had given draft guidelines, draft rules. In its states were also given lots of autonomy to decide how to regulate what are the games of skill, what are the games of chance. And we also know that there is lots of legal reviews going on. In fact, the Supreme Court itself is now hearing a batch of petitions, whether the government, be it the central government or the state government, do they have the power to ban or regulate or prohibit? And in a way, you have kind of preempted Supreme Court's hearing and judgment also in this matter. So I personally feel that banning is not the solution. And secondly, the timing of this decision, we could have been much more judicious about it.
Right. There are concerns about large-scale job losses. The industry bodies are saying that there is almost a valuation of 2 lakh crore that this sector has. Annual revenue generation is 31,000 crores. You've got 20,000 crores in direct and indirect taxes that are paid annually, and this sector is projected to grow at 20% compounded annual growth rate as well. This is a sunrise sector. Do you think this move will be a death knell for the gaming industry?
See, we have already seen, and there are evidences in many states, including our state of Telangana, that banning also gives rise to a grey market, a black market. There are currently also lots of illegal offshore companies, even domestic platforms, and who are currently also prohibited in many states. There is a ban on online betting, including in Telangana. But we know that they're operating with impunity. They are having their own networks, VPNs, and that also is a big loss to both the country, the state and the center. Plus, it also gives a sense of lawlessness. Like, even if you ban, I can find a way out, I can create something else. And as long as there is an interest of people to participate in these kind of games, of course, I do agree with the reasons given behind banning, that it causes, many of these games actually use bots, so you don't know whether you are playing against a fair rival or it is manipulated. There is underage participation, there is addiction, but there are ways in which these can be overcome. There is technology available today. In the earlier guidelines, which were issued again by the Ministry of INB, there were provisions that you have regulating bodies at the state level who check the veracity of what kind of gaming architecture has been created, and so on and so forth. Now, as you all know, everything has been kind of discarded, and the notion that banning will solve everything, that is getting imposed. As I said, in my opinion, this possibly is not the best or the most optimum solution.
Right. And when it comes to the states implementing this regulation, when it comes to online gaming or betting, especially betting activities, these are a state subject. Will state governments implement this law that is being passed by the center?
See, of course, if this is a national law and the government of India takes a stand that this is a national subject, we have all the right to regulate, and it is given to everyone as a fait accompli. Possibly the headroom with a state to do something beyond that gets restricted. Of course, this is very sudden. This has come as a news to us just yesterday night and today morning. We are still reading. And obviously, there are many steps to go by. What has been decided in the cabinet will be presented before the parliament. In the parliament also, sometimes they refer these kind of bills to a select committee. There will be consultations, discussion. So possibly this is not the final version, but at least we know the intent of Government of India. And I still feel that we can distinguish between games of skill and games of chance. Even if a game of skill involves money, there is a way of preventing the illegalities or misuse which happens. And if you completely ban, as I mentioned, the grey market emerges, which is much more damaging to countries' interest in the long run. It also erodes the finances which justifiably should have gone to the government. So I guess there are multiple steps to still cross through. And at some point in time, if they consult the states or if there is a select committee which hears alternative views also, we will make these opinions and options known to them. And eventually, whatever comes as a national law, after that, I don't think there will be any great opportunity to deviate from it. But if the law incorporates the fact that states also are autonomous, they have a better judgment to understand about what's happening in their state. If they have technology prowess to prevent some of the misuses, then why not give that, delegate that authority to them? If the bill emerges finally in this form, and if the law comes in this form, obviously that will be something which will keep everyone happy.
Right. So when you say an autonomous view, why is this important? Currently, the central government says and authorizes central government officers to seize evidence, carried out raids without warrants, investigate, search, seizure. What do you think is the problem? Why do you think states need their own autonomy to regulate e-gaming and also online betting?
See, the thing is, you mentioned this. So as I said, as a state, we are definitely against online betting. There is no skill involved at all. So we have no issues at all if online betting is banned. But online gaming is very different from online betting. Online gaming, for instance, I mean, again, I don't want to name anyone, but I know of many online platforms where you form your own team. That team plays against another team, or when the actual team is performing on the ground, you compare your results with the performance of those players. And there is lots of skill. You do lots of analysis. You understand which bowler is in form, which batsman is in form. And then it's also very engrossing. I mean, if you're a cricket enthusiast, and obviously people like us, we don't play it in a very active way. We can only engage recreationally. This is a great way to think of how you, in your younger days, when you were captain a team, this is what you will do. That is the strategy that you will follow. All that gets recreated here. And of course, it's not that we are heavy bettors, but if there is some fees to participate in this kind of a game, we'll be happy to do so. So that is one, that it deprives many people of something which otherwise would have been a very great source of recreation and all that. The second is something which you earlier asked. I'm sorry I did not answer you directly, but this point is emerging now, which is job losses. So in Telangana, as you know, animation, gaming, VFX is a very important line of activity. The government has spent lots of efforts to promote this vertical. We are building one of its kind infrastructure of the country, which is called Image Tower. And I can tell you for sure, because I was directly involved in those kind of discussions. Many companies have told that we'll be happy to put our development team, our tech team in your city, because Hyderabad is a great technology hub. And we will do more and more and more, provided the government provides a conducive ecosystem. So there'll be job losses. There'll also be a loss of GST. I'm sure the industry associations might have also raised this issue, because we also as a state get a good amount of GST. That opportunity will be cut. So I do understand the concerns of behind banning. There are issues which are obvious. No one denies that these kind of things are not happening. But there could have been other ways of curbing it. And as I said again and again, banning possibly is not the only solution or the best or the most optimum solution.
Mr. Ranjan, thank you very much for joining us on the program. With that, it's a wrap on this edition of News Center. Thank you for watching. Goodbye.
Hello and welcome to India Business Hour. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Lok Sabha clears a bill proposing to ban the $25 billion online real money gaming industry. The centre claims broad political support, argues for larger social good by curbing addiction and debt spirals. Karnataka and Telangana governments criticise the blanket ban. Chaos in Parliament as Home Minister Amit Shah tables a bill to remove ministers detained on serious charges for more than 30 days. The bill also provides a legal framework to remove Prime Minister and Chief Ministers. It's now referred to a joint parliamentary committee. The Sensex and the Nifty up for the fifth day, the longest winning streak in 2 months. The Nifty reclaims 25,000. The government opposes Vedanta's demerger plan at the Company Law Tribunal, flags inflated revenue and concealed liability. SEBI says Vedanta modifying the demerger plan after getting a no objection certificate is a serious breach of the master circular. The Kremlin plays down talks of an imminent meeting between Putin and Zelensky as the US and EU begin drafting security guarantees. Trump rules out deploying US troops in Ukraine but hints at air support. Kyiv claims 14 people injured in Russian attacks across the Sumy region. India's Foreign Minister Jaishankar arrives in Moscow for bilateral discussions. Russian ambassador to India expects crude oil trade between both nations remain unchanged despite the tariff threats from the US, says there's no alternative to Russian oil as it is offered at a 5% discount on an average. India and China set to resume direct flights and border trade in a bid to reset the bilateral ties. China also promises to lift curbs on export of rare earths. An expert group will be set up to resolve the border standoff, and a working group will be set up to maintain peace at the border. Bihar's Deputy Chief Minister says the group of ministers on insurance will propose to exempt health and life insurance premiums paid by individuals from the GST ambit. Some states defer GST Council to take a final call. The minutes of the monetary policy meeting shows the 6-member committee is divided on growth. External members express apprehension over tariffs and other external uncertainty, but the panel is united in adopting a wait-and-watch stance. Shares of Hindustan Aeronautic rise after Union Cabinet clears a 62,000 crore rupee fighter jet deal. HAL will supply 97 light combat aircraft to replace the MiG-21 fleet, which will be retired next month. Well, let's start with the day's action. The market's closing higher for the fifth straight session, marking the longest gaining streak that we've seen in 2 months. In fact, the Nifty ending above the 25,000 mark. The Sensex up by about 200 points. The Nifty Bank closing in the red. The mid-cap index saw a jump of about 260 points. IT and FMCG stocks saw some fresh buying, while defense and NBFC stocks were under pressure. But the top story that we're tracking this evening, the Lok Sabha has passed a bill that proposes a sweeping ban on online money games. The bill highlights that the proliferation of online money games have had a harmful impact on families, society and the economy. It calls for prohibition regardless of whether the games are based on skill, chance or even a mix of both. The bill also proposes to constitute an authority for regulatory oversight. That's not all. It also provides an insulation to the government or the authority for any actions taken by them in good faith, but it does not clarify further. The move comes as a body blow to the gaming industry, which has paid taxes to the tune of 22,000 crore rupees to the government last year. The Gaming Federation, in a letter to the Home Minister, has urged for a progressive regulation instead. IT Minister Ashwini Vaishnav, who moved the bill, said that it was a necessity for larger social good by curbing addiction and debt spirals. The IT Secretary, while defending the bill, told me that the political leadership was clear about the need to act against online money games. Karnataka and Telangana governments have criticized the blanket ban, comparing it to throwing the baby out with the bathwater. Take a look.
Entire middle-class families, they are losing their entire life savings in online money games. Extreme cases are there where children commit suicides, where people commit suicide because they are not able to face the losses which happen because of online money games. That's the harmful impact which needs to be discouraged in a very significant way. Over the last 3.5 years, we have been very closely engaged with the industry. We have attempted self-regulation, but that has not really worked. There was a GST imposed, that has also not really worked. Still the harmful impacts continue, and it's something which is very significant. MPs who have met me from across the country, across the parties, they've all been asking for significant action to be taken against online money games. Honorable MLAs who meet, and the entire society in a sense has this pain which is reflected in the suicides, pain which is felt in the form of entire life's money going.
So the industry is slightly concerned. They point out that we've seen over $3.5 billion in investments, direct, indirect jobs of over 2 lakh. Is that something that weighed on the mind of the government before, at the time of drafting of this legislation? How do you account for that?
So our government has been very actively promoting digital technologies, development